Okay, Malik. So, good morning, Malik. Hopefully, everybody is doing good. And आशा करता हूँ कि आप अपलोड कर रहे होंगे Malik. So, Malik, what we closed on yesterday was with respect to 700 series ka basically an audit report. Okay, we have completed the audit report. We understood what should be an audit report and how the things of audit report works on. So, in audit report, if you remember, we have closed on total 13 points of audit report, and now we have also discussed how this is also actually matching with an Reliance audit report. So I told you that things almost what you are studying is moti, matlab everything is almost similar with respect to a real life audit report also. Okay, after that, okay, whatever pending of this chapter 7, what we are right now discussing is 700, 701, 705, 706, and then we shift to the general purpose framework to special purpose framework. First of all, we have closed the two questions of chapter 7, 700. First was, what is the content of audit report? That is your 13 point. Even you discussed that if audit report is issued as per law and regulation, what should be done? That has also been discussed yesterday. This need to be taken care of. Now, the next concept it comes. Sir, what if, acha, do you remember the audit report as such, what we discussed yesterday? 13 points. What are the 13 points? Title, addressee, opinion, basis of opinion, going concern, key audit matters. Okay, 4 responsibilities: management responsibilities, auditor responsibilities, okay, location of auditor responsibilities, other reporting responsibilities, legal and regulatory, and signature, place, and date. Now, when we are discussing about this all 13 points, one of the concept was, okay, in basis of opinion, we discussed total 4 points. In basis of opinion, we discussed 4 points. What are the 4 points? First, that we have complied with as standards issued by ICA. Second, we have complied with auditor responsibility. Third, we have complied with ethical requirement. And fourth, we have believed that we obtained sufficient appropriate audit evidence. In first point, we have discussed like that, we have complied with standards of auditing issued by ICA. Now the question is, can I mention like this? We have complied with international standards also. Now ICI is basically our national standards. Okay, so can I say like this also, that we are complying with international standards also? So standard 700 says you can comment on that. No worry, that you can also that you have complied with international standards on auditing also. But there are two conditions to be focused on. First, you need to understand there should be no conflict between the national standards on auditing and international standards on auditing. If there is no conflict, okay, mention that you have complied with the international standards on auditing also. And second, make sure that your audit report is as per national standards on auditing. The audit report should not be as per international standards. If you comply with these two conditions, the things are clear. So what are the two conditions? If I comply with these two conditions, I can mention in my audit report that I have complied with international standards on auditing. First, there should be no conflict and audit report should be as per NSA. What is NSA? National Standards on Auditing. Now, when we say there is no conflict, what does it mean with there is no conflict? No conflict in the basis of two things. One is based of opinion. Okay, when giving an opinion, if you remember, we have complied with 6 evaluation criteria or 6+1 evaluation criteria. There should be no conflict between this criteria and their international standards criteria. And secondly, there should be no conflict between EOM paragraph of our Indian standard and international standards. If there is no difference, you can mention in your audit report that we have complied with standards of auditing issued by ICI as well as international standards on auditing. That's it. Okay, so now please understand, when 3.4, when this question can come in your examination, this question can come in particular format. The format is like this. The question can come in particular format. The format can be like this. Okay, so when we are discussing about this element, that, okay, so first of all, I being an auditing the Raju X Ganesh company X Limited. While auditing this, Amit Adar want to give an audit report. In audit report, Amit Adar want to mention that he is also complied with international standards. Can Amit Adar do so? Now you need to understand, as per 700, okay, forming an opinion and providing a report requires that Amit Adar can update that he can comply with, he has complied with NSA as well as ISA. What is NSA? National Standards on Auditing. ISA, International Standard. But the only thing is Amit Adar need to take care of how many conditions? 2 conditions. First condition, no conflict. Second, report should be there. I do think the 3.4 point is very clear to everyone. This is 3.4 point. Okay, just make it sure you remember this one. So I do think 3.4 is basically mentioning in audit report that we are complied with standards on auditing issued by ICA as well as international standards on auditing or any other jurisdiction. Other jurisdiction means what? London, okay, or any other standards we have complied. But what are the things we need to take care? There is no conflict. An audit report is as per which one? Prescribed by law or regulation, means our national standards. Okay, and conflict should not be in 2 things. One is opinion and second is EOM or OM. Okay, now we are focusing on the next point, that is called 3.5. 3.5 is the last portion of 700 where 700 will close out. Okay, so now 3.5 is what? 3.5 paragraph. I am discussing 3.5 paragraph. Okay, now this is something which you need to understand and be clear, because this will be taken care very carefully tomorrow morning also. Tomorrow morning or tomorrow evening, late evening, it depends. Okay, basically when I am complying with 560, 710 and 720. Okay, now understand. Okay, we already saw the Reliance report. In Reliance report, if you understood, there was an auditor report. There was a balance sheet. There was a P&L. There was a cash flow. There was notes. There was change in equity. Okay, along with this, there were also board report. There was also other details. Because annual report will not only include the balance sheet, P&L, other things, other details. Sir, example of other details, there may also have the accounting ratios. There may also have bar diagram or chart diagram, something like that. If you focus on any annual report, they may mention this all things. Now the question is, now please do understand, as per our discussion, this is not called financial statement. What is a financial statement? Financial statement is balance sheet, P&L, notes, cash flow and changes in equity. This is something which is called financial statement. This is called financial statement. Now the question is, okay, I am providing an opinion on financial statement. I am not providing opinion on any other thing. Okay, so if there are other information also, or I may use the word supplementary information. Which information? Supplementary. It is on supplement, added information. Now when I am discussing about this added information or supplementary information, I need to be very clear. Okay, first 2 things I need to be clear. First thing, I am not providing an opinion on supplementary information or other information. I am not here to provide any opinion on supplementary information. First thing. Secondly, I am providing an opinion on this financial statement. So 2 things you need to take care. First is, you need to take care that this supplementary information is actually separated from the audited financial statement. It is separated from audited financial statement. And second thing, you need to check out about the consistency of supplementary information. So 2 things you need to check it out. What are the 2 things you need to check it out? First, supplementary information is separated. Supplementary information is separated. Supplementary information is separated from your financial statement. And second, okay, you need to check out for consistency of supplementary information with financial statement. Let's take an example. In financial statement, they have written sales 1 crore and data 50 lakh. Now tell me, what should be the ratio of data sales and data? The ratio should be 2:1. Now you need to check whether 2:1 match with this particular point. That's it. Consistency. Okay, it's consistency. You are not required to audit this. You are not required to audit this. You are required to audit only financial statement. Now, when I'm saying 2 things, it should be segregated and it should be consistent. It requires 2 standards to be applied. First standard, okay, SA 700 says it should be segregated. It should be segregated. And SA 720 says it should be consistent. So when we comply with SA 720, tomorrow we will check it out that it is telling us to check for consistency of supplementary information with financial statement. And today, when I am discussing right now the concept, it is saying check it out whether it is segregated or not. Now when I am saying what is the meaning of segregated? A segregated means basically on a financial statement, it is written audited financial statement. What it is written? Okay, but when I'm discussing about supplementary information, it should clearly mention unaudited supplementary information. That is what taken care by 700. So make sure what I am discussing right now is this. Okay, heading of supplementary information should be unaudited supplementary information. If the question comes, X Limited audit is done by Amit Ated, Ganesh is giving a supplementary information. While giving a supplementary information, Ganesh has not mentioned unaudited there. What Amit Ated will do? Okay, the standard 700 will be used here. Okay, if I say Ganesh has given supplementary information, okay, or other information, Amit Ated need to check for consistency of that other information with financial statement. You will be using standard 720. So there are two things, please make it sure. If I need to segregate supplementary information from your financial statement, I need to use 700. If I need to check for consistency of supplementary information with 700 financial statement, I need to use 720. Make sure. So right now we are on which standard? 700, where I'll be checking out whether it has been segregated. See, if we don't write unaudited, what will happen? The perception of the shareholder will be that this is also be unaudited because it is along with audited financial statement. Because it is along with audited financial statement, the perception of people will be that this supplementary information is also audited, which is actually not. So therefore mention to the shareholder that it is not audited. This is exactly 700. And other 720 will say check for consistency with financial statement, which is something different element. So right now I am discussing segregation. So what are the steps here? So check it out. The steps are very easy. First of all, auditor. Now what I am discussing, please listen carefully. I am discussing audit procedure for supplementary information. Audit procedure for supplementary information, okay, attached along with financial statement. Audit procedure for supplementary information attached along with financial statement. Audit procedure for supplementary information attached along with financial statement. If I use the word other information, consistency, audit procedure for consistency, standard will be 720. Audit procedure for the supplementary information attached with financial statement, this standard. Sir, the answer is damn easy. I am telling you, very easy. First of all, check it out whether supplementary information is a part of financial statement. If supplementary information is a part of financial statement, example, financial statement is saying to add that supplementary information. Okay, law regulation is saying to add that supplementary information. Audit that because it is now financial statement. If that is a part of financial statement, audit that. Second, if it is not a part of financial statement, yani there is no framework which is telling to add supplementary information with FS. Okay, there is no framework which is telling me supplementary information to be add with FS. What you should do? You check it out whether it has been segregated. What it does mean? It has been segregated. What is mentioned on the above of the point? Unaudited supplementary information. If it has not been segregated, ask management to segregate. Ask management to segregate. Management, okay, segregate this one. Right, mention unaudited. Okay, now there will be two things. Management may segregate, management will not segregate. Example, if management segregate, okay, so your task is done. If management does not segregate, you need to tell management, okay, so if you are not adding segregate financial information, you are not mentioning unaudited financial information, I will be mentioning this in my audit report. I will be mentioning in this audit report that the financial statement is having supplementary information which is not audited. Okay, so that's it. So what are the steps? First, supplementary information is a part of FS. If it is a part of FS, audit. If it is not a part of FS, check whether it is segregated. If it is segregated, standard is over. Standard is over. If it is not segregated, ask management to segregate. If management segregated, standard over. If management do not segregate, mention in audit report there is a supplementary information which is not audited by us. Okay, this is the answer. That's it. Okay, so when you will write this answer, beta? When you will write this answer? Okay, okay. If I am asking you the question in examination, supplementary information is attached along with financial statement. If I ask you, supplementary information should be consistent with financial statement, check for 720. 720, other information, check for consistency. Here it is not about consistency, it is about attached with financial statement. Tell me, when you are writing answer sheet, okay, when you are mentioning answer sheet in your paper, okay, you may be using some rough note also. Okay, don't you think you mentioned rough note on the top? Okay, suppose you are doing practical part. Okay, do you write a working note? Why you mention working note? Because it is a supplement point. What is working note? It is not a part of the answer. It is a working note. You mention that one. It is not a part of answer. It is only how I calculated. Are mention that only na. That is a segregate. That is unaudited. Don't, because along with audited, what shareholder will think that it is audited. And don't think, don't imagine that everybody will be aware that financial statement includes this only 5 things. Financial statement includes balance sheet, P&L. Arey boss, you are a chartered accountant, therefore you are aware. Think about a doctor. Can doctor be a shareholder? So then how doctor will come to know? How engineer will come to know? For engineer, doesn't matter financial statement. Engineer has invested money. He is thinking by everything is financial statement. Arey, tell him I have audited only these 5 things. Any other thing which is attached, it has been not audited. Mention on the above. I don't think everybody clear, Malik? Just staying clear. So first point, if supplementary information that is not required by AFRF. Acha, if supplementary information is required by AFRF, then audited. That is a simple answer. Okay, if it is not required. The auditor shall evaluate. In the auditor's professional judgment, supplementary information is nevertheless integral part of financial statement. Supplementary information shall be covered by auditor opinion. It should be audited. If it is not considered an integral part of audited financial statement, the auditor shall evaluate whether supplementary information is presented in a way that sufficiently and clearly differentiate. Yani what is written on the above supplementary information? Unaudited. If it is not the case, then auditor shall ask management to change. If management refuse to do so, the auditor shall identify the unaudited supplementary information and explain in audit report. I don't think the concept is very clear. Okay, so this is audit procedure for how will come to know. Okay, audit procedure for supplementary information attached with financial statement. If I say supplementary information consistent with financial statement, okay, 720. Supplementary information attached with financial statement, 700. Supplementary information consistent with financial statement, 720. Other information consistent with financial statement, 720. Consistency. Checking for consistency will be 720. Okay, so add with financial statement, 700. This answer. I do think everybody clear, Malik? Everybody? This is something agenda you need to be clear. That's it. Okay, now we are going on the 701. I do think everybody clear with 700? The 700, what are the questions we have done? Just I am making you chart clear point for you. 700. First we discuss audit report. Acha, before we discuss audit report, I also discuss evaluation criteria. I discuss, oh my god, evaluation criteria 6 plus 1. Evaluation for which framework? Compliance framework. Evaluation way for which framework? Fair presentation framework. We have discussed 6 points, 6 plus 1 point, 7 point. That is 2 framework we discussed. After, that is then outside the syllabus. After that we discuss audit report. Then also we discuss audit report as per law and regulation, which I told you, you can ignore it out. Okay, then we discuss, okay, whether I can tell NSA plus ISA. What is NSA plus ISA? National Standards on Auditing plus International Standards on Auditing. And also I discuss now supplementary information attached with financial statement. Supplementary information attached with financial statement. Okay, so this is your 700 ka series, 700 done. 700 ke baad we are coming on 701. What is 701? Key audit matters. Now when I am discussing about key audit matter, first condition, tell me, yesterday I discussed this, I closed this very correctly, on correct note. 701 is applicable to which companies? It is applicable to only listed companies. Secondly, it is applicable only in case of GPS. First of all, keep in mind, 701 is applicable only to listed and also listed plus GPF. Okay, it is not applicable to SPF. So after an hour and so, when we enter into SPF series, make sure, I'll be telling you in SPF also, go to 700. So while going to 700 series, make sure which standard you will not be using? 701. You will not be using which standard? 701. That's, be clear in mind. 701 is applicable to which? Listed and GPF. Acha, 700 is applicable to? All. 705 is applicable to? All. 706 is applicable to? All. All audits. Listed, unlisted, GPF, SPF, everything. Okay, but 701 is applicable to? Listed and also GPF. I do think everybody clear, Malik? Okay, now the question is, what is the key audit matter, sir? Key audit matter is basically, now how the name comes into picture. It is basically that are the audit matters which are very important for the auditor. And auditor has, what auditor has done, I need to write in that. What auditor did for that matters. Okay, that is what exactly auditor need to mention in key audit matter paragraph. Please understand, key audit matter paragraph are the matter paragraph where auditor will highlight what were the very critical matter during the audit. I identified this was the critical matter and what steps I took Okay, to ensure the critical matter risk is reduced, that is mentioned in key audit matter. And in short, okay, I'll be telling you, if suppose you all are shareholder, I'll be telling you, okay, I've taken care of some 5 areas, very sensitive, very key audit matter. There were very high risk. There was also a material misstatement. And what I did with my steps, I did RMM, I did audit procedure, I did nature timing extent of audit procedure. I'll mention in that key audit matter. So the question comes, is key audit matter? First of all, key audit matter is applicable to audit, listed and GBF. Second, key audit matter first should be communicated with TCWG. Okay, unless until you don't communicate with TCWG, you will not be writing this key audit matter in audit report. And first I need to discuss with Gopi and Raju sir. Okay, so all this matter will be discussed with Gopi and Raju sir, and then only I can mention as a key audit matter. Yani first of all, I will tell him, Gopi sir, Raju sir, I am mentioning this 5 matter in our audit report as a key audit matter. What steps I have taken, I am mentioning that. Shareholder, I am taking care everything. Don't worry, out of 300 items, okay, I think 5 items are key audit matter. Now the question comes, which 5? The question comes, which 5? Okay, help me out. Out of 300, in which area you work more? 40. In out of 40, you think these are the 5 which is key audit matter. That is exactly what our discussion is. Yani the things which are having a RMM, the things which are having a complex transaction, the things which are having a judgmental issues, basically a estimate kind of thing. These are the key audit matter. So make it sure you understand what I am mentioning in key audit matter. Key audit matter, I am mentioning what are the areas which were key for me and what are the steps taken by me for that area. This I need to mention. Yani I am not mentioning only RMM ka list. I am mentioning out of RMM, I am selecting key audit matter. Sir, who will select this? Auditor. Let auditor decide. You don't decide. Auditor will decide. Auditor is telling, okay, out of 40, I think these are the 5 are the key. But before writing this key, I'll discuss with, okay, TCWG. Okay, and when I'm mentioning these 5 areas in key audit matter in audit report, I'll be telling you what I've done for this. This is very important. I'm not required to mention only, key audit. These are the item key audit matter. No. This is item key audit matter. Example, estimate is key audit matter. Okay, for calculating an estimate, we have discussed with management. We have did inquiry with management. We understood why management has not taken the other percentage. Why management has selected this percentage. We have obtained the evidence to get the comfort zone. The estimates would be proper in all scenarios. This is what we will be writing in key audit. Now there are 2 things to be taken care of. First thing, okay, there are 2 questions to be taken care of from your examination point of view. First thing, if you are mentioning key audit matter, okay, if you are mentioning key audit matter, okay, key audit matter is not a substitute for what? These are the 4 things, okay, it is not a substitute for what? Example, if you are mentioning key audit matter, now if I am mentioning, example, contingent liability can be key audit matter. I'll be mentioning key audit matter, contingent liability. I'll be telling there was a contingent liability. Okay, so Ganesh is having of 11 crore and we did the steps. We discussed with the lawyer. We discussed with our lawyer. Okay, we checked minutes of meeting. We checked legal expense account and everything. And we got comfort zone on contingent liability of 10 crore. 10 crore. Now Ganesh saying, Are Amit, okay, TCWG, Raju and Gopi Bhai saying, okay, Amit, okay, you are mentioning in key audit matter contingent liability. Let's do one thing. I will not mention in notes. Okay, no Ganesh bhai, no Raju bhai, Gopi bhai, no, you need to mention that key audit matter. Even if I am mentioning a key audit matter is not a replacement for notes. Okay, you need to disclose in notes, It is not a substitute for disclosure in notes. It is not a substitute for disclosure in notes. Yani example, if I mention everything in key audit matter, okay, even if it is in notes and I am mentioning key audit matter, now you will not say, I will not mention in notes. Because it is already mentioned in your key audit matter. Okay, no Raju bhai, key audit matter is not a substitute for notes. Second, suppose the inventory is overvalue. Inventory is overvalue. It is material. Help me out. Opinion should be unmodified or modified? Okay, if inventory is overvalue and material, modified or unmodified? Modified. Financial statements are true and fair except inventory. Financial statements are true and fair except inventory. This is what I will be discussing, na? I will be modifying. Okay, now instead of modifying, don't you think I can do like this? I'll write key audit matter, inventory was overvalue. I'm mentioning key audit matter, I will give the opinion unmodified. Will it do? No, a key audit matter is not a substitute for modified opinion. Okay, acha, in key audit matter, I'm mentioning, okay, the daters were a key audit matter. Daters, what are the key audit matter? Datas was the key audit matter, and we took care of datas. We checked everything about data. We did RMM. We checked internal control of data. Now the question comes, okay, am I giving an opinion on data or am I giving an opinion on financial statement? So please understand, key audit matter is not actually a separate opinion on individual matter. It's not a separate opinion on individual matter. Make it sure you understand. I am not giving an opinion on data. Oh, sir, can there be an audit where I can give an opinion on individual items? Yes. If you remember, I don't know. I mean, if you remember, it's a 4th day now only. It's a 4 days, 24, 48, 96 hours we have met. Okay, basically, okay, technically speaking, now 4 days back I discussed with you when I was discussing 805. Today after 1 hour, 1.5 hours, I will be discussing 805. In 805, you are giving an opinion. There is an audit of data also. The client coming to me and saying, I want to get audit of data. Give me opinion on data only. Will there be an engagement where I will be giving opinion on data only? Yes, but that engagement standard is 805. Please do understand, key audit matter is not a separate opinion on data. This is not a separate opinion. This is not a separate opinion. So example, okay, if I wrote in my audit report, key audit matter datas, I check datas and everything, and datas have no worry. Okay, now Ganesh will not take this audit report and go to bank and say, Dekho, there is an opinion on data. See, there is an opinion on data. No, Ganesh bhai, I have not given an opinion on data. Okay, do you remember yesterday one example which we were discussing going concern? My EIS is being removed. If you remember material uncertainty, do you remember or not remember? Okay, when paragraph number 5 disclosure will comes, in which situation? 4 situation I explained. When second one, when material uncertainty is disclosed and notes is disclosed, I will be mentioning in para number 5 na? What if I also mentioning in key audit matter, para number 6? In para number 6 also I am writing key audit matter. There were EIS being removed. We have discussed with management very thoroughly that how they will be tackling the things. I will discuss what is the management plan of future action. I have discussed they will be starting with direct tax. Okay, we have discussed with the management. We have discussed this thing. I am writing in key audit matter. My question, can I replace the para number 5 now? No, this is what they are saying. Okay, in para 5 also you need to highlight even if you are writing in para 6. So, key audit matter is not a substitute for. Key audit matter is not a substitute for. Read this answer. Scope of key audit matter. It is not a substitute for disclosures. It is not a substitute for expressing modified opinion. It is not a substitute for 570. And it is not a separate opinion on individual matters. Help me out. First example. What is the first example? Not a substitute for disclosure. If you remember contingent liability, I discussed this all example right now in last 5 minutes, right? Okay, if I am writing key audit matter, contingent liability. In key audit matter, if I am mentioning contingent liability, can management say I will not disclose contingent liability in note number 17? Can management say like this? No. Okay, they need to refer the notes. Baat khatam. Okay, second, key audit matter is not a substitute for which opinion? Modified. I discussed this example with inventory. Inventory valuation. If I am saying inventory overvalue, should I modify the opinion or not? Yes. If I am mentioning that item in key audit matter, shall I say, okay, I am mentioning in key audit matter, I will not modify the opinion? No. Key audit matter is not a substitute for 570. Even if you are mentioning para number 6, para number 5 will come. And last point, it is not a separate opinion on individual matter. Means what? Data is wala point. So if you want a separate opinion on individual matters, which standard? 805. A single item, specific items. Remember this point, Malik. Remember this point. Again, I am telling you, this will be a definitely very new knowledge for you. Okay, it's probably we'll start at 11 o'clock. There will be something, a dramatic knowledge for you. Make sure you understand every element of it. But that's how the things need to be covered by you. So next point, okay, I do things, what is the key audit matter? So key audit matter is not a substitute for how many point? 4. So what are the 4 points? It is not a substitute for disclosure. Okay, modified opinion, 570 and separate opinion on individual matters. Now question, okay, so who will decide key audit matter? Auditor. Now question is, should I discuss this key audit matter first with TCFG? Okay, which out of the matter discussed with TCFG, which matters are key audit matter? How will I decide? So they say it's factors required. What required? Factors. There is a next point. Okay, what are the factors? Determining key audit matter. Read this point. Determining key audit matter. In making this determination, the auditor shall take into account first areas of higher RMM or SR. Oh my God, do you remember SR? 6 points. Fraud, estimates, related party, law regulation, complex, unusual. Page first. I told you. Okay, yani you can take a key audit matter from that 6 point or 40 items. Sir, what I am discussing right now on the screen, I am discussing how should I determine which are the key audit matter. How should I determine the key audit matter? All 300 items are key audit matter kya? Nahi. The auditor, out of that 40 or 6, you select which are key audit matter. Second, auditor, significant auditor judgment related to area of judgment that involve significant management judgment. Means what? Which matter? Estimates. And third point, any effect on audit of significant event or transaction. You think any significant events or transaction are there, you can mention in that key audit matter. So to help me out, how should I determine what are the key audit matter? How should I determine what are the key audit matter? Okay, so first of all, I have not written here, but to the extent you should keep in mind, the matter which has been communicated to DCWG, out of that matter, while selecting key audit matter, we should keep in mind 3 points. RMM, SR. Second, judgment. And third is significant events and transaction. RMM, judgment, transaction. RMM, judgment, transaction. RMM. Everybody clear? Everybody? Okay. Applicability of SA 701. We have discussed this one. The SA 701 of audit to complete set of general purpose financial statement of which entity and circumstances when auditor otherwise decide to communicate key audit matter and is required by law and regulation. See, understand, this point I will discuss in later stage, thoda sa later stage when I am discussing 705. So don't apply this logic now. Okay, 705 will prohibits. We'll discuss once we go in 705. Okay, but other than that, okay, what can be the example of key audit matter? Assessment of impairment of assets, provision for loss and contingencies, valuation of financial instruments, revenue recognition, taxation matter, something like this. Okay, just I am telling you, please make sure. Okay, just I want to make you understand how key audit matter comes into picture. I am not interested in real life, but this is how key audit matter is written. Screen pe dekhiye, like check on the screen. So they mention key audit matter and how the key audit matter were addressed by our auditor. Yani you are not mentioning only the item. You are not mentioning only the item. You are mentioning how you address that in your audit. Okay, for example, you did RMM, you check internal control. What you did? You are mentioning that. So basically, example, revenue from contracts from customer is recognized when service is rendered by customer. This was key audit matter, revenue recognition. So how we did? Our audit procedure considering the significant risk of material misstatement related to revenue recognition include assessing, okay, testing, assessing, disclosure. This is. I think you're getting the point. In key audit matter, what I'm doing, I'm telling the shareholders, I identified these are the key audit matter, and from my point of view, what I did here. That's exactly key audit matter happened. And just to be very precise, read the main paragraph of key audit matter. Before mentioning the key audit matter, what we write always, key audit matter are those matter that in our professional judgment were most significant in our audit of standalone financial statement. These matters were addressed in the context of audit of standalone financial statement as a whole, and in forming our opinion, we do not provide separate opinion on these. Are you getting the point? I am very clear. Okay, for each matter below, our description on how we audit address the matter is provided in that context. Okay, most important again, we have determined the matters described below to be key audit matters to be communicated in our report. We have fulfilled responsibility. Whatever are my responsibilities, I have fulfilled that. Okay. Accordingly, our audit included performance of procedure designed to respond to our assessment of RMM. Okay. The results of our audit procedure, including the procedure performed to address key bit below, the basis of our audit opinion in accompanying financial statement. Any example? Okay. I am no way mentioning any individual opinion on this. This is only what I have been appointed to. Just I am highlighting how I have taken care of in audit. From my point of view, these are key audit matter. That's it. So making sure whenever we are writing any paragraph on key audit matter, I am very clear. What I am making a shareholder understand. Oh shareholder, this is not an individual opinion. I am not giving an opinion on revenue recognition. Okay, that's exactly what our discussion comes into picture. I hope key audit matter is clear to everyone. So how many questions you will remember in key audit matter? Technically, how many questions are there for key audit matter? Only 2 questions. What are 2 questions? Not a substitute. And second point, determine. And first we can also discuss additionally, that is called applicability. applicability, where key audit matters are applicable. That's it. So this is your 701. I hope 701 is clear. Any doubt with this? Everybody? Okay. So Lakshmi ji, any doubt? Okay. Malik, everybody clear? Yesterday doubt, joint audit ka doubt was there. We'll discuss 1705, khatam karo, when we come to joint audit, then we'll go to special purpose. You tell me the doubt. But nevertheless, okay, I hope the things are clear at your end. 701 doubt? 700, 701 clear? Okay. Now we are going on modification of opinion. Now to be very precise on modification of opinion, let's discuss first of all the matrix of modification of opinion. Okay, and based on that matrix, I can clear it out. Okay, based on that particular matrix, I will clear that particular point. Okay, so 701 is basically modification of communicating key audit matter. This is what I explained you, but don't remember this point. If you remember the introductory language in this section in audit report said that key audit matter are those matter in auditor's professional judgment were most significant, and the auditor does not provide. I read with you about the Reliance report. Okay, so communicating key audit matter. Now here we are going with 705. 705 is a thorough concept and conceptual clarity is required. Okay, whatever level you may be having a conceptual clarity doesn't have impact on me. Right now I require the conceptual clarity which is required by CA final examination. That's it. You may be knowing modification, you may be knowing every element. Okay, does not have effect on me. Right now please listen carefully every element from my point of view. Because now here applicability comes into picture, and I am telling you the answer may be of 2 lines only. Mark some square, 4 marks, and the problem will be okay. The person will not be able to crack that 2 lines only because that concept may not be aware. Because it requires a reading of cumbersome module. If you go through this module, reading all these elements or filtering the content is itself a biggest challenge. What exactly I say required from chapter 7, 705 sometimes is the biggest challenge to understand. So take a time, okay, we'll understand this thing. Okay, so probably next 45 minutes, you are on 705, 45 minutes to 1 hour. This is my basic standard to be clear. Because once 705 is clear, okay, the things are done at our end. So our understanding starts with 705 like this, with the matrix which is on the page number. The matrix which is on page number 7.11. Matrix is on 7.11, page number 7.11, 7.11. I do think everybody on 7.11 now? Okay, so I am on the matrix. Let's discuss this matrix first. First, okay, help me out sorting my question. I am telling you, complete this matrix thoroughly. Almost half of the standard is over. And the half of the standard goes with our mutual discussions. So let's close the half of the standard first. My first question, when you come to 705, you don't come directly to 705, you are in 700. 700. 700 says, okay, if you remember 6 items, 6 plus 1 item. There are 2 things. If you find that 6 item or 6 plus 1 item, what I am 6 and 6 plus 1, I do think everybody is clear. If that 6 item or 6 plus 1 item, if they are materially misstated, if they are or you are unable to obtain sufficient appropriate audit evidence, go to 705. Who says go to 705? 700. 700 says that if financial statements are materially misstated or you are unable to obtain sufficient appropriate audit evidence, go to 705. This is told by 700. So my first question, what are the circumstances to come in 705? What are the circumstances to come in 705? There are 2 circumstances, and these are 2 circumstances. So what is the first circumstance? Financial statement are materially misstated. And what is the second circumstance? Unable to obtain sufficient appropriate audit evidence. Okay, what is the sufficient appropriate audit evidence is a matter of judgment. Don't discuss right now. Okay, what is, but I told you, if you remember a sufficient appropriate, I told you ekdam technically 1 point, 2 point, 3 point, 4 point evidence I got. Now I'm not getting more evidence, and I cannot give opinion on 4 evidence. I require 6, 7 evidence more, but I'm getting only 4 evidence. I'm not getting more number of evidence. Okay, I cannot give the opinion. I cannot give the opinion that it is correct. I cannot give the opinion it is incorrect. I don't have evidence only to tell that it is incorrect. Sir, if you are not getting evidence, it means it is incorrect. Now, who told? If I am not getting evidence, this means there is a limitation of scope. Unable to obtain sufficient appropriate evidence. I am not able to obtain. So, sir, I can't tell it is wrong. Acha, inventory is in Ukraine. If you remember Ukraine yesterday, acha, मेरे को बताओ to go when inventory counting is impracticable. Threat to the auditor's life. Going to Ukraine is a threat to auditor life now. Okay, or going to Russia also a threat to auditor life. Now my question is, okay, my client is saying inventory in UK or Ukraine is of 1 crore. Now tell me whether they are correct or incorrect. No sufficient appropriate evidence. Okay, now management is saying I am having a report now. Okay, there is a one store manager. He is writing, he is signing the copy, store manager copy. I am sending you, I am showing you that report also. I am not getting a confidence on that store report itself. I want to check. To get that confidence, I want to check. Now you can't say also there is no inventory. You can't say also there is inventory. Now when you say that if I am unable to obtain sufficient appropriate evidence, I will say there is no inventory only. How? You are not aware whether there is an inventory or not. That is exactly our discussion comes into picture. So let's close that point. So first of all, if I ask you what are the circumstances to modify the opinion? How many circumstances are there? 2. First is financial statements are materially misstated. Okay, or unable to obtain. See, understand, you can't have both the situation. You will be having either of the situation. Okay, now to give the opinion, you require one more judgmental area. Okay, whatever materially misstated, or if you are not able to obtain a sufficient appropriate evidence, whether that item, if you remember item is material. Okay, whether the item is material but not pervasive, or whether the item is material and pervasive. If I am saying, when I am saying my item is material but not pervasive, and I am saying material and pervasive, first of all, do you remember what is the meaning of pervasive? I discussed this with you. If you remember, pervasive means, okay, 3 factors I have discussed with you. What are the 3 factors for pervasive? If you remember, first, pervasive is not restricted to specific item. If it is restricted to specific item, it is substantial. And third, if it is non-disclosure, it is fundamental. 3 point for pervasive. Sir, where it is written? Go back to the earlier pages. You have highlighted this one, 7.8. Go to page 7.8. This chapter only. 7.8. Check it out. You have highlighted. 7.8. Pervasive. Got or not? 5.4. What is the pervasive? Tell me which item are pervasive. First point, it is not confined to specific item, okay, or account or element. Means what? And when I am saying pervasive, it should be many items should be included. Example, out of 300, 150 are not good. Pervasive. 40 are not good. No pervasive. 1 is not good. No pervasive. Are you getting the point? Now the discussion comes, sir, if it is not confined to specific item means how many items then? Usually we take 30%, 40% depending on scenario. Again, it is a judgment of auditor. The second, what is the second line? It says, if confined to a specific item, the amount is substantial. Means example, if you remember, inventory is the only problem. Inventory is the only problem. Now tell me, okay, inventory, but the amount of inventory is out of 200 crore is 150 crore. Now tell me, if it is one item, it is pervasive or not pervasive? Pervasive. Okay, that's either of it. Okay, any example, the situation may arise where there are out of 300, you are telling 200 are kharab, 200 are worst. Now it is pervasive. Out of 300, you are saying 1 is worst. Not pervasive. But if this one is of, okay, 150 crore out of 200 crore, now it is pervasive. I think everybody clear with this point? Auditor, judgment, make judgment on this. Make judgment on this. This is your second point. Whether the item, the which auditor is telling, okay, whether the auditor is telling whether it is financial statements are materially misstated, or auditor is not able to obtain sufficient appropriate audit evidence, okay, whether the item is material but not pervasive, or the item is material and pervasive. So two things, two judgment you need to make it out. What are the two judgment? About materiality and about pervasiveness. Okay, help me out. Okay, one thing we are discussing, very point. Aram say, give me an answer. How many circumstances are there for modification? What are the two circumstances? Financial statements are misstated, and second point, unable to obtain sufficient appropriate audit evidence. Take first circumstance. What is first circumstance? Financial statement misstated. Now discuss inventory is misstated. Inventory is, now the question, whether inventory misstated is material. Material. My first question, it is material. Answer is no. Go to 700. Don't come here. So you should come here only when it is materially misstated. Now the question is inventory overvalue material misstated? Yes. Now the discussion, whether it is material, yes, we have discussed. Now the question is whether it is pervasive or not pervasive. If it is not pervasive, then the answer will be qualified. If it is pervasive, the answer will be adverse. Now sir, when I say qualified opinion, when I say adverse opinion, in audit report, do I write qualified? Do I write adverse? No, Malik. In audit report, I'll say like this. If it is qualified opinion, in my audit report, my opinion will be, FSR true and fair except inventory, which is overvalued by 1 crore. Are you getting this point? Okay, are you getting this point? This is opinion. What I write in audit report. And if it is adverse, adverse means which effect? Pervasive effect. Pervasive means out of 300, how many are worst? How many? 150, 200 are worst? Okay, so here I can write. I will not write financial statements are true and fair except blah 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 blah. Therefore, I will write here financial statements are not true and fair. So what opinion I write here in qualified? What opinion I write in qualified? Financial statements are true and fair except inventory. But in adverse, what I write? Financial statements are not true and fair. Okay, not true and fair because this particular point items are worst. Everybody clear? Yes or no? Okay, now discuss about inventory which is in Ukraine. Had you checked the Ukraine? No. Had you gone to the Ukraine? No. So my question, do you think in Ukraine the inventory may be the issue? Are you getting a confidence on inventory? No. So my first point, is this unable to obtain sufficient appropriate evidence? Okay, my question, is inventory material? If the answer is no, 700. Material nahi hai. Now the question is inventory material? Yes. Now the second question comes, is it pervasive? If answer is no, the opinion is qualified. If answer is yes, the opinion is disclaimer. Actually, disclaimer is not an opinion. Disclaimer of opinion is I am disclaiming the opinion. I am not giving any opinion. Make it sure, सबसे worst I am telling you is disclaimer. Better option rather than giving a disclaimer, withdraw. Because you will not be getting a fees also. In disclaimer of opinion, you are not giving any opinion. You are disclaiming the opinion. Sir, what you will be writing in disclaimer opinion? We were appointed as auditor of the company to provide an opinion on financial statement. But we are unable to form any opinion. Now tell me, if you are saying unable to form opinion, who will give the audit fees? Okay, you are coming to me, sir, teach me audit. Okay, I am saying this is audit, but I am unable to form whether this is correct or not. I'll say, oh, then why should you give the fees? The logic comes like this, boss. So disclaimer of opinion is actually not an opinion. Disclaimer of opinion is that we were appointed as an auditor to give an opinion, but we were unable to form an opinion because of significant matters. Okay, acha, when we are here on the screen, everybody, when we are qualified, disqualified, which qualified? Unable wala, this red wala qualified. Now tell me what opinion, what opinion I will give? The opinion I will give is financial statements are true and fair except, no, not except inventory, except wordings, except for possible effect of inventory. Possible effect. Are you sure that inventory is not? So, possible effect of inventory. You don't know about anything about inventory. Are you getting the point? So, if you are writing qualified, the two qualified will have a different wordings. If I am saying financial statements are materially misstated and I am giving qualified opinion, my wording will be financial statements are true and fair except inventory. But if unable to obtain sufficient appropriate evidence and I am giving qualified, my wordings will be financial statements are true and fair except for the possible effect of inventory. I hope everybody clear. So my question, how many types of modified opinion are there? 3. What are 3 opinion? Qualified, adverse, disclaimer. Explain. Okay, explain. If I am telling you, explain qualified. So in qualified, you will write 2 masala, 2 content. First, if financial statements are materially misstated and the item is material but not pervasive, or unable to obtain sufficient appropriate evidence and the item is material not pervasive, I will be giving which opinion? Qualified. Adverse. Financial statements are materially misstated and the item is material and pervasive. Masala. Okay. Disclaimer. unable to obtain sufficient appropriate audit bill, and the item is material and pervasive. Everybody clear? So my first question, help me out. Okay, give me all answer correctly. Huh? Everyone, online punter, everyone, clear, be clear. My first question, help me out. What are the circumstances for modification? How many circumstances for modification? 2. What are the 2 circumstances? This 2 circumstances. First 2. Anything clear? Okay, how many types of modified opinion are there? 3. We have discussed this one. Okay, which modified opinion is suitable? If I ask you, which modified opinion should be given? Answer. I am asking you based on 2 things. What are the 2 things? First, okay, first point will be whether financial statements are materially misstated or unable to obtain, and the item is material or pervasive. These 2, are you getting the point? Based on these 2, you can decide which opinion is better. I do think everybody clear, Malik? ठीक है. Recall the audit report. I want quickly audit report. Oh, settle, Amit, settle, shant. I am settling down myself. Title, addressee, opinion, basis, going concern, key audit matters, management responsibility, auditor responsibility, location, other, signature, place, date. Quickly, I want title, addressee, opinion, basis of opinion, going concern, key audit matter, responsibility, management, auditor, location, other, signature, place, date. Okay, I told you I need to write this opinion. I'll be writing where this point, where I'll be writing this one. Opinion. Which paragraph? Opinion paragraph. Okay, help me out. Opinion paragraph. Remember opinion paragraph? Which is the opinion paragraph? 3rd. Okay, 3rd paragraph. What opinion I'll write? If it is qualified, then what opinion I'll write? Financial statements are true and fair except inventory. I'll take basic inventory only. Okay. If it is compliance framework, then? If it is compliance framework, then financial statements are in accordance with AFRF except inventory. It depends on which framework you are going. Huh? Make sure you are clear with this point. Huh? I will not be explaining again and again the framework, boss. The same, it is a fixed cost. Okay, the framework, if you are going in this point, and you need, boss, just make sure that just, pray, boss, thanks God that we are aware about this framework now. Okay, rather than, oh my God, how many things are there? Basically, you are aware. Thanks first, that one. Thanks God, boss, now you are aware. Now the second step is make sure you are confident enough. So whenever I am saying, if it is compliance framework opinion, the opinion will be financial statements in accordance with AFRF. Acha, now tell me, when I am giving you to give adverse opinion, I need to give for compliance framework. Financial statements are not in material respect in accordance with AFRF. I don't think, are you getting the point? So this point I will not be explaining again and again. Okay, coming back to the opinion. I will be using this same opinion which I am using on the screen, true and fair. But you understood, if it is compliance, the answer will change. If it is fair, the answer will change. Okay, now my question comes here is, my friends, okay, what you will, suppose inventory is overvalued, suppose investment is overvalued, suppose 40 items are error, 40 items are materially misstated, but not pervasive. How many are materially misstated? 40, but not pervasive. Assume that. Now tell me, okay, what opinion you will write? Financial statements are qualified opinion. If it is not pervasive, then acha, if I am saying 40 items are materially misstated but not pervasive, which opinion you will give? Acha, am I able to explain this? Pakka? So my question is, if I am saying you out of 300 items, 40 items are materially misstated. I am going in normal English, not London, Australia English. Okay, so I am saying financial statements are materially misstated. How many items? 40 items, which is not pervasive. What opinion you will write? Qualified? Okay, so what qualified opinion you will write? Financial statements are true and fair, except all 40 items you will write in that opinion. This doesn't make a sense, na? Are you getting the point? What I want to explain right now? Understand this point. Okay, if 40 items there which is not pervasive, you will write all. Matlab, doesn't make a sense. So standard says like this. Standard says, okay, I have written like this. Financial statements are true and fair except inventory, but we will not write like this. We will write financial statements are true and fair except the reason mentioned in basis for qualified opinion. Except in basis for qualified opinion. Are you getting the point? Aram say understand first. Then modified. Everything will be in textbook. Don't worry. First understand to say with the things which are not only clear. I am spending time to make you understand. First understand that, Nare. So first point, please listen carefully. My question is, okay, when I am saying financial statements are true and fair, okay, if it is qualified, what wordings I will be using in opinion? Opinion. Financial statements are true and fair except for the reason mentioned in, or except for the matters mentioned in basis for qualified. Now what is basis for qualified? Fourth paragraph. What is the fourth paragraph name? Basis for opinion. Now the name of basis for opinion will become basis for qualified opinion. Now tell me, what is the audit report if it is a qualified opinion? Assume inventory is overvalue. What is the audit report ka content? Title, addressee, opinion, basis for qualified, going concern, key audit matter, management responsibility, auditor responsibility, location, other responsibility, signature, placed date. Are you getting the point? So now tell me, okay, where you will write all what was misstated, where you will write? Not in third paragraph, you will mention this in fourth paragraph, where you write all. If you remember, we have complied with SAE, we have complied with auditor responsibility, we have complied with ethical requirement, we believe that we obtained sufficient appropriate audit evidence. There you will write, okay, the inventory is overvalue, investment is this, falana dimka, whatever etc is there, you will mention there. I do think everybody clear? Yes or no? Now tell me how you will write adverse opinion then. Give me a good answer. Financial statements are not true and fair because of significant matter. What is significant? When I was in qualified, I was using matter. But when I am in adverse, I will be using significant matter because it's pervasive, na? Significant matter mentioned in basis for adverse opinion. I do think everybody clear. Significant matters mentioned in basis for adverse, and basis of adverse you will write which items are not correct. Okay, now help me out with this point. Okay, with this red one, this one, financial statements are true and fair, okay, except for possible effect mentioned in basis for qualified. Now tell me, disclaimer, we were appointed as auditor, but we are unable to form any opinion because of the significant matter mentioned in basis for disclaimer. So my question, how many paragraph will change if the opinion is modified? 3. Basis for qualified, basis for adverse, basis for disclaimer. So 705 says, whenever you are modifying the opinion, how many paragraphs can be newly added? Basis for qualified, basis for adverse, basis for disclaimer, depending on scenario. I do think everybody clear till here? Yes or no? So I've sought out half of the standard is over. Huh? I'm telling you, half of the standard I've closed. Coming quickly. First, fatafat, I want a quick answer. Fatafat. What are the circumstances for modification? First two. Okay, which modified opinion is good? I want an answer while you're writing. These two and above two. Which modified opinion is better? Should I give qualified, adverse or disclaimer? Depends, na? So it depends on what? It depends on what? It depends on this and this. You will be writing this answer. Okay, it will be either these two things or that two things. Everybody clear? Achha, coming back to again. What are the circumstances for modification? First two. Okay, which opinion is modified opinion is better? 2 point, but in 2 point you will write 2 point and 2 points. Understood? Okay, how many types of modified opinion are there? 3. We have discussed this one. Okay, which paragraph is modified? Basis. How many paragraph will be there? Basis for qualified, basis for adverse, basis for disclaimer. Are you clear with wording of that paragraph also? Acha, how many types of engagement can be there? Compliance or fair. So opinion may be differ in all of them. Okay, that has been explained here. Now what is next? Next, I'll go through a book only. Okay, so we'll go through a one paragraph, but I'm just telling you what are the things which you need to take care. The worst case is this one. Disclaimer. There will be many changes in disclaimer. Help me out. Audit report. Recall audit report. Quickly. Title, addressee, opinion, basis. Bas. I want to hear. Basis of opinion. Basis of opinion will become basis of disclaimer. If you remember basis for opinion. Okay, what point we have written in basis for opinion? Okay, basis for opinion. Recall. We have complied with standard. We have complied with auditor responsibility. We have complied with ethical requirement, and we believe that we obtained. Do you think you will write this when you are giving disclaimer? Okay, you are disclaiming, and how you will be using that wording that we believe that we have obtained sufficient appropriate audit evidence. That need to be modified. Okay, now tell me, when you are giving disclaimer of opinion, do you remember auditor responsibility paragraph? I don't know how many of you remember that one. Yesterday, 3 sections were there. Section 1, Section 2, Section 3. Section 2, okay, if you remember, I applied my judgment. I was skeptical. Okay, I did RMM, I did internal control, I check accounting policy, estimates and other things. If you remember SPC, even I check for going concern. If you are giving disclaimer, my father will do that. Okay, think logically. Okay, auditor responsibility paragraph will not come only because you have not done any responsibility. It's not possible only, na? These are the things which you need to discuss more in 705. What are the restrictions? Okay, suppose you are giving either adverse or disclaimer. You are giving adverse or disclaimer. And at 11:30 or 11:45, whatever, we start with 805. Okay, 805 is basically providing an opinion on debtors. Think logically, you are the auditor of general purpose financial statement. You are the auditor of general purpose financial statement. In complete financial statement, you have given the opinion of adverse and disclaimer. And you have been told to perform the audit of debtors only. Okay, don't you think it will be contradictory if you give the opinion on debtor when you are saying here it is adverse or disclaimer? Restrictions. Okay, what does it mean? Example, there are 2 engagements. Keep in mind. Now, Amit Tated is doing the audit of financial statement, and even he wants to do the audit of debtors. Debtor audit. He is telling me to do the audit of debtor. I am doing the audit of debtor. Okay, now the standard 805. Okay, you will be doing the audit of debtor. 705 says, if you are giving a complete financial statement as an adverse or disclaimer, means pervasive, na? Okay, and you are giving opinion on data, it is a big challenge. Imagine you are telling, okay, pura financial statement, all complete financial statement is not correct, and you are giving data are correct. Doesn't make a sense. These restrictions you need to understand. But make it sure you are clear that it's a 2 engagement which is going on. The separate engagement. So their restriction need to be taken care. Okay, so come to the point. Disclaimer of opinion. What is the DOM? Disclaimer of opinion. Have you audited or not audited? Not audited. You are appointed as auditor. Okay, once again I am telling you, better option in disclaimer of opinion, better option is to withdraw. Okay, and if withdrawal is not possible, then give disclaimer. This is what always the concept, Malik. Remember this. Now the question comes, okay, in disclaimer of opinion, if you are giving disclaimer of opinion, will you write key audit matter? Will you give 701? Not at all. How you can give 701? Okay, how you will tell key audit matter? Okay, when you are giving disclaimer. So there is a restriction. 705 says, now go to 701, earlier page 701, where we read the last answer of applicability. Check out for 701, page 701. 701 is page number 7.6. Read applicability wala point. Are you getting this applicability wala point? Read this line now. Boss, skeptically, very skeptically, you need to be clear. If you want to score toad marks on base of this chapter, very skeptical point, very niche area. Everything need to be taken care. Yani if you give a disclaimer of opinion, okay, no chance auditor will give. Okay. Restrictions. These are something which will MCQ. These are something which will come in case study. Don't assume that you will be getting title to write title, addressee, opinion, basis of opinion. These are the niche areas which we'll be taking on. So take care next half an hour, understand everything, understand my discussion, take the example and link in next half an hour later on also. This all linked will be again in other standards. Because in special purpose framework, the audit report will be coming in here only. Na? I told you, if you remember, you accept the audit. Okay, if it is GPF, you accept it. My man, you general purpose framework, you accept audit in 210. If it is special purpose framework, but reporting. So when I am saying 700, so 705 is also applicable. 706 is also applicable. But for SPF, 701 is not applicable. 705 will be coming again with the same logics. Na? So when I am discussing 800, 805, this constraints you need to be clear in your mind, boss. And that's the reason exactly. Otherwise, in intermediate, whenever I start audit, if you ask me in inter, okay, how I teach, or in final how I teach, both does have a different methodology. In inter, this is the first chapter which I teach always. First month's basic chapter ke baad, the next chapter, this is the first basic to start with. But in final, okay, even if I do this first chapter, technically the two things are there. Some background is there about awareness about modified or unmodified. And secondly, now this need to be linked with your next chapter again thoroughly, because you don't have a knowledge of SP. Okay, for everyone again, I'm telling you, okay, there is one engagement where a client is saying, you are doing my financial statement audit, okay, do the audit of data also. To understand this also you require a risk appetite. Oh, this engagement is there. Understand this engagement are there. Now you will ask why data audit is done. So I explained you, he need to do factoring with bank. Factor in bank. Bank is saying, do the audit of data. Now the bank, you may be saying, my complete financial statement is audited. Na? Bank is saying, complete financial statement is overall. I want opinion on data, single item. Okay, now you are coming to me and saying, Amit, do the audit of data. And that's where our discussion comes. And then coming on 705. Yani if in financial statement I am giving adverse opinion, and in data I am saying, no, this is very good. And in adverse or disclaimer, the reason for the particular giving an adverse was data only. How the things will match? Okay, it will be contradictory. So institute says, if the same person, if that is audit is done by some other person, suppose data audit is taken care by not Amit Atir, data audit is taken care by some other person. Suppose data audit is done by Bharat. He goes to Bharat and says, Bharat, do the data audit. Now there is no problem with Bharat, because what Amit Atir has given the opinion, what Bharat will give an opinion. Do you think its restriction is applicable? No. The restriction is applicable when Amit Atir itself is GPF auditor and SPF auditor. These restrictions are biggest challenge, and that's where we need to be skeptical. So let's focus on this. This is first point to be taken care. I do think now this concept is clear at your end. Okay, that I told you, whenever you are giving disclaimer, which paragraph will not come? If you are giving disclaimer, which paragraph will not come? 701. 701 key audit matter. Now what more paragraph will not come, we'll discuss. But on the screen, everybody clear this point? Okay. Let's start with 705. Come to the page number 7.7. Okay, first question. Okay, the decision regarding which type of modified opinion is appropriate. The decision regarding which type of modified opinion is appropriate. Tell the nature of matter giving rise to modification. What can be the nature of matter? Financial statements are materially misstated or unable to obtain SAE. This is nature of matter. And second, the auditor judgment about pervasiveness. So which type of modified opinion is appropriate? Qualified, adverse or disclaimer? Depends on how many points? 2 points. Everybody clear with first point? Second, what is an objective of auditor in this standard? The objective, the financial statement as a whole, okay, are not free, or auditor is unable to obtain sufficient appropriate evidence. Okay, usme kya karna chahiye? What should be done in that? That has been discussed here. Third, circumstances when modification to auditor opinion is required. I do think this answer is clear, everyone. What are the circumstances by which auditor's opinion is modified? How many circumstances are there? 2. Clear, Malik? Okay. I am not reading that one. Huh? Okay. Third point. Everybody clear? Third point. Okay. Determining types of modification. How many types of modification are there? First is qualified. In qualified, how many paragraph will be there? Why 2 paragraph? Materially misstated in material and not pervasive, or unable to obtain sufficient appropriate evidence and it is material but not pervasive. Therefore, 2 paragraph. You can read this one. I am not spending time on this. Okay, so qualified. Adverse, how many paragraph? 1 only. And disclaimer, how many paragraph? 1. Everything done? So how many types of opinion, modified opinion? We can close. But yeah. Okay, what is pervasive? Okay, so 3 things. What are the 3 factors to consider pervasiveness? It is not confined to single item, specific element. If it is so confined, substantial. And third, if it is non-disclosure, it should be fundamental. If it is non-disclosure, it should be fundamental. Okay. Everybody clear? Okay. So now what is the non-disclosure fundamental? 15-20 minutes later on I will explain when I go into 706. Fundamental means which is required by AFRF. Which is required by, and you are not disclosing that, we will treat as pervasive. Whatever amount it should be. Okay. Now coming on 5.5, listen carefully, ekdam aaram se, because this is new to you now. New to you means the concept is, you are aware about the concept, I just need to explain how the things need to be worked. First of all, if there is unable to obtain sufficient appropriate audit evidence, unable to obtain, I am on para number 5.5, 5.5, 5.5.1, I am discussing that one. Everyone with me? If auditor is unable to obtain sufficient appropriate audit evidence due to management putting limitation on scope. Due to management putting limitation on scope means what, sir? Means management is not telling to do that. Let's take an example. Okay, inventory is in Ukraine. Inventory is where, beta? Ukraine. Now this discussion will not apply because Ukraine is having a life threat to me. Okay, I am discussing when I am not able to obtain sufficient appropriate audit evidence because of management limitation of scope. Example, the inventory is in Surat. Management is telling not to go there. Okay, data is there. Management is saying not to confirm with data. Okay, records are not given by management. The limitation of scope is given by whom? Management. It is not because of impracticable situations. It is because of management restriction. It is because of, everybody with me, Malik? And because of restriction on management. In this case, first, management, please remove this restriction. Are you listening? Are you listening, management? Remove restriction. Management say, not at all. Hari bhai, Gopi bhai, tell them to remove restriction, please. Okay, Hari bhai, Gopi bhai will not remove. Now, first, if restrictions are not removed by Hari bhai, Gopi bhai, then what should I do? Discuss. If unable to obtain sufficient appropriate audit evidence is there, and the item is material but not pervasive. The item is material but not pervasive. Give which opinion? Qualified. But if item is material and pervasive, auditor withdraw. And if you are not able to withdraw, provide which opinion? Disclaimer. This is thorough answer. Yani if at any point of time you come to know that management has put the limitation on scope and the limitation on scope is material as well as pervasive and management is not removing, TCFD is not removing, what should be your answer? Withdraw. But if you are not able to withdraw, then disclaimer. Okay. Now question comes, why I will not be able to withdraw? It is the restrictions are applicable for listed company. What is the restriction? We have discussed this restriction. If you are withdrawing after the quarter, within 45 days from the end of the quarter, you need to give that quarter review report. If you are withdrawing after 45 days from the end of the quarter, you need to give the audit report for 2 quarters. One is earlier quarter and then one is next quarter. Sir, example, okay, if I take an example of June, okay, after June, 30th June, one quarter is ended. 30th June, if I am resigning by 15 July, within 15 July, I will be giving review report only for June. But if I am resigning after 15 July, okay, I need to give review report for June as well as September. Okay, if I am resigning, suppose September quarter end, I am resigning in 45 days from September end. Okay, auditor, give the September report. But if I am resigning after 45 days from the end of the September, okay, give the report for September as well as December. Sir, now after December I am resigning. You can't. You can't. If 3/4 report has been given by you, you are bound to give the audit report. That's it. You can't resign. You have restriction. Baat khatam. That's it. This is what a restriction on which entity is listed. So in listed entity, when auditor can resign, what is the restriction on auditor resignation? What is the restriction on auditor resignation? If auditor want to resign after the end of the quarter, within 45 days from the end of the quarter, he need to give the first quarter report. Don't tell first, but quarter report. Okay, if resigning after 45 days, he need to give both the quarter audit report. And he has given the review report for 3 quarters. He need to give the compulsory audit report. That's it. Are you getting the point? If this is circumstances, you can't resign, then you will give which opinion? Qualified 9. See, please understand. If you are unable to obtain sufficient appropriate audit evidence and the item is material but not pervasive, am I telling to withdraw? I am telling to withdraw? No. I am telling you qualified. When I am telling you to withdraw? Material and pervasive. Because giving a disclaimer doesn't make a sense also. And disclaimer I am saying, okay, I am not giving any opinion. You have been appointed to give an opinion and you are saying I am not giving any opinion. What is happening, boss? But I told you there may be restriction. Everybody clear? Acha, for unlisted company, is there any restriction? Not at all. But ICI says, Institute of Chartered Accountants says clearly, time is not there or resource is not there should not be the reason. If you are resigning on the ground that time is not available or resources are not available with me, okay, you will be guilty of professional misconduct. This is called grossly negligence. 7th clause in schedule 2nd shell, part 1. Institute guidelines are there, clear cut. You can't resign on the reason you don't have time, you don't have resources. But institute ke against complaint gaya, if client complains against the institute that this C has left me because he is not having a time and earlier he accepted, okay, guilty. Negligence. That's it. Institute, the client can go to the institute. Client can say, these are your CS, check it out. These are the CS which you bring out in this country. We are relying on them. Earlier they say yes, then they say no. Okay, imagine how much it hurt when somebody says yes and later on it says no. If those who understood, it's okay. They understood, it's okay. There is a life to there is a life. It's a pending life. Don't worry. There are many times when we'll understand these things. When life happens, it happens. It happens. Sometimes it says yes. Sometimes it's better to say no earlier only. It's okay. But nevertheless, jokes apart. Coming back to the point. Did you understood limitation of scope? Okay. So my question. This point is discussed when to be written in examination. If unable to obtain sufficient appropriate evidence due to management limitation of scope. My friends, is that point clear? If I am discussing unable to obtain sufficient appropriate evidence because of Ukraine and impractical situation, this point is not applicable. Help me, if Ukraine inventory is material as well as pervasive, what opinion should I give or should I withdraw? Ukraine I can't go. Ukraine inventory is material as well as pervasive. What should be done? Should I withdraw or should I give disclaimer? Disclaimer. You are not required to withdraw. Where the things need to be withdrawn? Management limitation. This is a guideline. This is confirmed point. What is the meaning of management limitation of scope? Management is not allowing us to go there. Management is not allowing us to go there. Are you getting the point? And you think logically, management may be knowing if you go there, the opinion would be adverse. Rather than getting adverse opinion, management is interested to get disclaimer of opinion. Okay, are you getting the point? Read it. 5.5. Patafat. Quickly. If management refuses to remove the limitation, the auditor shall communicate the matter to TCFG unless all of the TCFG are involved in managing the entity and determine whether it is possible to perform alternative procedure to obtain SAE. If auditor is unable to obtain If auditor is unable to obtain sufficient appropriate evidence, the auditor shall determine the implication. If it is material but not pervasive, the auditor shall qualify. Or could be both material and pervasive, the auditor shall withdraw. Or if withdrawal from audit before issuing audit report is not practicable, the disclaim the opinion. Did you understood all 3 points, Malik? I hope understood, huh? Okay. If auditor decide to withdraw, where auditor withdrawal is not permitted, this is what we have discussed already. You can read this one whenever you 45 days and other things. ICA announcement on resignation of audit. The ICA made announcement that auditor of unlisted company shall not mention professional preoccupation as the reason. I am occupied there, therefore I am not having resources, so I am not doing audit of yours. Cannot be the reason, guilty hoga. My friends, is that point clear or not? यार कैसे, how you are thanda यार, you all are thanda log यार. Okay, now some considerations, some restrictions which we will be discussing it out individually. All these concepts are individual concepts. This can come in examination for 4 marks concept. Make sure you are aware of the concept. That's it. Probably you may be going first time understanding this concept. I don't know. But these are the concepts which matters a lot when audit report. Okay, don't expect I will be getting a question. How many types of modified opinion are there? This was intermediate question which was done and dusted. Okay, yani first page of 705 is never been asked. Don't worry in CA final. CA final they will be focusing on emphasizing on this 2 page. Make sure you understand this. They will integrate this concept in 805. And if you are capable, then my worth is there. Madam, spending this 6 days will be worth. So make worth, man. You spending, me spending, it's all, both the energies are going, na? See, everything can be get back. Everything we can bring back. Everything. The lost money can be brought back. Okay. Everything. The only thing which cannot be brought back is basically time. The time which I incurred, this 40-45 hours which I incurred with you cannot be brought back again. Okay, gone, na? My life 45 hours is gone, na? Okay, even I have a ample of money also, then also 45 hours will not come back, na, this. So, make a worth of 45 hours here. And I am trying my level best. I am telling you, you check it out at your end. I am trying everything. I have explained each and every element in this 45 hours. It is I have not kept any single concept. You check it out in my main batch and this batch. The only thing is I am just going with how I told you. I go in structured way by charts and other things. But that's the only I am not doing it out. But otherwise I am explaining each and every point to make you understand. To make that worth, what we say, if the results are in favor, that will be worth, man. So now take care of this all points. First point, other consideration related to, read this point and tell me what is this. Read 5.7 and tell me what answer should be done. What concept is this? Make sure, okay, you will not give, the auditor report shall not also include unmodified opinion with respect to same financial reporting framework on single financial statement or elements. Yani this restriction is for 805. But this restriction is applicable when? Okay, same auditor is there, and first thing, second thing is it's adverse or disclaimer. If it is qualified, restriction depends on the factors. Example, suppose I am qualifying because of debtor. If I am qualifying because of debtor, I am qualifying because of, in individual also I need to qualify debtor then. But if I am qualifying because of inventory and on individual 805 engagement, I am giving opinion on debtor, I can give unmodified. But these restrictions are when 805 is, when the opinion is adverse or disclaimer. Okay. The form and content. I do think next point, read form and content of audit report when opinion is modified. When auditor modifies the audit opinion, the auditor shall use heading adverse or disclaimer as appropriate for the opinion section. Read 5.8.1, 8.2, 8.3. We have discussed all three. Special consideration for qualified. Read it. When the auditor expresses qualified opinion due to material misstatement in the financial statement, the auditor shall state that in audit opinion, except for the matter, effect of the matter described in basis for qualified. Means what? The opinion will be financial statements will be true and fair, or financial statements are in accordance with AFRF, except this is wording. Are you getting the wording, Malik? Okay, next is the same one which we have discussed, and next is also same one. If you remember, okay, what I will do in adverse, the auditor shall state that in audit opinion, because of the significance of the matter described in basis for adverse, and when auditor disclaim due to inability to obtain sufficient appropriate audit evidence, the auditor shall state that auditor does not express an opinion, state that because of significance of matter described in basis for disclaimer. Significance word is used, huh? Acha, significance word is used in which opinions? Adverse and disclaimer. Why it is used significance? Pervasive. Because of pervasive. Huh? Are significance of the matter matters. So you are not able to obtain. So see, when I am using the opinion, okay, what I will be writing, I am unable to form the opinion. I am unable to form the opinion because of significance of matter discussed in basis of disclaimer paragraph. What was the matter? I didn't got in evidence for inventory. I didn't got evidence for investment. I didn't got evidence for opening balances. This matter I will be writing, na? What evidence you don't got? Tell me. When I am saying pervasive, what evidence you didn't got? The inventory was in Ukraine. You didn't got that. The investments were somewhere else, you didn't got. You will write this, na? See, you are not giving opinion, I understood, but why you are not giving opinion? So, I am writing reasons. So, reasons will be significance. Are you getting the point? Understood, Ganesh? Nahi. Understood? Understood kya? Okay, I need to give the reason, and that reason need to be given in which part? Basis. Okay, now 2-3 things. My question is, okay, the next point comes is basis for qualified, adverse or disclaimer, whatever it may be. Okay, what they say, first is amend the heading basis for opinion to basis for qualified, basis for adverse, basis for disclaimer as appropriate. And okay, within this section include description of matter giving rise to modification. An example, within the section of basis, give the reason why you are modifying the opinion. Now the question is, says, if there is a material misstatement in financial statement that relates to narrative disclosure, the auditor shall include in basis for opinion section an explanation of how disclosure are misstated. An example, okay, what is the meaning of narrative disclosure? Any idea? If material misstatement is about narrative disclosure, what is the meaning of that? Narrative disclosure. Acha, look here. This can be first point for you. This can be second point for you. You can check it out. These 2 points very important. Third is a basic point, and fourth is last point. These are the 4 points need to be taken care. Listen carefully. We are discussing basis for opinion, which can be basis for qualified, basis for adverse, basis for disclaimer. Everybody with me? Now I am discussing if the reason, okay, I am not able to obtain, if I am saying financial statements are materially misstated, and the reason is narrative disclosure, which should be given, has not been given. Okay, not been given. Okay, I'll be writing in basis opinion that okay, the narrative disclosure is missing. Therefore, I am saying okay, the financial statements disclosure is misstated. What is misstated? Disclosure. Now read second one. This one. If there is a material misstatement of financial statement that relates to non-disclosure of information required to be disclosed, the auditor shall discuss the non-disclosure, describe the basis for opinion unless prohibited by law, include the omitted disclosure. What has been omitted disclosure? Now help me out. What is the difference between these two then? Acha, what I am discussing right now, everybody is on same line or not? I am discussing what should be written in basis for qualified opinion or basis for adverse opinion. See, first two sections. Okay, I'm highlighting the word. First two section is about this words. What is this word? Material misstatement. Means two material misstatement means which opinion can be there? Qualified or adverse. Here don't apply disclaimer. These 2 points. So if there is a material misstatement of narrative disclosure, if there is material misstatement of non-disclosure of information, means what? What is the difference between narrative disclosure and non-disclosure of information? Perfect. Okay, a basic example. Okay, suppose related party information is there in financial statement. Listen carefully what I am telling. I have done the transaction with my Sala. Okay, I sold him some goods at a lower cost, not at arm's length price. 1 lakh goods I sold him on 50,000. 50,000 amount is included in financial statement. But I have not given a detail of that transaction in notes. This is called narrative disclosure. This is called narrative disclosure. If this is a scenario, okay, you will be giving a qualified opinion or adverse, whatever you want to give. Mention in your basis for qualified or adverse opinion that disclosure. That related party transaction was of 50,000 which has not been disclosed in notes. If the item is not disclosed, means related party there 50,000 has not been mentioned in even in financial statement. That is the second point, non-disclosure. And if it is non-disclosure, make sure in your basis what you should do. Okay, first of all, okay, discuss the non-disclosure. Second, okay, describe in basis for opinion. Now this discuss the non-disclosure is with TCWG. Yeah? Remember, I should discuss this with TCWG. And after that, I should include this omitted disclosure in my basis opinion. Okay, so what is the difference between these two? Okay, related party transaction is included in financial statement but not disclosed in notes. So in my basis, I'll include related party transaction of this much amount was there which is included in financial statement, not mentioned in notes. But okay, to mention in, if it is non-disclosure, I need to mention every element of that information. The transaction is done on this day, everything. Like, and again, make sure if it is not prohibited by law and regulation, then only you can disclose this thing. Else you cannot disclose this thing. These are the two different elements. Okay, I do think everybody clear, Malik? Clear? So there are two disclosure. Acha, tell me what I am discussing right now. 5.8.4, what I am discussing? What should be included in basis for qualified adverse or disclaimer opinion? What should be included? So first point, if the material misstatement is because of narrative disclosure, I will include narrative disclosure. If material misstatement is due to non-disclosure, I'll focus on these 3 points. Now read this next point. If modification result from, so now this is applicable for which paragraph? This is applicable for which paragraph? Basis for qualified or basis for disclaimer. The auditor shall include in basis for opinion section the reasons for inability. What was the reason for inability? Example, what is the reason for inability for inventory? There is a war, impractical. There is a war in Ukraine, the inventory is there. Okay, so I am unable to go there, something like that. You will mention that in basis for qualified or disclaimer, whatever it meant. And the last point is very my favorite. Restriction. Once again, the restriction. When auditor disclaim an opinion on financial statement, the auditor report shall not include following elements. I do think that is very clear. We have discussed. What you will not give in from 700. First, a reference to the section of auditor report which describe auditor responsibility. How you can tell that my responsibility I fulfilled? Because you are giving disclaimer of opinion. Nah? And next, okay, a statement about whether evidence obtained is sufficient and appropriate. That we believe that we have obtained sufficient appropriate evidence. You will not mention that one. Nah? Because you have not obtained anything about sufficient appropriate. So what they are saying, what this paragraph is saying, Malik? What this paragraph is saying, you will be, acha, help me out. If I am giving 705, what is the content of audit report? If I am giving 705 opinion, what is the content of audit report, Malik? What is the content of audit report? Title, addressee, opinion, basis for qualified adverse disclaimer. Everything else is same, na? They say when you are giving disclaimer of, I'm discussing this, when you are giving disclaimer of opinion, keep everything same only, except two places, make sure you are modifying the wordings. What modifying the wordings? First, okay, don't write audit responsibility paragraph section 2 wala point. Section 1 can be there, okay, section 3 can be there depending on scenario, but section 2 will not come because you have not audited only. And the second, they say don't mention about, we believe that sufficient appropriate audit evidence has been obtained. I do think hopefully clear, this clarity is there. Make sure the question will be on these individual parts which are technically very important. Okay, technically very important, and make sure these things will be taken care in review again. Same scenario in review, I'll discuss with you, but in review, okay, the things will be in different angle from different person altogether. So we'll discuss that element, okay, while doing the review engagement in afternoon after the lunch. Okay, so probably now the things taking care about the matrix, we have done with matrix. Now here 705 is over. So I do think 705, everybody is confident enough to do the 705 wala point. Everybody? Okay, now the last standard which I'll be doing from here, and then I'll be holding on this chapter, and that is your 706. 710, 720 I'll be doing tomorrow along with 560. So the point which I'm discussing in this 706 is very critical. Listen carefully. 706 is EOM or OM. I don't know how many of you are aware about EOM, OM, but make sure you are having a clarity with EOM and OM very perfectly. Listen carefully. What is EOM and what is OM? First of all, understand EOM is fundamental matter for auditor to be known. Okay, OM is relevant to the auditor to be known. One is fundamental and one is relevant. One is fundamental and one is relevant. Fundamental, okay, it is related to financial statement. It is related to financial statement. Relevant, it is not related to financial statement, but it is related to auditor responsibility or auditor report. Yani anything which auditor need to highlight, about him, about his responsibility, about his report, he will mention in which paragraph? OM. Anything auditor need to highlight from financial statement, it is which paragraph? OM paragraph. Example, listen carefully. Okay, listen carefully. Take example of contingent liability. Help me out, contingent liability. Okay, so how much contingent liability? Okay, Ganesh is facing 10 crore. Contingent liability. I checked everything about contingent liability. Listen carefully. Huh? I checked everything about contingent liability and I am confident enough that 10 crore is correct. I called my expert also. Expert checked that contingent liability. I called everything has been done. Okay, contingent liability is correct. And it is written in note number 17. It is written, mentioned in note number 17. It is mentioned in note number 17. Now think logically, from shareholder point of view, many times shareholder will not see notes at all. Reason simple, he will be mainly interested in balance sheet and P&L. He will be checking in the audit report, he will be checking balance sheet, he will be checking P&L. Mainly, whenever we discuss about profit and loss account and balance sheet, it is very common P&L balance sheet. Notes is our narrations. Many times shareholders are not interested in notes. Contingent liability, it is shown perfectly correct in note number 17. But because shareholder may miss out this information, because he may not read a notes at all, it's auditor responsibility to emphasize, read note number 17. Go to note number 17, read that note. It is having contingent liability where your company is required to pay 10 crore. So right now you may be thinking the bank balance is 20 crore, but just consider this point also. If case is successful against you, the 20 crore will become 10 crore. So I'm not telling this is incorrect. I am telling this is correct. Just I want to highlight this matter to whom? Shareholder. This is called emphasis of matter. Anything about financial statement, if I need to highlight, that is done in which matter paragraph? Emphasis of matter paragraph. Anything. But make sure two conditions exist. Sir, what are the two conditions exist? First, this matter should not be ground for 705. Means what, sir? If because of this matter opinion is modified, if because of this matter opinion is modified, why are you telling shareholder to check that matter? Because you are already mentioning in which matter? Basis. So why you are going with EOM? So if there is a 705, 706 will not be there. But make it sure you are very clear. I am telling if for that particular matter, if 705 is there, 706 will not be there. It doesn't mean that in one audit report 705, 706 will not be there. 705 will be there for inventory and 706 can be there for contingent liability. But 705 and 706 both cannot be for same matter. I do think first understood this concept. And second, auditor, if you determine to mention this matter, auditor, if you determine to mention this matter as a part of 701, as a part of 701, auditor, if you determine this matter to be mentioned as a part of 701, okay, don't mention in 706. So when 706 will not come? Two cases. First, if the 705 is there or 701. Okay, 705 is there, don't put 706. If you are putting this in 701 as a key audit matter, don't put again in 706. So what are the restriction for EOM? What are the restriction for EOM? What are the restriction for EOM? 705, 701. This is the restriction of EOM. That's it. Straightforward answer. That's it. Close that point. So whenever you are having an emphasis of matter, make sure it is not, okay, it is not a part of 705, it is not a part of 701. If it is a part of 705 or 701, don't put 706. Another question come, okay, help me out with audit report. How many points are there in audit report? Title, addressee, opinion, basis of opinion. After that it was, before going concern and basis of opinion, you put EOM, emphasis of matter. So if there is an EOM paragraph in your audit report, how many points will become? 14. Technically 14, but precisely if you discuss, it will be 13 only because that 9th one is not there. Are you getting this concept, Malik? Everybody? Okay. What is the difference between EOM and OM? Okay, two main things you should be very clear. First, it is fundamental. Second, it is relevant. Second, it is related to financial statement. It is related to three things: auditor, auditor responsibility, and auditor report. Example, auditor want to resign, but he was not able to resign. He want to mention this. Example, I was about to resign, but because I already issued 3-quarter review report, I am not able to resign. I need to mention this to shareholder. Shareholder, I was about to resign, but because I have issued the 3 report, I am not resigning because of laws and regulation. I will write in which paragraph? Oh, other matter. Some law and regulation is telling me to report something. I will be mentioning in which paragraph? Other matter paragraph. Okay, SPF. SPF full form? Special Purpose Framework. Special Purpose Framework report will be given to everyone or only specific users? Where you will write that this report is only for specific users? Title, addressee will be there. But addressee will be there. I know addressee will be there. Example, addressee will be there. But this report should not be used by other than addressee. This report is not meant for other than addressee. This report is only for Germany company. This should not be used by Indian shareholders. Okay, where you will write this one? Other matter paragraph. Other matter paragraph will be mentioning this one. I hope everybody clear this point. Understood or not understood? Everybody clear? So what is exactly difference between, how you will come to know EOM and OM? If it is financial statement, anything related to financial statement, EOM. And other than financial statement, OM. So can you help me out? What is the restriction on EOM? 705 and 701. So can anybody help me out? What is the restriction on OM? Will there be 705? Not at all, because this is nothing to do with financial statement. Okay, 705 come only if there is a impact of financial statement. So if you have any discussion because of 705, Okay, you are not putting in OM. This will never happen because in OM, which matter I am discussing? Which is nothing to do with financial statement. And what is the ground for modification? Okay, when I need to modify in 705, okay, it is ground is financial statement or other than financial statement. If we are not nothing including anything about financial statement, why 705 restriction will come? So sir, you can't say yes. If 705 is there, don't put OM. Okay, because in OM I am not mentioning that matter only, na. I am mentioning in OM what I am mentioning. Which matter I am mentioning in OM? Auditor, auditor responsibility, audit report. I am not mentioning anything else than that. So therefore, don't ever write in OM the restriction of 705. But in OM, you will mention 701. 701 is there. If any matter you have emphasized in 701, if you have explained in 701 key audit matter, you will not mention in other matter. Example, auditor has checked key audit matter. Acha, in 701, what do we write? Tell me. Okay, responses. So here, can I mention about my responsibility responses I have done? In OM, can I give my responsibility also? So I may write that I have done this responses and other things. But if this is already mentioned in key audit matter 701, I am not required to mention here. Okay, so when OM will not come? 701, and second will be if law regulation prohibit. If law regulation prohibit. Okay, 701 OM will not come. So my question, when EOM will not come? 705 and 701. When OM will not come? 701 and law regulation. That's it. This is what an answer to be focused on. Everybody clear? UM and OM? Okay, sir, OM can come in which paragraph number? Title, addressee, opinion, basis for opinion. Going concern, EOM if any, then can be OM, other matter. Even some auditor may put this matter not in a separate paragraph. They can include this matter in 10th paragraph also. 10th paragraph, if you remember, other reporting responsibility. So some auditor may prefer to not mention other matter as a separate section. They may mention in which? Other reporting responsibility. Whose choice it is? Auditor. That's it. 706 we have done. This is 706. Okay, 2-3 things I'll update you, but 706 is very damn easy. But make sure you are clearly distinguishing, making distinction, okay, between EOM and OM. So EOM, first point, EOM, fundamental to the users, relevant to the users. Okay, fundamental to user understanding is this A point. Fundamental to user understanding of financial statement is EOM. Relevant to the user understanding of audit, auditor responsibility and audit report is OM. Understood or not? Okay. When to give EOM in audit report? Okay. This is the fundamental user understanding. The auditor shall include EOM in audit report provided. Provided means proviso. What is the proviso? The auditor would not be required to modify, and 70 applies. Okay. So auditor has not determined as K audit matter. And my question, when 706 EOM will not come? Okay, is everybody clear? When auditor includes EOM paragraph, 3 things he will take care. First, include the paragraph within a separate section. Okay, I told you separate section will be para number 5. Okay, second, include a paragraph with clear reference. What is the clear reference? No, clear reference. Heading is first point. Clear reference, refer note number 17. Tell him to refer where? First is appropriate heading. Second is clear reference. Clear reference means what? Refer to note 17. Understood? And last point, indicate that auditor opinion is not modified. 3 point EOM. Only I am highlighting, not modifying. Only I am highlighting, but not modifying. Bharat Mata ki jai. Everybody clear, Malik? And when to issue OM paragraph in other report. Okay, as I told you, when okay, unless until law regulation prohibit and 701 does not come into picture. So Bharat Mata ki jai. Okay. Then after this, there are 2-point paragraph. You can just read it out whenever you require. What is the difference between notes to accounts and qualification? This is what I discussed while qualification also. And difference between audit report and certificate. Audit report is basically giving an opinion. Certificate is basically okay mentioning whatever the given information is true or not. whenever we are giving a true certify, true certify, a CA does true certify. Okay, that is the scenario. So nevertheless, this certificate point will be discussing again in Code of Ethics tomorrow. So if just a reading process, you can do this here or you can do in Code of Ethics, doesn't matter. Okay. Okay, should we discuss, should we communicate this 705, whichever audit report is with TCWG? Yes. Okay. Just here 9 point is coming, communication to management and TCWG. This 9 point, if you go with the module, you will find SA 260 once again here. So I have deleted complete portion of SA 260 here. Why? We have covered 260 where? We have already covered this 260 in chapter 2. So if you refer main book, okay, or module, you will come to know here is again TCWG concept has been given, repeated. So you ignore that. Okay, I have ignored that because this is what we have covered where? Chapter 2. It has been completely same, repetitive. And I didn't got the logic also. Why? What was the logic of repeating the same thing again, same narration? If you remember yesterday we discussed what are the matters to be communicated. First, plan, scope and timing. Second was, first was responsibility. Second is scope and timing. And third was significant findings. And remember there in case of listed entity, I will also discuss about independence. 4 points. That has been communication with TCWG. So ignore this one. Okay. And 10th and other things. 10th is basically 710. And then next will be 720, which we will discuss later on. Okay. This is the structure which we need to focus on chapter 7. And here the chapter 7th ends. So the chapter 7th, 710, 720, I will be covering along with 560. And one more point section on chapter 7th will be section 143 and CARO. I'll update you with respect to your online point. It is a basic structure. You can just read it out. Closely out. Okay, even if you require to do this reading, I'll just share that link, one online point link on 143, just 143, section 143, powers and duties of auditors. What we discussed, if you remember, what are the things to be reported by auditor? So two things. Okay, sir, are those not important? Answer is yes, it is important. But if I got time, I'll cover here. Other you can refer the lecture of that particular point. I'll mention this one when day after tomorrow. How to refer this one. Okay, section 143 and CARO. So two things will be there in chapter 7. So before going on next, just make sure whatever chapter 7th we are discussing right now, this is a base, okay, so towards all other standard. Now, okay, my series of other standards goes like this. First of all, clear structure I am preparing. So make sure you are understanding clear structure. Now I am going with SA 800, 805 and 810. We have already discussed what is 800, 805 and 810 on day 1. I told you what is 800. What is 800 beta? SPF. What is 805? Single financial statement or single element. And 810 is nothing but summary financial statement. I need to be very clear what are the things which are covered here and what are the things not covered here. But before going on this, please clear this agenda. Everyone here, I told you, now this session, whatever goes on, I'm betting you, it will be approximately minimum, bare minimum, 14 to 15 marks, 15 to 16 marks minimum. Today's session, okay, this is chapter 8, there will be chapter 9, 10 and 11. These are the 4 chapters, stands very important, very important. There are 2 reasons behind it. First reason, basically, these are newly inserted chapter. And second reason, okay, is basically these are different standard altogether, not linked with audit. Now, approximately, in all combined, okay, whatever pages you focus on, I'm not worried about pages, I'm worried about the concept. So, first of all, please listen carefully. In every engagement, in every standard actually, listen carefully first of all. In every standard, okay, acha, what are the other standards we are pending? This is SA. This is which framework beta? Special purpose. Then we will be covering SRS. Second session. SRS. Services. Then we will be covering SRE. SRE full form, standards on review engagement. Then we will be covering SAE, standards on assurance engagement. These are the 4 sequences which we will be covering today. Okay, now please understand, whatever you cover here, these are separate standard framework altogether. Every standard, example, here you have 2 standard, here you have total 2 standard, here you have 3 standards. and here we are covering 3 standards. So technically today's list 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 standards ka list is there, and 11 will be 402. So we'll be covering 11 standards as such. So technically speaking, when we are discussing about all these 11 standards, please first of all, okay, except 402, leave 402. In 10 standards which is on the screen, everybody should have same protocol. So what we are learning, in every standard, we'll be focusing on 3 things, beta. What are the 3 things? Please be ready to understand this very correctly. Help me out on day 1. Okay, had I explained you this all list? Had I explained you all this list? Okay, I explained you this all standard auditing list or not? Okay, on day 1 I explained you, na? So exactly what I explained you, okay, I explained you a long list, but technically speaking, I explained you how we should accept the engagement, how should you plan and perform the engagement, and how should you report the engagement. Okay, so help me out. Okay, so engagement acceptance, if you are aware, we can understand 200, 210, accepting the terms of engagement, 220, acceptance and continuance. Planning and performing, we can discuss 300, 315, 330, 450. And reporting, which we have discussed yesterday and today, 700 series. Sir, 500 series, planning and performing. Technically, in every engagement, in every audit, we have discussed this. The only difference in audit was, this all will be having a detailed standards. Example, for planning and performing, we have 300, 315, 330, 450, 500, 501, 550, 520, 530, 505. All this planning and performing. In reporting, 700, 705, 701, 706, 710. Okay, this will be 210, 220. This everything. But once we enter into these engagements have this all thing in one standard itself. Yani my question, whenever I am discussing, now you discuss about any standard, SRE, SRS, SA general purpose framework, every standard will have 3 charts. What are the 3 charts? First, we will discuss how to accept the engagement. Second, we will discuss how to plan and perform the engagement. And third, we will discuss how to report. So make sure, okay, my question, how many questions we will be doing in each standard? 3. What are 3? Engagement acceptance, planning and performing, and reporting. Now it doesn't mean there will be having only 3 questions. Example, in engagement acceptance, their standard, some standard may say, before accepting, okay, accepting and continuing, what factors should be taken? Terms can be there. Are you getting the point? There may be multiple questions. In planning performing, there will be multiple planning performing element. But what I want to tell you is, what is the structure of all engagement? Structure of all engagement will start from engagement acceptance, then planning and performing, and then reporting. I do think you are understanding the point. Okay, to be very precise, when we start with 800, 805, you are not required to remember reporting, because they will be saying the report will be in the same format of 700. But 810, okay, I will discuss with you, or review or related services, everything will have a separate report altogether. So you need to remember the reports. You need to remember the reports. Every standard you will be going with remembering the reports. There will be points to be remembered, and summarized version I have given to you. Just remember it out thoroughly. Base will be ready. I am telling you, base will be ready. I am making clear about the base, but just you need to do somewhat hard work. After the lectures, today's lecture, definitely, okay, so I can tell you, whatever our discussion comes, you just need to polish yourself. It is not making clear-cut agenda. Matlab, you are not required to perform everything in detail, but you just need to polish yourself. Polish yourself. I bet you will be in the best position for this all standards. If possible, sit today only. Go home, revise. Okay, sitting here, whatever with you, revise today in a nutshell. It may happen that you may be having a cumbersome time, but revise it, complete it out. Okay, because this standards will be going in this way, and these are told LDR. Or if not possible, tomorrow and day after tomorrow, 2 days lecture are there. After, hopefully I'm looking out, you may be having off for 1 day at least. In that 1 day, you close first on priority basis or today's lecture. on priority basis. Okay, once that is done, okay, you are in a control position, that for sure. So to be very precise, okay, we are starting with your next chapter, that is chapter 8, which is called which framework, beta? Special purpose framework, specialized area. And you have how many standards? 3 standards. Let close 3 standards: 800, 805, 810. So let's start with your 800 first. Okay, so technically we are starting with 800. Looking out the page, if you come to know, 800 is only one page engagement. Why? Because 800 is everything going where? Okay, no, 800 going to 210. No, link with 210 nahi hai, boss. No. Acceptance 800, but doing the audit and reporting is other standards. That therefore, so 800 does not have a blunder, but in examination it will not come direct question. In examination, the question will be in the format of case study. So you need to listen, you need to analyze. Even if it is one page, even if it is closed in next 10 minutes, you need to understand the application wise. If you don't understand that, okay, I don't think so this batch will be, then I can help it out more of them. Because, okay, I am not here to only read that content or head point. Reading that head point is ratifying that head point, which can be done in marathon. But please make sure you understand very clearly with 800. So let's start with 800 first, then I'll go to 805. First of all, starting with 800, what 800 questions focus on? First of all, please understand, 800 says, what is a special purpose framework? Read this special purpose framework. Gradually, go slowly. Read this special purpose framework. 800 defines special purpose framework as financial reporting framework designed to meet financial information needs of specific users. What is the difference between specific users and general purpose framework? A general purpose framework and special purpose framework difference. If it is used by everyone in industry, it is called general purpose. If it is used only by you, special, because the need will be only specific users. So first of all, special purpose framework is a framework which is meeting for only specific users. So first, what it says? It says, what are the consideration when accepting the engagement? Listen carefully. Don't ever write 210. So what are the consideration for accepting such engagement? It says, for accepting such kind of engagement, you need to understand who told that special purpose framework is applicable to us. Who told to you special purpose framework is applicable to us? Who told special purpose framework is applicable to client? It is management. Except, okay, see, understand, if you are saying, if my client is saying that Indies is applicable, okay, I will come to know Indies is applicable because law is telling, na? But German gap is applicable. Who is telling? Law is telling or management is telling? Okay, who is telling? Law or management? Who is telling? Management. So determine whether the framework is acceptable as per management or not. Here, okay, when you are accepting the engagement in SPF, whenever you are accepting the engagement in SPF, make sure that you have in writing that German gap is acceptable from the management point of view. Okay, you are not required to determine whether it is acceptable or not, because it is not general purpose framework. It is special purpose framework. So what exactly we are doing in special purpose framework engagement? In acceptance, we say, management, you agree that it is accepted. This framework is acceptable for you. I am not the person who is telling this is framework is applicable to you. Who is telling this is applicable to you? Acha. Okay. Special purpose framework logic. What is meaning of special purpose framework? Acha. I gave you 2-3 example. If you remember special purpose framework ka example. First example. Okay. First example. If you remember German gap. Second example, I told some bank wala is asking the framework. Bank is saying, please prepare the financial statement in accordance to LIFO. You may be using FIFO. Bank is saying to prepare in FIFO. Now you are preparing financial statement for bank. So my question, okay, you are approaching Amit Ater. You are saying, Amit Ater, okay, I want this financial statement. I have prepared this one. I want this financial statement to be audited. I told I will audit it out. No worry. But I will audit in accordance with which framework? He is saying this is a framework of bank. Or this is a German gap. This is a framework of contract. Who is telling me what is a framework? Management. So I want an agreement that he is telling it is acceptable. What if I complete the engagement and later on he says this framework was not acceptable by me? Tomorrow he may say this framework is not acceptable, I will not pay money. Who is responsible for all these things? So before accepting the engagement, determine, okay, only consideration you need to take care. The only consideration you need to take care, in case of special purpose framework, the financial statement need of intended users are the key factor in determining acceptability of financial reporting framework applied in preparation of financial statement. Yani check with management the need of the user of this report. Determine the need for this framework. Determine that. If that need is acceptable for you, go ahead with this. If need is not acceptable, don't go. Example, he is coming to me, or Ganesh is coming to me and saying, my financial statements are in accordance with German GAAP. I will ask, why you are preparing with German GAAP? What communication he has done? That he is a subsidiary. So now he need to share this information with the holding company. Okay, I just need to understand the need. And if need is acceptable, then accept. If need is not acceptable, then do not accept. That's it. That's your first question. That is the main question to focus on. So 800 standard, 800 standard, what it says? 800 says, whenever you are focusing on SPF framework, determine what? Need. Determine the need of intended users. Determine the need of intended users. That's it. This is what you will determine. That's it. No other things you should check. Sir, so whenever it is GPF, go in 210. Whenever it is SPF, come in 800. Determine the need. Ask the need. Why you need to prepare this? Okay, for bank loan. Why you need to prepare this? Okay, for subsidiary. Why you need to prepare this? Okay, if need is okay with you, go ahead. Now second, okay, what are the things you will do in planning and performing such audits? First of all, remember, while planning and performing this audit, okay, they say you need to comply with SA 200. Okay, what is SA 200? Read that SA 200. SA 200 requires auditor to comply with relevant ethical requirement, including those pertaining to independence, relating to financial statement, audit engagement, and all essays relevant to audit should be complied. So even in special purpose framework engagement, you need to comply with SA 200. You need to comply with, and what SA 200 is saying, okay, ensure ethical requirement and independence is met, and you comply with all standards which are relevant. All standards which are relevant. Comply with all standards which are relevant. Yani my question is, which standard you will follow while doing this audit? Which standard you will follow while doing this audit? All standards which are relevant. Example, if I need to check the data, okay, as per German GAAP, I'll following this standard. 505 for confirmation. I follow that standard only. Why? Because I need to follow with SA 200. So SA 200 says relevant standard. But 800 says there should be some consideration. What is the consideration? They say there is a problem with 320. There can be a problem with 260. There can be a problem with 320 and 260. What is the problem with 320 and 260? See, understand, when we are discussing about 320 is materiality. Now tell me, this financial statement was prepared for whom? Everyone or specific users? So here, management may agree with you. Management may say to you, Ganesh may come and Ganesh may say you that Amit, see, if any material misstatement is there due to error or something which we are taking care of it, and it is about 1 crore, we will not rectifying, because for us this is not material. Or other way around, Ganesh is saying, because this report is prepared to bank, I am checking only, I am very concerned with inventory because I am taking loan against inventory. I am taking loan against, and they want complete financial statement to be audited. So inventory I am preparing now in LIFO basis. So for me only inventory is material. For me other item are not material. So 800 suggests it may happen in special purpose framework. Management may say you there are something which may be material for management and something which may not be material. But you are not required to get influenced by management. You apply your own materiality. Okay, tell me, when we are doing the audit of general purpose framework, can management may say I am interested only in 3 item, 20 item? No, because that report is given to a shareholder, na? But what if the report is given to only specific user? The management may be interested only in That specific item which is where the particular specific user is interested, na? Did you understood? So what 800 suggests? 800 suggests you will apply materiality as per SA 320 only. Don't influence by management. Okay, read this. The existence of threshold does not relieve auditor from the requirement to determine materiality in accordance with 320 for the purpose of planning and performing the audit further. Did you got this point? Yani even management is giving threshold limit. Even management is saying I'll not take care about this amount. Even if management is saying this particular item is not concerned to me, then also you will be using 320. And here the biggest problem is 260. What is 260? Upar 260. Upar wala 260. TCWG. The question is, in special purpose framework, who is TCWG? How? Why bank loan is concerned with board of directors? Okay, they are the person who is focusing on bank loan every day. Okay, that is the biggest problem in this framework. Discuss with the person who is appointing you and ask who will be taking care of matter of TCWG. The TCWG of general purpose framework may be, okay, Raju Bhai and Gopi Bhai. But here for bank loan, okay, Raju Bhai, Gopi Bhai is not interested at all. Bank loan is day-to-day activity. Let that management deal. Now, why you are coming with this bank loan ka report? This matter, this information is not given to me. So I am not telling that TCFG of 260 or general purpose framework will be same here. It may be same, it may not be same. You should discuss with whom? Okay, appropriate management requires auditor to determine appropriate person within the entity's governance structure with whom to communicate. Here it cannot be board of director always. Again I am telling you, it cannot be board of director always. Can it be board of director? Yes, but there is always, you can't go to board of director every time here. I hope you understood. So in examination, okay, what should be your answer? Please listen carefully, and this is very important, Malik. Listen carefully. I am not worried about what to read here, sir. What is to be remembered? Nothing. But what to be written is actually you should understand. Okay, Ganesh is preparing the financial statement in accordance with German GAAP. Ganesh is preparing financial statement in accordance with UK GAAP. Ganesh is preparing financial statement in accordance with bank loan requirement. The Ganesh coming and make sure when I am saying bank loan requirement, if Ganesh is preparing PFI projected, this is not special purpose, then it is SAE. Why? Because on projected financial statement you cannot do audit. You can do audit only for historical. So make it sure, okay, don't get influenced by bank loan always. If bank loan come in question, check it out whether we are giving HFI or PFI. And HFI, if we are giving about bank loan, is about a special purpose requirement as per bank, then the things will change. Then you come to 800. Now suppose Ganesh is saying that bank loan he required, and he required to have a framework which is given by bank. What Amit Tated should do in this case? How Amit Tated should perform this audit? They will be writing 3 things. While performing the audit of the bank loan, okay, it is called a special purpose framework audit. Okay, standards 800 is applicable here. While applying standard 800, Amit Tated should do the planning and performing of audit. Amit Tated should ensure that he should comply with SA 200. SA 200 says that Amit Tated should be ethically complying, ethical requirement and independence. Along with ethical requirement and independence, Amit Tated should also comply with all standards relevant to the audit. But while applying all standards relevant to audit, 2 standards should be specifically taken care of. One is SA 320 and one is SA 260. In 320, okay, whatever if management determines there is a threshold limit by which they will not modify, they will not rectify anything. Okay, Amit Tated should not get influenced by that limit. Amit Tated should apply his own judgment by following 320. And as per 260, okay, who will be TCWG in this case of engagement? Amit Tated should discuss with management. This is a narration. You need to write this, but how you need to write this is what you should understand now. And don't, you may be saying, okay, once again, we are repeating the same thing. Don't debate. Okay, this is what expected by ICA. That's it. This is what you need to write a polished one, Malik. I don't think everybody clear? Yes or no? Acha, okay, while accepting such kind of engagement, what Amitabh should take care? Amitabh should check whether the need, he should determine the need of intended users. That's it. So need for intended users, this is your first question. First question. This is your second question which we have discussed. And third question is basically, I do think very, very clear. Okay, forming an opinion. We have discussed this. While forming an opinion, you should comply with 700. Everybody clear? But the problem is when you write 700, the problem will be this report can be go anywhere. Don't you think you should alert the user? This should not be used for other purpose. This report, audit report should not be used for other purpose. This audit report is only for bank, HDC bank. Now, Markasam, this audit report is given to shareholder for IPO, FPO. Should not be used for other purpose. And that's exactly what you should understand. Okay, description of AFRF. In case of auditor's report on special purpose framework statement, describe the purpose for which financial statements are prepared, and management responsibility for financial statement shall also make a reference that responsibility for determining that AFRF is acceptable. Acha, who will tell it is acceptable? Management. I am not required to determine whether it is acceptable or not, because there is no law only. Acha, help me out. If I go with GPF, okay, whether the company require Ind AS or company require AS, how will I come to know? We have section 133, Companies Act section 133. We'll come to know that list where which companies are required to follow which standards. So am I required to ask management whether it is acceptable, or I should check with law? Then 210, SA 210. Whenever you go home, read old book, Inter, SA 210. Determine whether AFRF is acceptable. Not to management, to you. Determine whether AFRF management is following is as per law or not. Determine this one, if it is acceptable or not. Okay, so I do think everybody clear till here? Everybody? And second, they say, logically, now here in 800 series, who will tell that AFRF is acceptable? Management, because there is no law. So you are not required to determine whether it is acceptable. You should ensure management is saying that it is acceptable to them. Who should tell that it is acceptable to them? Management. In GPF, who should determine whether it is acceptable? Auditor. This is the difference. And I do think you need to alert the readers that financial statements are prepared in accordance with. Are you required to alert them? Yes. And this report should be used to everyone or restricted use? Restriction on distribution or use. Okay. And this 2 point you will be inserting which paragraph? 2.5 and 2.6 you will be inserting in OM. OM as per 706. Okay, if you remember other auditor, audit report, audit responsibility, audit report. Mainly this audit report is not for everyone. This audit report to be used only for bank. That's it. No other purpose should be there. This should not be shared with anyone. This should be mentioned in audit report clearly. Under which paragraph? Other matter paragraph. Bharat Mata ki Jai. Everybody clear till here? Yes or no, Malik? Yeah, I'm not getting a confidence on you, man. Pakka. Pakka na? Think you Arthamaindya? Clear? Arthamaindya, Arthamaindya. So, third man. Okay, so keeping this mind, if you go ahead, now the next concept comes is 805. 805, okay, we'll do 805 and then we'll take a break and then we'll start 810 because 810 requires a separate mindset altogether. Okay, so before going on 810, okay, 805, read the name of 805 first. Read the name of 805. Okay, special consideration audit of. Special consideration audit of. I want name, Ray. Single financial statements and specific elements, accounts or items of financial statement. My first question, what is a single financial statement? Written there, read that. What is single financial statement? Cash flow is single financial statement. So what can be a single financial statement? Only balance sheet, only P&L, only cash flow, only notes. These are single financial statement. Yani how many? Acha, financial statement comprises of how many things? Okay, keep it only one. Keep it only one. That is called single financial statement. Pardon? Stock audit? No. A stock audit. Stock audit, inventory. You want an opinion on inventory? Yes, 805. But I was thinking you are telling stock audit single financial statement. Yeah, stock audit is not single financial statement. First, my question, ekdam aaram se, tell me, what is single financial statement? Anyone. Okay, now you may ask me, sir, why management will come and only take opinion on one statement? Example, cash flow statement. Okay, for giving some report to somebody. Again, you need to understand this report is not given to everyone. It is report given to only specific users. See, 800 is only for specific users only. So this report may be given to specific users. So you are coming to me and saying audit cash flow statement, give it to me. I'll give the audit report to them, and accordingly we can whatever your objective is there you can achieve. This is single financial statement. What is a element in financial statement? If I say element, accounts or items, what does it mean? It can be trade receivable, it can be cash, it can be bank. Assertion, individual item. Give me a confidence on related party transaction. Okay, this is what you need to understand here when we are discussing on this point. So help me out. Okay, first of all, did you understood what is the logic of 3.1 and 3.2 or not? What is single financial statement? What is single financial statement? What is single financial statement? It can be one of the financial statement. What is single item accounts? Any individual item assertion. Everybody clear? Okay. Before starting this, okay. First of all, make sure we are focusing on this application of SAE. Means whether we should accept such kind of engagement or not. Second, okay, 3.1 and 3.2. This is acceptability. Did you understood this? We'll discuss it out. Then we'll focus on planning and performing. Okay, planning and performing, not at all worry. Why? Because it goes with the same logic. What is that logic? Use SAE 200. And what SAE 200 says? What SAE 200 says? Ethical requirement and comply with all standards. So here also, whichever standard which are relevant, comply. Again, relevant standard. Suppose you are doing the audit of data. Will I use 505? Yes or no? Pakka? Okay, but will I use 550? Data's related party? Yes, because depending on scenario. Are you getting the point? Data's ka point. So technically you need to understand whichever comes into relevance, you will be using that. Okay, 250? Not required. Laws and regulation is not required with respect to data. So exactly you decide which are relevant, you use that. So again in planning, okay, we are not required to worry. So don't worry about planning. Here the problem comes is opinion. And here there will be a blunder, forming an opinion, reporting consideration. This is exactly the next 2 pages, which will be an opinion worst for us and need to taken care by you, everyone. Okay, so first of all, just I am telling you certain basic things. What is the basic thing, sir? First of all, please understand. If Amit Tated is taking SAE 210 engagement, okay, Amit Tated is taking SAE 210 engagement, Amit Tated can be auditor in SAE 800 also. What does it mean? What does it mean? What does it mean? I am also an auditor of GPF. I am also an auditor of SPF. I don't think everybody clear till here. Okay. Can it happen like this also? That SAE 210 Amit Tated is doing and 800 is done by PwC. Can it be possible? Yes. Same situation happens with 805 also. But 805 need to think broadly. Make sure you understand this broadly. Please listen carefully. And I am going very slowly. I am not in that revision format. I am going very slowly. If Amit Tated is 210 auditor, okay, can Amit Tated be 805 auditor also? Yes, no problem. If Amit Tated is 210 auditor, okay, can PwC be 805 auditor? Okay, answer is yes. No problem. No problem. But along with it, what I am saying, please listen carefully for this 805 point. Additionally, I am saying if Amit Tated is auditor for 210 or 800, understand? I can be auditor for 210 also. I can be auditor for, okay, in either of the framework, 805 may be applicable. Example, if I am having a financial statement which is of Ind AS and I am coming to you and saying in this financial statement do the data audit. So you are the auditor of 210 also and 805 also. Clear? I am giving a financial statement of German GAAP. You are the auditor of German GAAP. And I am telling in this financial statement, I want data of German GAAP calculation as separate audit. Okay, so it is 800 audit and 805. So make it sure when I'm into 805, I need to consider, okay, who can be the auditor of complete financial statement under 210 or 800. It can be either of it. And this engagement can be either of it. Okay, here please listen carefully. Here 210 or 800 auditor can be Amit Tated and 805 auditor can be PwC. It can be either of it. So what we need to discuss is, our discussion stands here is, ekdam aaram se listen carefully, ekdam clearly understand this concept very clearly. See, if I am telling you, okay, I want to do the data audit. If I'm telling you, I want to do the data audit. If I'm telling you, I want to do the data audit. Did you understand this situation? Everybody? Now I'm coming to you and I'm telling you data audit. Please do the data audit. Think logically and technically. Okay. When I say data audit, okay, I'm telling data is 10 crore. Do this audit. Okay. To do this audit, the information, this particular audit is of part. The audit is this audit is of 805 na. Okay, this is data na, matlab 805 na. The audit is of 805, yani the audit is of part. The audit is of part. But to do this audit, I require information in full. Understand this logic. Do the audit of part, I require information in full. Please listen carefully, understand this logic. My question, to do the data audit, does I require sales information? Okay, understand this what engagement acceptance should be there. Yani I am doing the data audit and I am asking the sales information. You may say, oh bhai, I told you to do data audit, do data audit. Don't ask other information. This is exactly what, understood? Are you getting the point? Now this is concerned for which auditor? Understand. This is concerned for which type? First situation or second situation? Second, not in first. Why? Because in main engagement only you are giving access to everything, na? In main engagement you are giving access to everything, na beta? But in second audit, the PwC will be coming and doing the audit of only datas. Now for doing the audit of datas, help me out, engagement acceptance. Do you think PwC should directly accept the engagement for datas or should focus on some considerations? What consideration? For datas, we require information in full. Okay, please understand this. And yani, okay, please understand, I'll be doing the audit of data, but actually I'll be doing the audit of many other element also. Getting or not getting? Okay, if PwC comes here and do this engagement, PwC should discuss this, whether this is feasible or not. Do the audit of data, I require other data, I will be doing the audit of others also. I can't conclude only on data. I require to do the audit of others, then I can conclude on data. And if management says no, you need to understand, discuss, do not accept the engagement, discuss with management, other engagement is possible or not, other type of engagement. This may shift in other engagement also. Okay, rather than doing this, perform audit, complete audit. Perform complete audit. And if you are having a complete auditor, do this engagement with other auditor then, rather than doing with me. This is what problem when the second situation comes. Okay, I do think everybody clear? नहीं यार, understood or not? ठीक है. Okay. So sir, in first situation, is this problem arise? No, but first situation has its own problem. Sir, what is its own problem? First, okay, because you need to understand, Amit is auditor of financial statement also, and he will be auditor of single, okay, single financial statement or element. Everybody clear? Listen carefully. Without this example, I'll just completing a theory. In next 5 minutes, I'll be closing this concept and I'll just reading a theory. If you understood this concept, then only your theory will be logically applied. So, bhai sahab, what it suggests? Amit Adir accepting this engagement? No problem for Amit Adir. Amit Adir is happy, but Amit Adir have restriction on reporting. And what restriction on reporting? We have discussed 1 hour back. Okay, first, if Amit Adir giving unmodified in financial statement, no restriction. You can give anything for data, you can give anything for cash flow. But Amit Adir giving modify. Now modify mein how many opinion were there? Modify mein 3. What are the 3 opinion? Qualified, adverse, disclaimer. Let's discuss first qualified. If Amit Adir is giving qualified, okay, restriction is deemed appropriate. What I'm saying? Deemed appropriate opinion should be given. What I'm saying? What opinion should be given? Deemed appropriate opinion. Sir, what is the meaning of deemed appropriate? Example, if qualification is because of inventory and I'm doing data's audit, I can give unmodified. See, if I need to modify, that is a different element. I can give unmodified. But if qualification reason was datas, you need to modify only. Baat khatam. This is a restriction which need to be taken care. I do think everybody understood. Are yes or no? Pakka. This is a reporting. What discussion we are doing right now? Opinion reporting restriction on 805. And the examination question will be only on this individual concepts. Okay, now here the matter does not get over. The matter goes ahead with the third point. The third point, if I modify adverse, okay, the discussion says what should be done. I told you this, if you remember, if we discussed in 705, if you are giving adverse in a complete financial statement, you cannot give unmodified in single financial statement. Everybody clear? But again, this 805 gives some relaxation. Listen carefully. Now I am discussing here 2 points. One is for item and one is for single financial statement. One item, example for debtors, 805 says you can give unmodified. You can give unmodified if 3 conditions are satisfied. What are the 3 conditions satisfied? First condition when I am discussing this point, adverse may, first condition, okay, while giving an adverse, okay, you will not publish both the report together. You will not publish both the report together. You will not publish both the report together. Huh? Both the report together will not be published. Means what? You are giving 800 ka, 700 ka report also, and you are giving 805 ka report together cannot be published. Yani one I am saying adverse and the other I am saying good. For debtors cannot be done. The report should not be published together. Second, the data should not be a substantial portion. Data should not be a substantial portion. Are you getting the point? Any data, okay, if the balance sheet is of 220 crore, the data is hardly 50 lakhs. The amount is very small, 20 lakhs, 10 lakhs, something like that. Then you can give unmodified for data. And third, law regulation does not prohibit. Law regulation does not prohibit, okay, to give or publish the report together. My question, if I am an auditor of complete financial statement and I am giving adverse opinion, what can I give, okay, on individual item unmodified opinion? Answer is yes, as per 805, if 3 conditions are satisfied. First, you are not publishing report together. Second, you are not giving the individual item is not a substantial portion and law regulation does not prohibit. And for single financial statement like cash flow or P&L or anything, Okay, prohibition. You cannot give unmodified for this one. You cannot give. Everybody clear? This is for adverse. I do think you understood all 3 points we have discussed. First, if unmodified is there, you can give anything. If modified is there and if it is qualified, restriction we discussed. Deemed appropriate. If adverse is there, okay, for data you can give unmodified, and for financial statement, single financial statement, you cannot give unmodified. You need to give modified only, adverse only. Baat khatam. Compulsion by 805. I am not discussing whether this will happen or not. I am telling you this should happen. I am not discussing whether this will happen or not. I am telling you this should happen. Am I clear? Okay, and last point, fourth point. What if I am giving DO? What is DO? Disclaimer. Okay, they say either it is item or it is single financial statement. Check it out. Okay, check it out whether DO reason is that particular reason only. If reason is the same, you are bound to give. If reason is same, okay, which you are doing the audit, you are bound to give disclaimer only. But if reason is not same, you can have the separate opinion. Example, suppose you are giving disclaimer of, when we will give disclaimer? Today morning we discussed. Okay, unable to obtain and the item is material and pervasive. Now suppose that pervasiveness was about cash flow only. Okay, now you will not be giving opinion on cash flow as unmodified, na? But suppose pervasiveness was some different element which is nothing to do with cash flow. But pervasiveness was about inventory, something which is nothing to do with cash flow. Inventory counting. Example, you are not able to go to Ukraine. 25 crore inventory is there. Okay, 25 crore out of 30 crore balance sheet. Okay, cash flow, don't worry. Okay, you give opinion, you can give opinion. But again, you need to check disclaimer ke liye what is the reason. So you can give this one. For adverse, you cannot give only. For their adverse, you cannot give. For individual item, if these three conditions are met, you can give unmodified. Disclaimer, check the reason. If the reason is similar, you can give. If reason, you cannot give. If reason is not same, you can give. This all condition is applicable to PwC or Amit Tateda. Make it clear. Ye point agenda rako. That's the only explanation which is required in 805. That's it. Sir, for PwC, is this restriction applicable? Why? Okay, PwC has not done this, Nare. So there is no restriction. What you have done? But PwC, other problem is, so if PwC is there, the problem is with acceptance. And if the same auditor is there, the problem is on reporting. So you have a discussion main on reporting opinion. Therefore, you have 2-page on opinion discussion. But I do think everybody clear with opinion. Sir, reporting format 700. Everything is 700. Reporting format is 700. Everybody clear? Let's start. I hope you understood the concept what I have discussed. Let's close fast. First, okay, consideration of accepting the engagement. Tell me, while accepting the engagement, what is the consideration? First point. SA 200 requires auditor to comply with auditor need further evidence to corroborate audit evidence required for accounting record. Can you example? Okay, you can't give opinion only on data by checking data. Okay, you require the other information to corroborate. Are you getting? So it means the PwC. Now this is applicable to whom? PwC. Same auditor. Same auditor. No worry, Nare. Same auditor will have access to everything. See, understand, same auditor have already done the engagement. Does he have an engagement letter? In that engagement letter, I told you, na, give me access. So you will give access to everything, na. But in this audit, you will give access to only data. The acceptance is not correct then. Yes? What provision? Yes. PwC. That's only I am telling you, na. I am not required to check only. If you are thinking data audit, the client will say, I will give you access to data only. But I want more access. Example, I want access to provision for doubtful debts. I want an access to bad debts also. If I want to get a comfort zone on debtors, that's only I'm saying they want corroborate audit evidence. So while accepting engagement, make sure you are having access to other point. In case an audit of specific element of financial statement, certain SAE require audit work that may be disproportionate to the element being audited. Okay, example, what exactly this answer means to you? The answer means, okay, you are auditing part, but you require information in full. Make sure you have an agreement with management for this. Okay, determination of AFRF. What is AFRF? Whatever management is saying, that is AFRF. Determination of acceptability of AFRF may involve considering whether framework includes all requirement of framework, okay, on which it is based, that relevant of the presentation of single financial statement or of specific element of financial statement that provides adequate disclosure. You also check AFRF also, Malik. Example, suppose you are checking, suppose you are doing cash flow audit. You are giving opinion on cash flow. The cash flow should be presented in accordance with AFRF. Check which AFRF is required, 800 or 210. 800, I told you now, there will be two engagement. Okay, acha, complete financial statement can be of 210 also and can 800 also. So check which framework is applicable, okay, for presentation. You require cash flow in which presentation? You require according to Ind AS or you require according to German GAAP? Discuss that one with management. Presentation, very important. Acha, data's audit. I know I'll be doing data's audit, but how you will present the data? You will write this data, okay, you will write on single page, this is data signed by management. Presentation should be appropriate. Check for presentation, how it should be presented. So presentation should be done in accordance with AFRF. That is condition. So planning and performing, you read it out. Planning performing is same what we have discussed earlier. This planning and performing is similar to 805 is same to 800. Same 800 ka point. Planning performing. No worry. In 805, worry about report, opinion, which we have discussed. And if you have understood this, I bet you will have no issue. If you understood this element, okay, there will be no issue with you. Okay, this is exactly what we need to understand. This is complete reporting structure, need to be taken care of. Everybody clear? Okay. Let's understand with opinion now. Form of opinion. Check it out. Form of opinion. Again, both the framework, compliance framework or fair present framework, same logics. In case of single financial statement or specific element of financial statement, the applicable financial reporting framework may not explicitly address the presentation of financial statement or the element. Sometimes it may happen, framework may not give the presentation framework. Factors that may affect auditor consideration as to whether to use phrase present fairly or gives true and fair. Okay, it depends on whether you require to comply with compliance framework or fair presentation framework. They have discussed this one. Whether should we use the word, okay, data are present fairly, data is giving true and fair. Okay, so check whether the engagement is compliance framework or fair present framework. If it is fair present framework engagement, you can use this word. If it is compliance framework engagement, you will not use this word. Then which word you will be using? Data are in accordance with AFRF. You will not use data are true and fair. Huh? Forming an opinion and reporting consideration. Ekdam technically point. Ekdam take care. The auditor shall apply the requirement of 700. Okay, we know that. We'll be using 700 only. Okay. If auditor undertakes single financial statement in conjunction with an engagement to audit of entities complete financial statement, the auditor shall express a separate opinion for each engagement. Read this paragraph again this paragraph. What does it say? I'll give how many opinion? 2 opinion. Okay, I can publish both the report together. Huh? What is meaning publish both the report together? This is full report, this is separate report. I can publish, I can give on 28 April both the report. Okay, but I will not give one opinion only in one report. How many report I should give? 2 report. How many audit report will be there? 2 audit report. 2 engagement na? 2 audit report. Give 2 audit report. If 3 engagement are there, give 3 audit report. Example, 1 cash flow audit, 1 data audit and 1 full audit. Happen, it may happen. Requirement. Are enjoy na, enjoy taking money na. What is the problem? If client wants, give it na. Okay, focus on that element. Atma, clear? Understood kya? So my question, listen carefully and answer me correctly. Can I publish together the reports? Yes, except in this point. If you remember this, if this is scenario, you will not publish together. No, understood. Understood. If adverse is giving and you are giving data unmodified, you will not publish together. What is meaning of publish together? Giving only one opinion? Nahi. Okay, I am having one report, I am having one report, two reports I am handing over to the client. This should not be done together. Everybody? Okay. How many opinion I will give? If I am taking 805 also, 2 opinion. First point. If opinion, carefully, if opinion in auditor report of entity complete financial statement is modified. The first point, where deemed appropriate, the auditor shall modify the opinion on single financial statement or specific element. Understood kya this thing? What is meaning of deemed appropriate? If necessary. How you come to know if necessary? If the opinion was modified because of inventory and you are doing audit of data, you are unmodified. Okay. If auditor concludes that it is necessary to express an adverse opinion or disclaimer on entity's complete financial statement as a whole, revised SA 705 do not permit the auditor to include the same audit report and unmodified opinion. Remember, we have discussed this today morning. But the auditor nevertheless considered it appropriate to express unmodified opinion on element, only element, single financial statement you cannot give. The auditor shall only do if so. How many points are there? Not prohibited, not published together, and does not constitute a major portion. 3 condition. Remember na? Yaad aaya? Understood? Remembered? Remembered or not? And in auditor's report on entity's complete set of financial statement, the expression disclaimer of opinion regarding the results of operation, cash flow, where relevant, an unmodified opinion regarding the state of affair is permitted, since disclaimer of opinion is being issued in respect of results of operation and cash flow only, and not in respect of financial statement as a whole. If disclaimer is given as a financial statement as a whole, then you can't give unmodified. But if you have given disclaimer because of one reason, for other reason you can give unmodified. Condition is that you getting sufficient appropriate audit rules. I hope you understood these points. This exactly what 2 pages are there. I explained in this paragraph, this particular point. If you understood this one, that's it. This is exactly an agenda of standard 805. That's your end with 805. So 805, 2 things, 2 concepts. What you need to understand? First, acceptance for PwC and reporting for Amit Tathed. I hope you are clear. Acceptance for PwC, reporting for Amit Tathed. Okay, Lakshmi ji, clear, madam? Yes or no, Malik? Are you understood or not? Pakka understood, na? Take a break के बाद start करना. Okay, okay. अंधे से डरता हूँ मैं माँ. So Malik, the next engagement is basically with respect to your summary financial statement. Now please understand what is this very important about this engagement. Again, you need to take care what we have discussed before the break. The concepts you need to take care in the same way. First of all, give me a very good technical answer. Very good technical answer. First of all, be clear. My question, what questions comes here? Listen carefully. If you are 210 auditor, okay, can you be 800 auditor? Okay. Example, can this be like this 80 plus 80? Okay. Can it be like this 80 plus PWC? This is the situation. Okay. Can it be like this for similar for 200, 210 or 800 and 805 also? Can this be 80 plus 80? Yes. Can this be 80 plus and PWC? Yes. I told you both problems consideration will be having some different consideration to be taken care of. Okay. Now please listen carefully how the things are working. What I want to say is, okay, you tell me summary financial statement is derived from what? Summary financial statement is derived from the financial statement only. What is the summary financial statement? Take condensed version. Condensed version of what? Financial statement. So technically, okay, the person who is auditing financial statement can only be the auditor of summary financial statement. That's it. This biggest restriction. So what is 810 restriction is, okay, those who is the auditor of 210 or 800, okay, he can be the only auditor for 810. When I think 800, everybody clear with SPF also, na? Okay, so here if it is 80 and this is 80, this is permitted. But if it is 80 and PWC, this is not at all permitted. Okay, now get this point. Sir, you tell me what you will write in summary financial statement as an opinion. You tell me. What you will write as an opinion in summary financial statement? Summary financial statement. Will you write summary financial statement is true and fair? Acha, summary financial statement is derived from what? So you need to mention that summary financial statement is a fair summary of financial statement. So, yes, pardon. Yes. Only statutory auditor means what? A statutory auditor, the person who is the main auditor of the company, okay, who has done the audited financial statement, he can only audit summary. Why? Please understand. Help me out. What you will write in? Acha, I am discussing about summary financial statement. Summary financial statement. Help me out. What will I write an opinion? What opinion I will give here? You tell me. Okay, it is a fair summary of audited financial statement. Very important. Make sure you are understanding everything, else you forget every standard then. Okay, it's gone. All bouncer. Okay, and if you are thinking that I will do ratify. Okay, don't worry. Next attempt you will understand. So if you don't want to go into next attempt, okay, understand clearly. Spend time. What I am telling you is, whenever I am discussing about summary financial statement can be done only by the person who has done the audited financial statement. Now the question comes, why? Because in summary financial statement, my opinion will be that, okay, the summary financial statement is a fair summary of audited financial statement, not financial statement, audited financial statement. So technically, if I am saying it is a fair summary of audited financial statement, this opinion can be given by the same auditor only, na? Because who has audited can know the summary. The person who has audited, the person who has not audited financial statement, how he can tell this is a fair summary of audited financial statement? Acha, let's discuss like this, other way around. Suppose, technically speaking, tell me, I do think everybody, this will be balance sheet, P&L, something like this. Summary would be this summary. Okay, now what opinion I say? This summary is fair summary of this. So if this is audited by Mr. A.T., this should be audited by A.T. only. The first restriction, what you keep in mind in 810? The first restriction, 810, who will be doing this audit? When I'm saying statutory auditor, don't give statutory auditor only, because statutory auditor is used the word for 210 only. It is the auditor of audited financial statement. The auditor of audited financial statement can do the audit of summary financial statement. The person who has audited the financial statement can only do the audit of summary financial statement. Else he cannot do the audit. Yani here you can't go with this third option. Third mein. Read, look at the third point again. Here we can't go with this option. If this option is there, who should deny this engagement? PwC. PwC should say that I will not be accepting this engagement. So my question, first of all, who will accept this engagement? AT. First of all, first logic is very clear. Everybody? Okay. Can we go ahead now? The first base is ready. Second, now question is, what is meaning of summary? It is a condensed version. Okay. Now imagine, okay, Ganesh is saying, please Amit, audit my summary financial statement. No, okay Ganesh, show me the summary. Ganesh is showing me the summary. Okay, what is the summary? Please listen carefully. Ganesh saying, this is liability side, this is asset side. Okay, this is 20 crore, this is 20 crore. This is summary. Audit this. Okay, tell this is a fair summary of this. Okay, this is not summary. This summary ka summary ka summary ka summary ka summary. This is not summary. Please understand. So we need to understand before accepting engagement. Listen carefully. Before accepting engagement, what is a criteria on which basis you prepare the summary? First, check out whether this criteria is acceptable or not. The criteria is this cannot be acceptable, boss. Okay, this is misleading user. This is you showing to user. This is my balance sheet. Oh my God. Arey bhai. Arey. Example. This can be like this. Show fixed asset. Show current asset. Okay, show share capital, show other current liabilities, show like this. This can be I can assume this can be a fair summary. Yaar. Okay, asset is this much, liability is this much. So first of all, understand the new word which is coming in your mind. The concept is called applied criteria. Applied criteria. Now the question is, who will define applied criteria? Who will define what is the criteria for summary? There is no law regulation. Okay, so who will define this criteria? Management. Determine whether the applied criteria defined by management is acceptable. If this criteria is acceptable to you, then only accept the engagement. Do not accept the engagement if criteria is not acceptable. Did you understood the criteria? Who will define the criteria? And what is the criteria? Summary. What is the summary? How much you want to disclose? This is my criteria. How much you want to disclose? This is my criteria. See, understand. In doing this engagement, the things are very easy. Now you tell me what you will. If I say you, this is summary, this is audited financial statement, and this is summary financial statement. Tell me what exactly procedure you need to do. Am I required to audit this? No. I need to check, compare this one. Na? I see in this 810 engagement, what procedure you will apply? You will compare this with this. That is exactly what you need to do. Na? Okay, whether by okay, and disclosure in summary financial statement has been barabar defined or not, clearly defined or not. This is exactly you need to check it out. So first of all, we will discuss about engagement acceptance. So before going on engagement acceptance, first condition is you should be aware about what criteria? Which criteria? Applied criteria. You never use the word AFRF here because there is no AFRF. Here it is applied criteria to prepare summary. Who will define this applied criteria? My question is, who will define this applied criteria? Management. What is applied criteria? On what basis you have prepared the summary? On what basis you have prepared the summary? That is called which criteria, beta? Applied criteria. Check that applied criteria. If applied criteria is acceptable, what you should do? Accept the engagement or do not accept? Accept the engagement or do not accept? Accept. First thing, accept. But this is not the only condition. You need to understand to whom, Ganesh, you will be giving this summary financial statement to whom? Okay, to whoever you are giving, to user, specific user, whoever you giving. You ensure you will put my audit report in this summary financial statement. Whatever audit report, not main audit report. I will be giving this audit report na? Which audit report? Summary audit report. Under 810 na? You will attach this audit report along with summary financial statement. Make sure, condition, engagement acceptance, my condition is there. Sign this. Okay. Sir, when we accept the initial engagement 210, I never force him to put my audit report in financial statement. I never told him, okay, please ensure that my audited financial statement, audit report will be there in audited financial statement. Why? Because law is forcing him. Read section 135, 134. Read section 136. It is clearly saying board will not issue financial statements which are audited without having audit report in it. Board cannot issue, okay, financial statement without having audit report in it. That's it. So there is no worry for me in that audit. But this summary, there is no law. And you are doing the audit, okay, of summary. So if you are mentioning in summary, okay, summary financial statement, that audited summary financial statement, you also ensure you are putting my audit report, whatever audit opinion will be there, you ensure you are putting in that audit summary financial statement also. So engagement acceptance criteria. Okay, now to whom you will be giving a summary, make sure, okay, if they require a complete financial statement set, you will make them that complete financial statement available. Where this statement, financial statement will be available, where complete audited financial statement will be available, how this can be achieved by them. If somebody wants this financial statement, how they can receive that. Okay, this is my engagement acceptance. So listen carefully, the first question. I am only focusing on first question. First question. What is the first question? Engagement before acceptance of engagement. 2-3 things you need to check it out very clearly. Now here 2-3 questions will come into picture, Malik. I am on page number 8.4. Okay, first of all, okay, I do think summary financial statement reflects. What is summary financial statement reflects? This reflects that contains less detail than financial statement, which while still providing a structured representation consistent with that provided in financial statement. I hope this is concept clear to you. The second point, engagement acceptance. The auditor shall ordinarily accept an engagement to report on summary financial statement in accordance with this SAE only when auditor has been engaged to conduct an audit in accordance with SAE of the financial statement from which summary financial statement have been derived. Understood this concept? What is the meaning of this point? What is the meaning of this point 4.2? The meaning of this point was 4.2. What I give the example. Who cannot accept? PwC. Who can accept? Amit Audit. AT. Done, Malik? Okay. Now, before accepting engagement, first determine whether applied criteria is acceptable. Now, my question, who will prepare applied criteria? Who will prepare applied criteria? Management. Is there A for applied criteria? No. So, my question, whether applied criteria is acceptable or not, what are the factors? How much summary he want to show, what information he want to show, what structured he want to show, what structured information he want to show. Understand this. Therefore, one question comes, what are the factors to determine whether applied criteria is acceptable or not? The factors to determine applied criteria acceptable or not is basically nature of entity. Which entity is it? Second point, the purpose of summary financial statement. What is the purpose? The information needs, okay, for intended user. Example, you are preparing summary financial statement for intended user. What is intended need information which is required, and this applied criteria should not be misleading. Okay, make sure. So what are the factors you need to check when you are checking applied criteria is acceptable or not? 4. Nature of entity, purpose, information, and misleading should not be there. So Malik, if Ganesh is coming to me and Ganesh is saying I want to prepare summary financial statement, I should ask first thing what from Ganesh? What is a summary financial statement applied criteria? Ganesh will give me 1, 2, 3 point. Now when I am discussing whether 1, 2, 3 should be disclosed or not, whether it is correct or not, whether it is acceptable or not, how many factors I should consider? 4. First, nature. Second, purpose. Third, information. And it should not be misleading. I don't think everybody clear? Now going ahead. Okay, I understood. Applied criteria acceptable. Now before going ahead, okay, standard says, 810 says, obtain an acknowledgement from Ganesh. Acha, in 210, what is an acknowledgement if you remember? What is an acknowledgement? Ganesh, you have given me some acknowledgement in 210. Condition before accepting. Okay, financial statement, you will prepare. Internal control, you will prepare. Access, you will give. Additional information, you will give. Unrestricted access, you will give. Remembered? Similar style, the question is here. But not this one. Because here you are not, see, understand. Audit of summary financial statement is not an audit, Ray. It is comparison. Comparison with what? Comparison with what? Audited financial statement. So here you will not tell I require data information. Data information is given you in audited financial statement. So 2, 3 things you need to take care. What are the 2, 3 things? So first of all, question, understand this question. obtain an agreement of management that it acknowledges its responsibility. Now question is, what is management responsibility? That is a list which has been discussed. First, who will prepare summary financial statement? Management. This is first your responsibility. Okay. The intended user who will be given a summary, should they be have access to audited financial statement also? Who will make that available to them? Management. To make audited financial statement available to intended user. Okay. Example, how this will be done? This can be done. The summary financial statement will describe from whom, where audited financial statement are available. The audited financial statement may be on public record. Example, public record. Okay. Example, ROC. Or it can be on website or something like that. Okay. Management has established a process by which intended user on summary financial statement can obtain ready access to audited financial statement. It's your responsibility, Ganesh. So Ganesh, okay, first Ganesh, who is responsible for preparing summary? Ganesh, you are responsible. Second, who will make the intended user available access of audited financial statement? So three ways can be there. First, you mention from where the reports will be available in summary financial statement. Second, you can tell this summary financial statement users that this audited financial statements are available on public record. Or third, you can tell what is the process to get that audited financial statement if somebody requires. Example process, go on this website, okay, update the detail, name, address, okay, and email ID, you will get you can download this financial statement. Use some process. That is your responsibility. My friends, are you getting the point? Read the third point. I want that third point to be very clear. To include auditor report on summary financial statement in any document that contains. Did you understand this third point? Sir, why we have included this line? Okay, what was the reason? Because if you are mentioning that the summary financial statements are audited, you need to put the audit report, and because there is no law, therefore I need to ensure that is put in before the engagement only. Acha, in audited financial statement, why we have not inserted this kind of condition? Compulsion by law, because there is a compulsion by law. Everybody clear? I do think, hope you are clear, Malik. And the main point, agree with the management on form of opinion. So how many conditions are there, to be very precise? See, understand, what are the conditions? Three conditions. First, AC. What is AC? This is not AC. This is AC. Applied criteria is acceptable. Second, management understand its responsibility. Okay, what are the three responsibility? Preparation of summary financial statement. Okay, making audited financial statement, and ensure whenever you are giving summary financial statement, okay, you are including, okay, audited financial statement with it. Audit report in it. Everybody clear? Auditor report should be there. And last point, what will be the form of opinion? Example, what will be form of opinion in summary financial statement? Which opinion I will be forming? No, same opinion. Will I write in summary financial statement? No, Ray. What opinion I will give in this audit report of summary financial statement? What I will say for summary financial statement? Summary financial statement is a fair summary or true and fair summary of what? See, technically understand, this is a basic Ray. Okay, if I am giving an opinion on summary financial statement, if I am giving an opinion on summary financial statement, think technically. Do you think, okay, already, acha, what should be done first? First, audited financial statement should be prepared, or summary financial statement? Because in summary financial statement, the opinion is, okay, is audited, and therefore the opinion will be the summary is a fair summary of audited financial statement. Now the biggest problem come, okay, which we will discuss on later on in 15 minutes, next 15 minutes later on. What is the biggest problem? What if audited financial statement I have given adverse opinion? How? Ghanta. Logic laga. Okay, what is the meaning of fair summary? It is a fair summary of this only. What is the fair summary meaning? Condensed. If they have given this one amount, they have given this one amount. Okay, not a fair summary. How you can tell adverse? This is biggest point you should understand, and there may be a misleading point. Management is aware that I will be giving adverse opinion. Therefore, management is preparing a summary financial statement so that they can give to the user summary financial statement, and in which my opinion will be The summary financial statement is a fair summary of audited financial statement. This is what misleading point is. See, whenever I'm telling, if I'm telling 100 rupees, 100 rupees, 200 rupees, 300 rupees, okay, and 300 rupees. Now tell me it is 1000 rupees. This is 1000 rupees. In summary, I will be saying 500, in 200 and 300. This may be happen in summary. Now tell me, okay, this is also 1000. What I will tell, this is a fair summary of this. But here, this amount is wrong, na? Understood? Not Artha Maindya. Artha Maindya or not Artha Maindya? Understood? This is misleading. This is the reason why they may go with the summary. Because in summary you can't. Therefore, you should understand what can be the form of opinion. Management, I will be giving a form of opinion that only that summary financial statement is in accordance with. Summary financial statement is a fair summary of. I will give this opinion only. Lekin if audited financial statement is having an adverse opinion or disclaimer in the report, I will be mentioning below my opinion that in main audited report I have given adverse opinion. Understood? Acha, when I cannot, summary financial statement should be in accordance with audited financial statement. Be ho gaya na bhai, think logically na. Acha, audited financial statement should be in accordance with FRS. So summary financial statement should be in accordance with FRS. Nahi, applied criteria should be in accordance with applied criteria, which is applied on audited financial statement. So please understand, if summary financial statement is not in accordance with applied criteria, or it is not matching with audited financial statement, I will be giving an opinion. Summary financial statement is not a fair summary of audited financial statement. But it is not, does not, if in audited financial statement I gave the adverse, if I give the adverse, I will not be writing it is not a fair summary of this one. That is why I hope you are clear. If this is conceptually clear, then it's okay. Else, ठीक one more point. One more point not understood. It's okay. क्या फर्क पड़ रहा? Okay, there are 10 points. One more point added. 11 point not understood. It's okay. Okay, huh? Misstatement. Aggregate and the point. Understood. I hope it's clear what I have explained you. So now when I am discussing, the first question comes. First two questions. We close first two questions. First question is, what is a condition before accepting engagement? How many conditions will be there? 3. Applied criteria, management responsibility, and form of opinion. Okay, and if I ask you, what is the applied criteria to determine whether applied criteria is acceptable or not? How many factors are there? 4. Everybody clear? Acha, and even this can also be in separate, I don't know, but it may. This question come in separate. What is the management responsibility in case of summary financial statement? The management responsibility in case of summary financial statement. 3. First, summary financial statement. Okay, preparing a summary financial statement is responsibility of management. Second, they will make available audited. And third, whenever they give summary financial statement, they will be giving audit report. Anything can be there, but you be clear. Oh, my friends. Oh, my brains. I hope the things are clear. Now coming on the procedures. Sir, what is the procedure? Very favorite. What should be done? First of all, help me out. Will you check summary financial statement with applied criteria or not? Second, applied criteria should be disclosed in summary financial statement or not? Because you compare it, I know, but how the shareholder will understand what is an applied criteria? So that should be disclosed in summary financial statement. Okay, help me out. Summary financial statement is aggregated of financial statement or segregated? Aggregate. Check whether level of aggregation is appropriate or not. Check whether level of aggregation is appropriate. Acha, those to whom we are giving summary financial statement, do you think to them we should make available audited financial statement? Okay, check whether in summary financial statement it is written from where audited financial statement is available. Check that. Okay, and most important, you go there and check whether it is available or not. This is procedure. Check procedure, one of the easiest answer. And you can remember easily. But if you understood the concept, then it does not require time to insert here. So what are the procedure which is required to be performed by auditor? First, evaluate whether summary financial statement adequately disclose, summarize nature. Second, whether summary financial statement are not accompanied by audited financial statement. Evaluate whether they describe clearly from where audited financial statement are available on, or law and regulation that specify audit financial statement need not be made available to intended users. Check it out whether from where it is available or law regulation say okay, no, should not be made available. Check whether. Third, evaluate whether summary financial statement adequately disclose applied criteria. Okay, so what are the things we disclose? First, summarize nature. Second, audited financial statement. Third, applied criteria. This has been disclosed in your summary financial statement. Means what? Your summary financial statement will also have a notes. Your summary financial statement will also have a in notes. What should be written? Summarize nature, audited financial statement, applied criteria. This is the checking you are checking. I do think hopefully you are getting the point. Next point. What do you need to do? Compare. What should we compare? Compare summary financial statement with audited financial statement. Evaluate whether summary financial statement are prepared in accordance with applied. Sir, what is the difference between this C wala point and E wala point? Disclosed, and here you are checking whether it is applied criteria as per applied. Next, evaluate appropriate level of aggregation has been done or not. And last point, evaluate whether audited financial statements are available to. The favorite one, man, dude, one of the easiest answer. What do you need to do? Help me out. Summary financial, first point, summarize nature. Second, audited financial statement. Third, applied criteria. Now, this first three thing, this is disclosed. Fourth point, whether it is based on applied criteria. Check summary with audited. Check level of aggregation. Checking done 3 point. And last, evaluate whether audited financial statement are available from where it is available. Understood, Malik? It's totally easy, but conceptual understood na, so things are very easy. Else you will not know only what is happening. Once you start reading standard, you will think, what is this summary and summary? My slice summary is gone. But it's a very, I'm telling you, if the marks are there, just you understand and apply this logic. Marks are damn easy. And this is not judgmental. Na? In audit, many things are judgment. Summary, these all things is not judgment. You are not required to decide NT. Hey, this is what you need to do it. And next comes is a form of opinion. Now, it's my opinion is always my favorite, man. His opinion comes with multiple things because opinion gives the problem issues. Okay, now let's discuss with opinion individually. Think individually how it is happening. Aram se jai. And make sure, okay. Acha, one more thing, one more important thing. Help me out. Okay, when you are doing 800 audit, 800. Okay, audit report will be in which format? 700. 805 audit report is in which format? 700. 810 cannot be 700. No? Okay, 810 cannot say 700 because 700 ka report is only the report. Na? So here in 810 you have a separate audit report ka content. Remember this. So 800 the report is according to 700. Okay, 805 the report is according to 700. But 810 the report is according to 810 only. The audit report has been given in 810 itself. Okay, example, you go in the next page, you will come to know audit report on summary financial statement. What should be the content they have given in 810 only. I told you almost it will be similar here and there. But this is how you need to remember it. Bharat Mata ki jai. Everybody clear, Malik? Okay, Paka, the form of opinion. Let's start with this point. Okay. Don't do blunder. Matlab coming till here and doing the blunder will be big challenge, man. Blah. Okay, first point. When auditor has concluded that unmodified opinion on summary is appropriate. What auditor is conclude? Which opinion should be given? Unmodified. Don't tell, go to 700. Because in 700 we will be writing financial statements are in accordance with the A5. Whereas the things are different here. So what opinion you will write? Summary financial statements are consistent in all. Or I am writing the summary financial statements are fair summary. Why 2 points? I didn't understood. If I need to give unmodified opinion, I will be using either A or I will be using either B. Why? Why either A, either B? Online will think lag. क्या यार? A, it is a compliance framework, and B, it is a fair presentation framework. if you are doing the audit of compliance framework, you will be writing summary financial statement are consistent in all material respects with audited financial statement. And if it is a fair presentation framework, you will be writing the summary financial statements are fair summary of audited financial statement. I'm telling you, your life will this compliance framework and fair presentation framework will kill you. Okay, so if it is a compliance framework engagement you are doing, means in 700 you are giving opinion under which framework? Compliance framework. So in 810 you will be using opinion as what you will be using the word summary financial statement are consistent in all material respects with audited financial statement. If in 700 you are giving a fair presentation framework audit, then what opinion you will use? Summary financial statements are fair summary of audited financial statement. I hope clear. Huh? If law regulation prescribe the wording of opinion on summary financial statement, you need to understand. Okay, so you will be applying that law regulation wording. Huh? This is what we have done already. Apply procedure discussed earlier and any further procedure necessary, whatever you want to, and evaluate whether user of summary financial statement might misunderstand. And whenever you are giving opinion according to law and regulation, please make sure you are very clear. Whatever procedure can be applied here, think logically, you need to apply there also. And it should, any opinion should not be misunderstanding. It should not be misunderstood by the user. So make sure whatever you give the wording, it should not mislead the user. So that's what their technical point it suggests. Sir, now what is the law regulation prescribed? In our India, for listed company, if you go with the section 136 says, section 136 of Companies Act. 136 says, okay, whenever you are sending the notice of annual general meeting to the shareholders, you will be sending the financial statements which are audited and along with auditor report. This is compulsion. 21 days before, excluding the date of sending the notice and date of meeting, means 23 days actually. Now, when you are sending this notice for listed company, because the financial statements are so exhaustive, if company wants, company can go with a summary financial statement also. Yani rather than sending complete financial statement to all shareholder, company can send summary financial statement. So this engagement comes because of listed entity, because of that section. That section says summary, but that summary should also be audited. That is been defined by law and regulation. Now auditor, there is not more defined there in law and regulation. But suppose if more elements are covered in law and regulation, so auditor, please check any additional procedure is required by that Companies Act or not. Check that one. If law and regulation is making you your appointment, check whether law and regulation, you have done this procedure. This is as per SAE which 810. But law and regulation may require more procedure also. Check, you require to perform further procedure. And second, make sure whatever opinion you give, it is not misleading. It should not be misunderstood by the users. Okay, it's form of opinion because of law. Look here. If auditor concludes additional explanation in auditor report on summary financial statement cannot mitigate the possible misunderstanding, the auditor shall not accept the engagement unless required by law and regulation. Means what, sir? Means technically, if auditor concludes from law and regulation that he want to give additional disclosure in audit report and he thinks it is misunderstanding, it will mislead the user. Sir, when misleading happens, I will tell you. See, understand, if I am giving unmodified opinion in audited financial statement, there is no problem. I am telling you, there is no problem with summary. 100% no problem. The problem comes when modified because of qualified or adverse or disclaimer. Now, this is a problem because the shareholder will be receiving a summary, and in that I will be writing a fair summary or summary is in accordance. This is misleading. So, it may happen, your law regulation may say, do not mention anything about audited financial statement. Now imagine if I am not mentioning anything about audited financial statement, now it will be misunderstood by the user. The user will understand what? User will understand, boss, audited financial statements are correct, where actually it is misunderstanding. So do not accept unless until it is compulsion by law and regulation. Our India, it is not compulsion. Our India, it is optional. Section 136 says if company wants, they can give summary. But if they want to give summary, it should be audited. If auditor does not audit, okay, they cannot give summary. This is what a consideration comes into picture. To make it sure, these all technical points, when we are giving an opinion and other things, you need to be very clear. Okay, but the problem is only when it comes from laws and regulations. Sir, what is an audit report for summary? Read that audit report, content, fatapat close karo. Okay, first will be, acha, what we are discussing now? Content of audit report on summary financial statement. The first content is title. Second is addressee. Third is introductory paragraph. Listen carefully, introductory paragraph, and I want to explain you something of this point. Something out of this point. Introductory paragraph. Identify summary financial statement. Now I do think you are aware about this all elements which we have discussed yesterday also. Second, identify audited financial statement. Refer to audit report on audited financial statement, the date of that report. Means what? Acha. Okay. First of all, what is the first content? Title. Second content? Third, introductory. In introductory paragraph, we are discussing 5 points. Introductory paragraph, I will be mentioning, identify the summary financial statement. Second, I will identify. Third, I will refer audit report, okay, and date. What does it mean? That on this day, audit report has been submitted. You will be writing this in introductory paragraph. Fourth is very important point, and understand this point here. Screen mein fourth point I am explaining. Suppose 31st March is done. 28th April you gave AFS. What is AFS? Financial statement. Okay. And on 15th May you are giving SFS. What is SFS? Summary financial statement. Now please listen carefully. Whatever events occurring here, okay, from 31st March till 28th April. My question, will that be part of audited financial statement? Yes. Okay, as if you are aware, events occurring after balance sheet date. But this is covered. Sir, who covered this? SA 560, which I will be discussing tomorrow. Who covered this? SA 560. 560 will be covering these events. But my question, okay, tell me, okay, between 28th April and 15th May, any events happen, will this be there in summary financial statement? Ganesh, apply brain. Apply brain. Should be there or should not be there? Should not be there, because summary is based on. So why it should be included in summary point? What in summary? What I am telling? In summary, what I am telling? Summary is a fair summary of audited financial statement date is. Audited financial statement date is 20th April. So everything is covered till 20th April. After that, it should not be covered at all, because my summary is 28th. I do think everything clear. So mention in audit report. Fourth point. Now read fourth point. Now read this fourth point. Now this read fourth point. If date of audit report on summary financial statement is later than date of audit report on audited financial statement. Understood? Okay. Do mention what you need to mention. Any events which is after audit report but before summary financial statement have not been included. Why it has not been included? Reason simple, because my summary is on audited financial statement. So it is not covering this this summary financial statement is not covering any event which has occurred after audit report. That's it. And a statement indicating that summary financial statement do not contain all disclosure. So to have all disclosure, please refer audited financial statement. This is first introductory paragraph. I do think introductory paragraph is clear. After that, description of which responsibility? Management. Then give auditor responsibility for expressing an opinion. Then give a paragraph clearly expressing an opinion. Then give signature. And then give date. And one more point, HI, put I. What is one more point? Place. Place should be there. Signature, place, date. Signature, place, date. In examination, suppose they say You are a summary financial statement auditor and you are required to draft an audit report. Explain what are the contents of the summary financial statement audit report. This should be your answer. Okay, and this reports now from now onwards on complete day, almost you will be studying 7-8 reports. All reports will be having almost similar content. Make sure you understand a rough work of it. See, I don't have a time to make you remember everything on this, because the logical point is not to spend time on this rather than expressing on concepts. So first of all, make sure 5-6 points: title, addressee, signature, place, date, fixed point. Management responsibility, auditor responsibility, or practitioner responsibility, depending on engagement. This responsibility. Then identification of financial statement will always be there. It can be financial statement, it can be prospective financial statement, it can be projected financial statement. Identification is always there. Identification of AFRF or applied criteria, whatever, it will be there. One statement that you have complied with all standards of auditing. If it is SAE 10, or you are going with SRE or SRS, you are complied with SRS. These all things are basic concepts which can be done very easily. So I am telling you, not all, but 70 to 75% of audit all reports will be easily done or cracked by these concepts. 70-75%. 25% is an additional efforts you should insert. And if you are capable to insert this one, if you are giving only one group, another thing, I would suggest insert then time. But if you are giving both the groups, I would suggest theek hai yaar. Okay, so how much time you will be spending again on each audit or each report as such. But the standard does not end here. The standard does have more 2 pages. Now this is what about 2 pages? This is all about modification. Okay, sir, my first question: modification to the opinion. Modification to the opinion. Emphasize on matter or other matter in audit report of audited financial statement. How should you deal with it? And what does it say? This paragraph, it says, what if in your audit report the opinion was modified? In audit report there was EOM. In audit report there was OM. What you should do then? Because in opinion you will be writing, it is a fair summary of audited financial statement. So it will again mislead the users only. So make sure you are not misleading. Okay, you understood this all points. Okay, standards say make sure if these points occur, also mention the following things in your audit report. In your summary financial statement audit report. What? Okay, when auditor report on audited financial statement contain qualified but auditor is satisfied, the summary financial statement are consistent. In the end, it is a fair summary. State that audit report on audited financial statement contains a qualified. Describe basis for qualified opinion and the effect on summary financial statement. Okay, so this is what you need to. Acha, where I should describe this one? In this I need to describe where? In this point. In this point. Now where I will be describing this point? Acha, what I am telling is, again I am repeating. Okay, so please listen. If your main audited financial statement is having modification report, which report? Adverse or qualified. Okay, standard says you should mention in your summary financial statement audit report also that your main audit report was modified. So what thing you need to do is, A, state audit report was audited financial statement was issued is qualified. State that your main audit report was issued is qualified audit report, and also what is the basis for qualification and effect on summary financial statement. Mention this. Now question, where you will mention this in this all points? Okay, this will be insert in this third point, third, where I mentioned already the audited financial statements were audited. Audited financial statements were audited, the date of audit report and date of that. In this I will mention that the audited financial statement, it was having adverse opinion or qualified opinion. The reason for qualification was inventory was overvalue. In summary financial statement, it is having an effect of current assets. Current asset side is overvalued to some extent. I will write this. Please make sure what opinion I will give here. Opinion, what opinion I will give here? Summary financial statement is a fair summary. I will not give an opinion. It is not an adverse summary or something like that. Are you getting the point? Because if it is a summary, that's additional point to be focused on. Okay, so again, if it is an adverse opinion or disclaimer, now please understand. Okay, now 8.10 restrictive. 8.10 says it is not worth to give the opinion on summary financial statement if there is an adverse or disclaimer. If it is qualified or it is EOM or OM, okay, it's okay, you give the detail. But if it is adverse and disclaimer, check it out whether it is appropriate. Else, avoid from giving any opinion on summary financial statement because it can mislead the user. What is the misleading? In financial statement, audited financial statement, I have given adverse. Now here, I will be telling it is a fair summary. It may mislead user. So what they say, please listen. When audit report on audited financial statement contain adverse or disclaimer, the audit report of summary financial statement additionally state that audit report contains adverse or disclaimer. Describe the basis of adverse and disclaimer. Same what we have discussed earlier only. The only thing is additional you will mention is state that it is inappropriate to express an opinion on summary financial statement. Means what? Means what? Okay, so means what is basically to be focused here. Sorry, idhar hi bana deta hu. Means what is to focus here. Again, I am telling you, please focus. First question. Suppose audited financial statement is unmodified. Unmodified. Summary financial statement, no restriction. Whatever you want to do, you do. Second, if audited financial statement is modified or EOM or OM, okay, ensure your summary financial statement will have the reason for modification mentioned in audit report of summary financial statement. And you can give opinion. You can give opinion that summary financial statement is a fair summary of audited financial statement. Achha, when I am using a fair summary, make sure if it is compliance framework, I will be using that summary financial statement is consistent with audited financial statement. Is the point clear? But they say if it is an adverse or it is disclaimer of opinion in your main audited financial statement, okay, same scenario, what you will doing, you will be giving a reason for adverse or disclaimer in audit report of summary financial statement, but make sure you mention there it is inappropriate to provide opinion on summary financial statement. Means what? You will not be giving any opinion as such. You will be restraining from giving an opinion. That's it. On summary financial statement. This is the condition. These three things need to be taken care by you. Again, MCQ or theory, whatever, the theory question can come into picture. Okay. This is overall concept of summary financial statement. 2-3 concepts more come into picture. But before that, okay, my question, is this point clear? Everybody? Acha, what we have discussed here? My first question, who will do the summary financial statement audit? Auditor only. Okay, now what is the restriction? If he is giving, okay, see, if he is giving anything, I am not having any problem. The problem comes only when adverse or disclaimer. That's the only thing, then it is not appropriate. Why it is not appropriate? Writing, okay, that summary financial statement is a fair summary, may mislead users, na? So don't mention that. It is not correct for an auditor point. Okay, that he is saying, one point he is saying the financial statements are adverse, okay, worst actually, and now you are saying summary financial statement is a fair summary. Doesn't make a sense as such. So that restriction has been given additionally. That's it. You need to take care about this. Suppose, okay, in summary financial statement you are giving, in summary financial statement I am telling you, in summary financial statement audit you are telling, okay, in summary financial statement audit you are telling that summary is not correct, summary is not a fair summary. Suppose you are telling, suppose I am telling Ganesh, okay, summary is not fair summary, it is not fair summary, worst. Now what Ganesh will do? Ganesh will ensure, okay, that he will not put this summary financial statement audit report with summary financial statement. Yani what he will do? He will issue summary financial statement to everyone without whose audit report? My audit report on summary. Tell me, before accepting engagement, I told him, you need to put the summary financial statement audit report with the summary financial statement. So this is first condition. But what if he is not agreeing only? He is saying, you are giving the opinion that is not fair summary. I will not issue this report along with this summary. And there is no law, 137, 136 or 134, which is saying along with fair summary financial statement. So in that case, first of all, you need to ensure you should disassociate from him. You tell him disassociate. What is the meaning of disassociate? Please listen. It doesn't mean your engagement is done, completed, everything. Disassociate means don't write audited summary financial statement. If you want to give summary financial statement without audit report, I am okay, but don't mention audited. Without giving, disassociate me. When you are saying audited summary financial statement are audited by the auditor, it gives the interpretation audited done. Okay, if it is giving interpretation, attach my audit report with it. Attach my report with it. And if you are not attaching, okay, please remove that audited summary financial statement word. Issue summary financial statement, doesn't it? But if law regulation permits, here open, if law regulation permits him to issue summary financial statement without audit report also, then I will not be able to do any force on him. Any example, SEBI suggests you do the audit, and after doing audit, you can issue summary financial statement to everyone, even without audit report. Okay, and you can mention that summary financial statements were audited by Amit Tated, but audit report is not compulsion. Then in that case, I can do anything. So this has been more explanation given with respect to summary financial statement, which is basically a very important element again to cover. So focus on the last page. Okay, page number 8.7, para number 4.1. First read this one. First close this one. Then I will discuss the later on. The auditor may be engaged to report on financial statement of entity with engaged to report on summary financial statement. If this is the case, the auditor becomes aware that entity plans to make statement in document that refers to auditor. The fact that summary are derived from financial statement audited by auditor, the auditor shall be satisfied that the reference to the auditor is made in context of the audit report on audited financial statement, and the statement does not give impression that auditor is a report on summary financial statement. If either or A or B are not met, make sure auditor shall request management to change the statement to meet them or not to refer to the auditor in the document. Okay, so you will not refer to auditor in document. Means ekdam simple. Unless and until you are not including my summary financial statement with the summary financial statement audit report with the summary financial statement, don't mention me. Include this one. But I told you additional point. What was the additional point? If law regulation permits, then I cannot do anything. Okay. Now 2-3 point. Okay. Help me out. 4.6.1. Come to 4.6.1. 4.6.1. Modified opinion. What is modified opinion? Summary financial statements are not consistent. Okay, you will be writing like this only. Summary financial statements are not consistent, or you may also write summary financial statements are not fair summary, depending on which framework is there. ठीक है, ignore. Restriction on distribution or use or alerting readers on the basis of accounting. My question, do you think summary financial statement will be given to everyone, or there will be restrictions? Restrictions. So you will mention there is restrictions in which report, in which paragraph? OM. Insert something like the paragraph and alert the user. This report is only for summary and it is not for everyone. Now you may say me, sir, it is a general purpose framework summary, na sir? Doesn't matter. Doesn't matter about general purpose framework summary. Okay, you need to alert user because summary is not for everyone. Summary is only for specific users. Comparative, leave it right now. Okay, tomorrow I will discuss this one. Comparative, when I discuss 710, you will discuss 710. Okay, sir, 4.9. What is the 4.9? Read 4.9. 4.9, unaudited supplementary information presented with summary. So today morning lecture, do you remember what you should do? If there is supplementary information which is presented with summary, ensure it is segregated. How it is segregated? Do you remember or gone? Okay, how you will segregate? Okay, it should have unaudited supplementary information in that summary. If management is not if management is not putting that head point, then ask management to segregate that one. If management is then also not segregating, put in report that along with summary there is supplementary information which is unaudited. That's it. Same point. So you can refer. I have removed this masala. Why? Because this is same as SA 700. Same as 700. Do you remember page number? Check page number 700 ka page number. Supplementary information. Check page number 700 ka. 7.5. Supplementary information. Check 7.5. Today morning only we discussed. Do you remember that paragraph? The same concept is repeated here. Same point. And 4.10, again back to this page. 4.10, other information in document containing summary, we should check for consistency. And this will be taken care of by 720. So this two, 4.8 and 4.10. Okay, once I do 710, 720, I'll discuss it. Same concept you will be applying here. That's it. 710 and 720. That's with 810. 810 ke things. This is how 810 comes into picture. So 800, 805, 810. 800, if you remember, procedure were important. If you remember procedure, 200, 320, 260. Remember that one. 805, remember acceptance for PwC. Remember report for Amit Tated. I give you a structure clearly. And in 810, remember everything. Engagement acceptance. Okay, so if you remember two questions, applied criteria acceptable or not, and engagement acceptance combined. Procedure, very basic procedure. Compare summary and everything. And opinion is a biggest point to understand. Okay, so anything can come for 1 mark, 2 mark. If you just skeptically take care, you have understood the concepts. Okay, so you can recall the concept and apply this one very easily. It does not require any technical wordings. What I am telling is, technical wordings are not required. Concept is required. You either tell yes or no, but tell me correctly. Example, now if I ask a question, okay, you imagine the case study going on the example, it may be go on 1/2 of the page of question paper and the answer may be only 2 line, man. Sir, how the case study may say, Amit Tated has done the audited of financial statement of Ganesh X Limited. Okay, while doing this, he find out inventory is overvalued. Okay, on main financial statement, he found out it is material and not pervasive. According to 705, Amit Tated has given the qualified opinion. Now, okay, on 28 April, Amit Tated is giving the report to the Ganesh. Now on 29th April, Ganesh is approaching Amit Tated and telling he is also preparing a summary financial statement and he is asking Amit Tated to accept the engagement. Amit Tated is into acceptance of engagement, but Amit Tated is unable to understand how the opinion which has been given on inventory, which is qualified, will be dealt in the opinion in report of summary financial statement. Okay, and you know, okay, what exactly now, which opinion has given by Amit Tated? Qualified or adverse? Okay, this is the only answer. That's it. Khatam 4.6. This much answer for this much question. Amit Tated should ensure that in summary financial statement report, Amit Tated will mention, okay, describe, okay, he will mention that audit report has been qualified and he will mention these two things. Now imagine the same case study. You understood? It can go in a page. And same case study, if Amit Tated says, Amit Tated is given adverse opinion, how Amit Tated will link with this particular point? Then your next point. This will come the concept. If it adverse or disclaimer, okay, it is inappropriate. This is something which you should be skeptical of. Baki, other than that, I don't expect, okay, if you are saying, sir, can we expect a question that please write the, I'm rarely expecting such kind of question. I'm telling you, see, if such easy question comes, explain the engagement acceptance, explain this point, blah, blah, blah. If easy process comes, it's okay. God bless, na? That is a blessing to you. But I am just preparing for the worst because your first attempt is there. I'm not sure what will happen with you. So I'm just preparing for the worst. Okay, prepare for the worst, and to prepare for the worst, you are taking care of it. Okay, but after this, comes the next chapter that is called SRS. I'm going with SRS. SRS full form, Standard on Related Services. Now please understand, in SRS, Standard on Related Services, you have two SRS. One is 4400, one is 4410. Remember these numbers. 4400, okay, 4400 is basically for agreed upon procedures. And here 4410 is on compilation engagement. Now please do remember what is the difference between these two engagement as such. Agreed upon procedure, whatever management suggests you or tell you, you performing that is called agreed upon procedure. And in compilation, you are ensuring, you are assisting management in compilation. When I am discussing compilation and agreed, what is the basically difference? If management says, okay, these are the financial statement, prepare P&L balance sheet for me in accordance with AFRF. That is the compilation. If there is no concept of AFRF, management says, this is criteria. I am telling you this is a criteria. This is called agreed upon procedures. In both the standard, what are the three things you need to take care? What are the three things you need to take care? First is engagement acceptance. Second is planning and performance, and third is reporting. Three things. Yani how many questions will be there? 3 questions here, 3 questions there. Okay, still a very lengthy process to go. It's a lengthy time of the day to go. Right now, if you are exhausted, okay, it's a second set we are starting. Now it's after this, it will be SRE, Standards on Review Engagement, and once that is over, then we'll come to SAE, which will be the last set. Okay, where your standards will get over almost. But to precise standard, to cover the standard concept, make sure you understand very clearly how the things are working. So first of all, what I want to say is 4400 and 4410. Remember this 4400, 4410. First of all, agreed upon procedure is one of the easiest standard. Okay, what is agreed upon procedure? There are 3 questions. What are the 3 questions? Acceptance, planning and procedures, and reporting. Now you will say, sir, report? What report I will do? What report I will do? Listen carefully. I am just giving one example of agreed upon procedure, sir. I am giving one example of agreed upon procedure, sir. A question comes. Okay, Sunil is asking. Okay, sir, what is the reason for preparing summary financial statement when main financial statements are preparing? See, main financial statement may run into number of pages where shareholder can get confused. But okay, to ensure that shareholder does not get confused or does not have excess information, which is actually not required sometimes. So I may prepare summary. That is the main agenda of summary. Why we prepare summary? The main agenda is to consolidate many things. That is the only main reason why organization go with summary. Okay, but we need to ensure that summary is not misleading. Huh? Okay. Now listen carefully for agreed upon procedure. Listen carefully. Huh? Agreed upon procedure. Okay, Ganesh coming to me and saying, I am giving 2 examples. So listen carefully. Ganesh coming to me and saying, Amit, I want a datas list to be prepared. Okay, datas who are less than 3 months, greater than 3 months, and less than 6 months, greater than 6 months. My total datas are 10 crore. Prepare this list. Ensure who is having provision for doubtful debts, who is how much provision for doubtful debts. This is nothing but agreed upon procedure. Now think practically, if he is asking me to prepare such list, okay, I will prepare such list on Excel sheet, assuming. I will prepare this Excel sheet. I will send this Excel sheet to him, na? What I am saying, okay, out of 10 crore, I will be mentioned there is 2 crore, here it is 5 crore, and here it is 3 crore. This is what I am mentioning. I will be telling provision for doubtful debts will be required for this. Here it does not require, or may be required 0.1%. Here no provision is required. I may prepare this report. Who asked me to prepare? Who asked me to prepare this report? Management. Okay, I am agreeing with him and sending this report to him. Everybody? Yes or no? My question, okay, my engagement will end once I share this report to him. But our standard says, our ICI says, along with this report, also give your report, title, addressee, opinion. Sir, why I should give a report? I will hand over this thing directly to Ganesh, na? I will answer this file, Excel sheet file to Ganesh. Check Ganesh, I have done this for you. Acha, let's take an example for compilation. Help me. Compilation means what? Ganesh has given me trial balance ledgers. I'll prepare P&L and balance sheet. Okay, after preparing P&L balance sheet, I will hand over P&L balance sheet to Ganesh. Okay, standard says after you handing over P&L balance sheet, along with give also a report. Sir, why we should give a report? To minimize our liability in future. Later on, it should not happen that Ganesh may come and say, but this has not been given by you. This has not been covered in the correct way. This has not been governed. Okay, oh, Ganesh bhai, when I handed over this, okay, I handed over the report. Read that report. I have mentioned you everything very clearly. The same logic, agreed upon procedure. You told me this, I have prepared this in report. Along with this, I also give the report of 4400. Read that report. And therefore, this report is called report of factual findings. Report of factual findings. What is the meaning of factual findings, beta? Factual findings. Whatever you told me, okay, whatever I agreed with you, okay, I have agreed with you to perform some procedures. I agreed with you to perform the procedures, and after performing the procedure, this is a factual finding which I am getting. Therefore, it is called a report of factual findings. So in 4400, what is the report name? 4400, report name is? No, report name is not agreed upon procedure. 4400, standard name is agreed upon procedure. Okay, report on factual findings. I agreed upon you to perform some procedures. After performing the procedures, I identified some factual things. I am handing over these factual findings to you. And that is called report on which findings? Factual findings. This is exactly what we called 4400. So my question is 4400 engagement name? Engagement name agreed upon procedures. And what is the report name? Factual findings. I hope you are now clear with this point. Okay. Everybody clear? Okay. Now help me out. When we are going with this engagement of 4400, okay, when we are going on engagement of 4400, tell me who will tell what is the purpose of engagement? Who will tell me the purpose of engagement? Management. Okay, what procedure need to be specified? What procedure need to be performed? Who will tell? Everything is done by management. Have a document of that. Okay, and perform that and report that. That's it. One of the easiest standard. Life में और एक easy standard है तो 4400. Sir, 440 में am I required to check AFRF? 440 में am I required to check AFRF? Not at all. Okay, because AFRF is not there. Acha, if you need to compare with AFRF, then it is compilation. 4400. Sorry, 4410. Compilation engagement. So what is the difference between agreed upon and compilation? Compilation and agreed upon में क्या difference है? Acha, I'm asking you, management is telling me to prepare a list of data in accordance to schedule 6. Which engagement? Management is coming to me and saying prepare a data list in accordance to schedule 6. Schedule 6 के हिसाब से prepare करके दो. Okay, it will be compilation. Schedule 6, AFRF, everything requires compilation. Management says, okay, they are not giving any criteria. Management is saying this is a criteria. This is a criteria. 4400. See, understand. Biggest problem in this both engagement will be what? Okay, listen carefully. Both engagement will have basic difference. My question is this. Listen carefully. Big is the difference. If it is agreed upon procedure, listen. If it is agreed upon procedure, listen carefully. My biggest problem is, okay, if management is giving me, okay, information which is 1, 2, 3, 4, how will I come to know whether it is complete or incomplete? Management is giving me 4 information. Okay, Zamit Tate, this is data's kind information. Prepare this. Can I come to know complete information? Who will? Acha, if I'm asking management is saying this is a complete information. Now, is any other way by which I can understand this information is complete or incomplete? No, because whatever I am doing is doing for management. Therefore, okay, I will be preparing a report which is a factual finding and give to you. That's it. But in compilation engagement, if management is giving 1, 2, 3, 4 and management told AFRF के हिसाब से बनाओ, and when I am preparing from AFRF, I will come to know, array, fifth information is required. So I'll come to know the information is missing. Okay, then I can ask management to provide. If management do not provide, withdraw. This happens in compilation, which is not a case of agreed upon procedure. Agreed upon procedure, there is no concept of withdrawal. There is no concept. There is no problem with withdrawal because the framework is not there. Okay, sir. Whatever my wife say, I will do that. No concept of withdrawal. Okay, 4400. Agreed upon procedures. We agreed. When marriage happened, okay, I was not aware. This was agreed upon procedure. After 2 years, 5 years, okay, I understood. This is very good agreed upon procedure. Later on, 10 years, I come to know, this is not agreed upon procedure. This is only forceful procedures. After 13, 14 years, I am coming to know, but there is no procedure only. Okay, it's only one procedure, wife. Whatever madam suggests, whatever she says, I will do that. Okay, it's 4400. But if my daughter says or my son says, do this, wait, let me check with my wife. Again, compilation. We'll compare it out. Okay, I may withdraw. So in which case I will withdraw the engagement? Compilation. And why will you withdraw? Did you understood? Why will you withdraw? Because the information what you are getting for compilation may not be complete information. You may not be getting accurate information. Acha, in agreed upon procedure, how will I come to know complete and accurate? Tell me na. Arey, management is giving whatever information. I need to do whatever he wants. I don't have any framework to compare. Suppose tomorrow management comes, give me an answer, correct answer. Tomorrow Ganesh comes to me and Ganesh says, okay, assume karte hai, okay, in cost accounting examination, there is a cost sheet format. There is a cost sheet format as per one cost accounting standards. Okay, Ganesh come to me and says, Amit, okay, prepare cost sheet as per this standard. This is which engagement? Compilation engagement. This is what exactly you should understand. This is compilation engagement because I am having framework. Now suppose Ganesh is giving material, Ganesh is giving labor, Ganesh is not giving overheads. Okay, he is not giving. I will be asking Ganesh, give me overhead information. Ganesh is not giving, handing over to me. Okay, I will withdraw. But Ganesh is saying, Ganesh is coming to me and Ganesh is saying, Amit, I am giving you material, I am giving you labor, I will give you overhead. Whichever it is then, give me total amount. What is the total amount? Now this is agreed upon. If he is not giving overhead, it means I will not put in total. That's it. First, are you basically clear what is agreed upon in compilation? See, understand, compilation, don't, my friends, please don't make it this worse. Okay, if any time question comes, even a cost sheet can be compilation. But how you should understand it is a compilation? Some framework which is given, which is not decided by management. That's it. The things are simple and that's what you will be focusing on. Let's start with your 4400. Come to the point, 4400. Okay. 4400 engagement to perform agreed upon procedures regarding financial information. Sir, objective. The auditor to carry out procedures on audit nature to which, okay, the auditor and the entity and any appropriate third party have agreed and to report on factual finding. Make sure, okay, wherever you are using the word auditor, don't imagine any statutory auditor. This is a kind of practitioner. Acha, one more important thing. SRS, full form of SRS, Standard on Related Services. This is the one engagement where independence is not compulsory. But I should comply with fundamental principle. In these procedures, I will comply with confidentiality, integrity, objectivity, professional behavior, professional competence. But I am not compulsion or independence. Independence may be in independence is done, is best. But if you are not independent, it's okay, no problem. When my question, can this engagement be done by my brother also? Yes, no problem. Compilations. I hope the things is clear. Okay, audit versus agreed upon procedure. Read. A key difference between audit and agreed upon procedure is related to where assurance given? Audit. General principles. Read this general principle line. Done. Okay, all principles need to be complied except. Acha, so independence should not be there. If it is there, good. If not there, it's okay. Non-compliance is not there. You are not guilty of professional misconduct. Okay. Sir, terms of engagement. Define the terms of engagement. Matters to be included in agreed upon procedure. Agreement. Your agreement and my agreement. Okay. First, I will put a nature. What is the engagement? Purpose. What is the purpose? Identification of financial information. Debtors, creditors. What information? Nature, timing, extent of specific procedure. Don't write nature, timing of extent of audit procedure. Else next 6 months is there. Nature, timing, extent of specific procedure. And who will be telling the specific procedure? Acha, who will be giving nature, timing, extent? Management. It is not I am applying, it's my mind. This is what you are writing. And limitation on distribution of the report on factual finding. Who will be giving a report of factual findings? Practitioner. And practitioner should give the report, and report should not be shared with everyone. Limitation. These are the 5 points. What is this question? What is this question? Engagement acceptance. What are the things, or what is the content should be there in engagement? So these are the things which is engagement acceptance ke criteria. 3 things will always be there in every question. What are 3 things? Engagement acceptance, planning, performing, and reporting. The engagement acceptance here, it is very small. It's okay, done. Second, okay, planning. It's okay. Auditor should plan so that effective engagement is performed. Procedure. Sir, who will tell the procedure? And what procedure may include? Read that all procedure. It's very favorite procedure. Go on the next page. And my question is, what is this procedure? ICIOR like, but technically, to be very precise, who will tell to perform this? Don't apply your mind. Whatever if management say do the inquiry, you will do the inquiry. Management say do the inspection, do the inspection. Management say do the observation, do the observation. Whatever my wife will say, I will do that. Remember this one. And this principle very clearly. And for girls, you will say, whatever I will say, okay, he will perform. These are 2 things. Okay, you can understand technically. Okay, report. Very common point. Report. Now, report, if you understood, report. This is report on which? What is called report of factual findings. Report of factual findings. Engagement name is agreed upon procedure. My question, tell me this point. Whether you understood what is the meaning of factual finding? Factual finding, you told me to do this, na? This is factual finding. Facts. I prepared this factual finding for you. You told me to do this, I prepared this factual finding. Okay, along with any example, he told me to prepare a data's report. He told me to prepare which report? Data. I prepared that data's report. Along with data report, I will put this report. Okay, so to put this report will minimize my liability in future, na? If after 2 years down the line, he says, okay, he file a case against me, he go to institute and says, by Amit Ated, I told him to do this work. How your institute chartered accountants are there? How you prepare this chartered accountant? I'll say, boss, I have discussed this everything in report. Please be clear. My liability, I have done the whatever engagement I perform, it is in accordance with SRS. If I am mentioning this, no way institute can touch us. But if you are not doing this and you are giving directly report, later on any liability arise, you will be gone. Make sure you give this report. See, in real life, these things are not taking place. If any client is asking for doing anything, we do directly. Okay, never ever we hand over any report. Arey baki chhod do. Okay, do you think whatever you studied in last 3 days for audit, do we in real life actually perform like this? Not at all. Arey baki chhod do. RMM, leave it to 60 and 40. We ask client, what do you think? What is RMM? You tell which area we should audit. We will audit that one. You tell what profit figure you require. We will ensure that information is audited in accordance with that. Actually, the small size and mid size can't help it, yaar. We are in that way. Okay. See, whatever you studied in last 3 days or a formal standard, this is basically taken care by Big Four, Big Tens, who have the engagement, which is a listed entities or something. Yeah, our client is a small client, a small private company. His private company is itself a burden on him. If I create a more burden on him, he will say, hey, why? If I say, oh, please let me do 300 first. Planning strategy. What planning strategy you are discussing? Okay, let me go to the other auditor. No, come here. No planning, no strategy. You tell what you done. You want unmodified opinion? Right now I'll be giving unmodified. Date of future. I'll give you a report. And actually it happens. In real life this happens. This happens very common in if you are working in small firms, if you are aware. Okay, mid-size firm, mid-size also not small, small, somewhat big. This is a procedure where client says and we do that. It is not auditor says and client does that. Materiality, who said? Client. Whereas SAE 320 said, who should set the materiality? Auditor. No. In our life, we ask client, what is the materiality? Client says, nothing. Drink coffee. Have filter coffee, enjoy. Give the audit report which is favorable to us. Ethically not correct. But theek hai. Sometimes everything does not happen with ethically. What can we do? If we need to pay tax, we need to do something. Then how will I take care of country? We need to take care about, think about a big point here. We are not earning only for ourselves. We are taking care of country. We are earning, we are giving tax, country. So if any compromise happens with this report and SAE 320, SAE 315, it's okay. For country level, standard can take place. But nevertheless, jokes apart, this is a report. For which procedure? Agreed upon procedure. But what is the report name? Factual finding. Did you understand why it is factual finding? Factual, because factually I am disclosing you. Title, addressee, identification of specific financial information or non-financial information. A statement that procedure was performed with those are agreed upon with management. A statement that engagement was performed in accordance with standard SRS. You can put here SRS 4400. Identification of purpose. Listing of specific procedure. Which procedure he told, inquiry, inspection, whatever. A description of auditors, like factual finding. You will write here, this was factual finding we have did. A statement that, this is very important statement, Malik. This is in 4410 and 4400. A statement that the procedure performed do not constitute audit, nor review, nor assurance. We are not giving any opinion, mainly. A statement that auditor has performed additional procedures. A statement that report is restricted to those parties. Okay, elements which are required. Date, place, sign. That's it. Make it sure when I'm using auditor word, don't assume this is a statutory auditor. This is a concept of practitioner, but they have used the word auditor. I don't know only what is the logic behind using the word auditor. Word should be practitioner. But because agreed upon procedure, they have used the word auditor. Okay, so technically it can be an internal auditor kind of thing. Okay, discussing about management. Okay, acha, what internal auditor does? What management says? GRC, whatever you are telling, governance, risk and control, it may happen, internal auditor does. But what he does, he will does what management says. Who defines the scope of internal auditor? Shareholder or management? Management. There is no law. Internal auditor will follow SIA, standards on internal audit. But that also when he is having a practicing firm. If internal auditor is appointed as an employee of company, he will not be doing anything, na? So something in related to that. Documentation. That's it. This is the end of 4400. That comes to the next standard 4410. Okay. First of all, read this line. What is a compilation? Compilation engagement is engagement in which practitioner word started, applies accounting and financial reporting expertise to assist management. Word is assist management in preparation and presentation of financial information. They have not used the word in preparation and presentation of financial statement. Financial information. It can be any information, but financial. Information. Don't assume only trial balance, P&L balance sheet. Okay. First First point, financial information that is subject to compilation engagement may be required for various purposes. To comply with mandatory periodic financial reporting requirement for the purpose of unrelated to mandatory. Unrelated means internally. So financial information may be required for two things. One is mandatory. Example, he want to prepare P&L balance sheet for a year, that is mandatory. He want to prepare P&L balance sheet for a quarter, mandatory. But he need to prepare cost sheet. Now cost sheet is not mandatory. So financial information can be used for two purposes. One is mandatory purpose, one is internal purpose. Internal purpose means for my own purpose. But it should comply with AFRF. Huh? That is exactly what we are focusing on. 4400. 4410. 4410, again same logic. Apply accounting and financial reporting expertise to assess management. Report in accordance with this SRS. Okay, scope may. Very basic point. Scope. Please listen carefully. Scope. Management retains responsibility for financial information and the basis on which it is prepared and presented. I have only assisted him. I am not the person who has prepared. I have only assisted. Very clear. Mention this also in your report. The financial reporting framework adapted by management to prepare and present financial information will depend on the nature of entity and intended use of information. Okay. Not technically very important. Next point is also we have done ethical requirement. Ethical requirement is clear for you? Okay. Now main question started for this compilation engagement. Take care. First question is engagement acceptance. Now this will be having a very broader view what you did in agreed upon procedure. Agreed upon procedure, the engagement acceptance, everything was told by management. Na? But here you just check it out. It is very technical point. Now technical point is what? First, engagement acceptance and continuous should be done or not. These are the factors. When I am discussing a factors, please understand it is not precondition. It is factors. What are the factors? First, who will be using this? Where distribution of financial statement will be done? What is AFRF? What is an objective and scope of compilation engagement? What is the responsibility of practitioner and responsibility of management? And main point is responsibility for management is given below. Okay, help me out. Who will prepare and present this financial information? Management. I am only assisting. Second, who will implement controls? Management. To design, implementation and maintenance of controls. Acha, who will give me the information, complete and accurate information? Management. Accuracy and completeness of records, documents, explanation, give me. Acha, who will apply the judgment? No auditor, no practitioner, management. I will be using that percentage here. I am only, what I am doing only? Assisting. See, if you say you will apply the judgment, if you say you apply the judgment, tomorrow the auditor raise any concern, it will be against you. Judgment issue may be there. Acha, provision for doubtful debts, who will apply? Management or practitioner? Management. Management saying 10%, I will apply 10%. That's it. I may suggest him, but ultimately whose responsibility it should be? Management. Because tomorrow auditor may say 25%. And he comes to management, 25%. Management say, yaar, one CA told 10%. One CA is telling 25%. What CA? No, we should not, we are only in assisting. We are not here to preparation and presentation of financial statement. So who will apply the judgment? Management. I do think everybody clear, Malik? So help me out. What are the factors or engagement acceptance condition? First, what you should check? Use. Second, what you check? AFRF. Third, what you should check? Objective or scope. Next, responsibility. Two responsibility. Whose two responsibility? Responsibility of practitioner, responsibility of management. Who will prepare financial statement? Who will design internal control? Management. Who will give complete and accurate information? Who will apply the judgment? Management. Is the answer to remember. Remember, 4410 engagement acceptance karna hai. If I need to accept the engagement, what are the conditions or what are the factors? Same answer. 5 and 5 ke andar 4. How many points are there total? 9. Remember, 9 points to be remembered. I hope things are clear, Malik. Everybody, yes or no? Okay. Okay. Now, before reading this procedure, I will just focus on certain things. Okay, then we'll complete this one. Last answer to be focused on. Okay, practitioner work, because after that it is then report. The next page is about report. That's it. Main page is this. Take care about 9.4. Take care about 9.4. Very, very important for 4410. My first question, few of the things asking me, I'm asking you, please listen and answer it out. Okay, who will tell me what is AFRF? Who will tell me? I'm a practitioner now. I'm doing a compilation for Ganesh. Who will tell me what is AFRF? Will I decide or management will tell? Management. Should I obtain understanding of that AFRF? Yes. Okay. Should I obtain understanding of management? Entity. Why understanding entity is required for compilation? No, that is not my concern. No? Whatever they tell, I will be doing AFRF. Why should I understand entity? My question is this. In compilation engagement, what is the ground? What is the reason? Why should I understand entity? Why should I understand the entity? Not needed. No, boss, needed. First procedure. Okay, the practitioners can obtain understanding of entities, business and operation. To proper compile means what? See, unless until you don't understand my entity, how will you come to know which vouchers are given, which vouchers are not given? Which voucher should be there, which invoice, how invoice will be there? Purchase invoice will be, how it will be looking, how sales invoice will be looking, how salary slips are generated. Okay, how salary, see, understand, you need to compile, I know, but at least you should be aware, na, information is complete or accurate. How will you come to know information is complete or accurate? When you understand entity. So here, standard says, practitioner, even if you are doing compilation, this was not there in agreed upon procedure. Agreed upon procedure, I was silent and he was telling I was doing. In compilation, I need to compare with AFRF and I need to compile. Okay, I want your understanding because I will understand what are the vouchers which are given by you. Else, I will not able to understand a voucher only. Na? Acha, help me out. How it is happening in the CJ classes? CJ classes, is it the same way happening in A.T.Academy? No. Chiranjeev Jain sir classes, how the procedure is there for a voucher. In Mumbai A.T.Academy, this is not a procedure. The procedure are completely different, man. Okay, the different procedures are different. Okay, how they are giving the invoice to you. In Mumbai, how we give invoice is completely different. In Pune also, Pune and Mumbai, in my academy only, the things are different. Why? It is because business, how that environment require a business, I need to do that accordingly, na? Okay, so you come in Pune, you will identify, you will find out the different culture altogether. Same office, same person's office. A.T.Academy, Amitabh Academy, and Mumbai, you go both different office, both different culture. The people are different in Pune, the people are different in Mumbai. Okay, so that's exactly you should understand this one, first thing. Secondly, okay, when we are discussing online patrol, clear kya? Okay, who will tell me what judgment should be made? Provision for doubtful debts or contingent liability, who will tell me? Okay, so I should discuss this with management. Only management or TCWG also? TCWG also. Okay. See, understand, after you compiled, you need to understand, you need to read compile information with AFRF. You need to read compile information with AFRF. And if you think some information is missing, information is not complete, accurate, what you should do? Information is not complete, accurate, what you should do? Okay, communicate, management. Management saying, okay, I will not give. TCWG, they are saying not giving, withdraw. Here withdraw, and there is no problem with law. Don't write law regulation resist you to withdraw. There is no problem. Withdraw. If you are aware the information is not complete, the information not accurate, withdraw. First thing. Second point. After reading a compiled financial statement, you think it is misleading. No, yaar, AFRF ke saath se, the provision for doubtful debts should be 10%. Management is saying 15%. Misleading. It's misleading. What you should do? Information is complete, but the financial statement is misleading. Compiled information is misleading. What you should do? You yourself correct? No. Tell whom? Management. TCWG. Again, they say no. What you should do? Withdraw. That has been explained in the procedure. Don't bring the liability at your end. If liability is at your end, you are done. It's a big problem. Don't bring the liability on your head. So read aram se. First, okay, sir, what I am discussing now? Procedure. I am discussing procedure. What is the procedure for compilation? First, practitioner should obtain an understanding. Okay, of how many things he should understand? Understanding of business and AFRF. Understood, Malik? Second, what practitioner should do? Practitioner shall compile financial information. Compile. Now prepare trial balance, ledger, P&L balance sheet. Then the practitioner shall discuss with management TCFG as appropriate those significant judgments. Prior to completion of compilation engagement, the practitioner shall read compiled financial information in light of practitioner understanding. Okay, judgment provided by management for compilation engagement are incomplete, inaccurate, or otherwise unsatisfactory. The practitioner shall bring that to attention of management and request additional or corrected information. If management has failed to provide records, documents, explanation, practitioner shall withdraw and inform management. Clear, Malik? After that, now this is see, understand, huh? Okay, acha, I am putting a number on the screen. Please check it out, the number. This is first number. This is second. This is third. This is fourth. This will be fifth. This will be sixth. This will be seventh. Okay, 8th, 9th, 10th. I am not worried about 8th, 9th, 10th. It's main concern. My question: the the fifth point can come in its own. If information provided by management or judgment provided by management is incomplete, okay, what auditor should do? Or inaccurate, what auditor should do? The auditor should do, okay, discuss with whom? Okay, management. And if it is not giving, then withdraw. So how many answers you will write? Which point you will write? 5 and 6. 5 and 6 together you will write the answer. Understood? 5 and 6. 5 and 6 will be the answer. 7 can come in separately. Read 7. Read 7. If practitioner become aware during the course of engagement that does not adequately describe AFRF, it does not go with accordance with AFRF, amendment to compile financial information is required. The compiled financial information is otherwise misleading. The practitioner, okay, shall propose the appropriate amendment. If management does not amend, the decline the practitioner shall withdraw. And if management, Atma, clear? And the last point, they have given a one point additionally: if withdrawal is not option available, check out for professional legal responsibilities. But that is not a problem with India. That has been kept by, if you are taking some MNC's engagement or something like that, international laws. But my question, if 7th question comes, how many points you will write? 7th question can come on either of the 3 points. In examination, the question can come, okay, Amit Tated has compiled the financial information, and after compiled, Amit Tated think the financial statement is misleading. Yani I am discussing which point? I am discussing 3rd point. Or, okay, Amit Tated after compiled, Amit Tated think it is not in accordance with AFRF, 1st point. Or Amit Tated think, okay, the amendment is required. 3.3 में से कोई भी question आ सकता है. Any question can come. What is your answer? If 7th point per question comes, the answer is 8. Ask management to amend. If management is not amending, withdraw. Only this much will be the answer. 4 marks will be there. But the problem is, you should know, you should be aware about the answer. Okay, so 7th, what is the difference between 7th and 5th point? 7th and 5th point, what is the difference? 7th and 5th point? 5th May, the information given by management is not complete. Okay, 7th May, information is complete. But, okay, the financial statements are not correct. 3 format. First, AFRF is not correct. It is not as per AFRF, or may require an amendment. Or 3rd point, okay, it may be misleading. In both the cases, the answer is very much clear. Okay, but in first case, you will ask management to give the corrected information or more information, and if not, then withdraw. But in this case, if the management is not rectifying, you will withdraw. Technically, you need to withdraw only. Okay, was this concept there in agreed upon procedure? In agreed upon procedure, there was no concept of withdrawal. Why? Because there is no concept of correct, incorrect, misleading. Because everything is not done. Everything is done for whom? Management. Here it is assisting. I am not a management. Here I am assisting. Okay, and practitioner shall obtain acknowledgement from management that they have taken the responsibility of final version. Who will prepare final version? Acha, who will prepare this compilation information? Who will prepare this compiled information? Practitioner. But who is responsible for preparing this financial? Management. Agree that. Means in simple word, management should overview everything. Okay, and last point is communication should be done on timely basis and practitioner report. Okay, practitioner report, first it shall be the report title. Second is literacy. Third, statement practitioner has compiled. Description, responsibility of management. Identification of AFRF. Identification of financial statement. Practitioner responsibility. Compilation engagement in accordance with SRS. Explanation, if you remember, the practitioner is not required to verify accuracy, completeness of information provided by management. I am not responsible for complete and accurate. It's management responsibility. And practitioner does not provide any opinion or conclusions. And if it is for special purpose framework, compilation, okay, describe who are the users and signature, place, date. If you are having an SQC, so there may be a policy and procedures of your firm, compile with that. Sir, to be very precise, in all this five odd pages, which page should be taken care of? First, okay, to be very precise, if you want me to go with a filter, I'll suggest clear filter. The first filter is basically on page 9.1. You should be aware about this engagement acceptance. This is red color. Engagement acceptance, red color. This is first 5.1 page. Engagement acceptance. Which engagement this is? Agreed upon procedure. Then you should be aware about the procedure. These are the procedure. Phaseology can be done very easily. What is the phaseology? What is the phaseology? ICIOR. But make sure you are not writing reperformance. Because reperformance is not there. Why reperformance will not be there? Management is telling me to perform only. So reperformance can never be there. Are you getting the concept, Malik? Okay, but recalculation will be there. Recalculation, other accuracy checks. Reperformance is never there. So ICI, ORR में R उड़ा दो, बाकी सब आता. Okay, the second important. The third very important part is this. Again, engagement continuance, page 9.3. Engagement acceptance. Engagement acceptance 9.3 page number. Everybody clear? And the 8.4 page, 9.4 page is complete page is very important. Which points are important here? Which points are important? 5, 6, 7, 8. Very important, I am telling you. Okay, mark my word, it will be a super bonus if the examination day you are getting that there was a practitioner who got a compilation and he got the incorrect information. What he should do? Even if you don't study also, then also the answer can be written very well. But you should be aware what is answer. Okay, so make sure, but standard reference should be given 4410 compilation engagement, then the marks will be given very easily. Okay, that I already communicated. Please, to get the other standard marks, judgment is not there. Therefore, we are very in favorable condition because judgments are not there. When judgment comes, in audit what happened? The question is, out of the following, which is most appropriate? Means all four are appropriate, but which is most? But in the standard which you did morning and today, there is no worry. Okay, the next series which will be starting after break. Okay, I am just giving a background before the break, but clear about it because then I will be starting the standard with review. So first of all, please make your picture clear. Next 10 minutes, be static clear what I am discussing. Because after that, again, I will starting with directly standard. Because now in review, I am not worried. Why? Because review is like audit. Okay, everything like audit, but it will not audit. Everything like audit, but not audit. Then what is exactly review? I am not here to explain right now what is a review and other things. I am here to explain the skeptical things to you. First of all, review ka naam, what is the standard names for review? SRE. Full form of SRE? Standard on review engagement. Standard on review engagement, we have two standards. 2400, 2410. Number of standards 2400, 2410. Acha, how many engagements are there if you remember? 4. Tell me engagement. I'm just a minute. मैं engagement क्या लिख रहा हूँ? पहला आता है audit. Second is review. Third is assurance. Fourth is related services. Audit is SA 200 to SA 700 and SA 800. The number which I have made you remember D1. Now next series, how you should remember, make it sure. Start with 2000 first. 2000, 3000, 4000. Add every number, add 400. 400, 400, 400. This is first total. Okay, so it is 2400, 3400, 4400. Okay, add 10 in plus, add 20 in next, add 10 in plus. Okay, so it is 2410, 3420 and 4410. Okay, these is standard ka list to be remembered, and along with this 3400 and 3420, one standard, okay, one in blue moon 402. So if there is 402, there will also SAE 3402. So in this, okay, assurance, how many standards will be there? 3. Okay, 3400, 3402, 3420. These are the 3 standards. In review, how many review will be there? 2400, 2410. In last, 4400, 4410. So right now I am on 2400 and 2410. Now to be very precise, in 2400, okay, it is a review. Review, listen carefully, very clearly, review of HFI, and it is saying review of interim HFI, interim FI. Now my question, what is the interim FI? Interim financial information. So what is the criteria here? Whenever we do the review of HFI, it means here review will be for 1/4 to 31st March. Here review will be for 1/4 to 30th June, okay, 1 July to 30th September, 1 October to 30th December. That's it. 3 reviews. And these 3 reviews have been given by our listed entity SEBI requirement. But this does not mean only this criteria can happen. Example, unlisted company is preparing any financial statement which is less than a year, then it will be called as interim FS. Interim financial statement does not mean 3 months financial statement. Make it clear. Interim means less than a year. If I am preparing 11 months financial statement, it is interim financial statement. If I am preparing 1 month financial statement, it is interim financial statement. If I am preparing 9 months financial statement, interim financial statement. So first of all, if you got an engagement of interim financial statement, the standard will be 2410. If you are getting a historical financial information, means a review for complete year, it will be 2400 engagement. Condition, very clear and very compulsory condition. What is a compulsory condition, Malik? This engagement and this engagement. If you want to tell your auditor to become a reviewer, Amit Tated, okay, Ganesh is saying, Amit Tated, your auditor, become my reviewer also. I want to give review engagement. Amit Tated can accept review engagement only for interim, not for complete financial statement. It doesn't make a sense. Amit Tated is giving an audit opinion also on 1st April to 31st March and a review opinion also on 1st April to 31st March. Chomu. But Amit Tated give opinion on, okay, interim. So compulsorily, if this is 240, if interim financial statement is prepared, year open, if interim financial statements are prepared by management and management wants to do that review, it should be accepted compulsorily by independent auditor of that company. That's it. Interim financial statement review cannot be done by outsider at all. Example, okay, Ganesh is preparing financial statement quarterly. Ganesh says, okay, Amitabh, you are auditor, but I want to appoint PwC for this 3 months financial statement review. Cannot. If we go to PwC, PwC will say this cannot be accepted. Because this can be accepted only by, okay, independent auditor of the company. That's it. Now, fun for 31st March. He has told Amitabh, you become auditor. Now he's coming, Amitabh, do one thing, also do the review of that same period. Amitabh cannot accept. He can ask somebody else, okay, other person to do that audit. Yani, to be very precise, this can never be done by independent auditor. Possibly. So review may first fix in mind 2 things. What are the 2 things you will fix in mind? That whenever the review is of interim, achha, what is the interim? India we are going with 3 months, but it can be less than a year. If it is an interim financial statement, the review can be done by auditor only. Your company auditor only, compulsory. But if the review you want for HFI only, for which audit is done by auditor, this cannot be done by auditor. This review can be done by other person. Now you may ask me, sir, why the review is done already when audit is done? Okay, first thing, interim review is done for compliances. SEBI told, therefore you are doing interim review. Second, sometime company saying, okay, bhai, relying only on audit report may not be comfortable for us. We need to give a more best opinion. So let's do one thing. Okay, we have done the audit report. Let's do the review report also. So now tell me, if I am doing the audit report, how will I do the review report of the same year? So the different year, the different company the different CA firm will enter here. So my question, who is the reviewer in 2400? Other than auditor. And who is the reviewer in 2410? Only auditor. Only auditor. Is that point clear? If you read 2410 ka standard ka name also, that is called interim financial statement review is done by independent auditor only. And first one, this cannot be done by independent auditor. The reason behind is the same period I cannot give an audit opinion also and review opinion also. The first benchmark is ready or not? Okay, how many procedures are there in review? How many procedures are there in review? 2. What are 2 procedures? Inquiry and analytical procedure. What are the 2 procedures, beta? Inquiry and analytical procedure. 2 procedures. Okay, either you do this review or do that review. Okay, it will be always inquiry or analytical procedure. First thing. In review, we never give the opinion. Make sure. Okay, while using the wording. Okay, so after break, whenever we start, after break we start. Okay, so make sure you will not use Amitabh giving a review opinion. It is a review conclusion. We always give review conclusion. We always conclude a review point. If I need to give a review opinion, it is not called a opinion. It is called a conclusion. In audit, we always give opinion. In review, always we conclude. Sir, in review, which assurance it is? Limited assurance. In review, which opinion is? Negative opinion. Nothing came into my eyes. Okay, that the financial statements is materially misstated. I did inquiry, nothing came to me that by inquiry there is jhol in this one. Okay, but to be very precise, you know why I spent this time, this logic behind it. Otherwise, we can start directly also. But the logic is to understand the concept behind it. Imagine the first one, first engagement. First engagement is done by whom? Other than independent auditor. Now my question, if the person is other than independent, example, okay, it's Amitabh or PwC. PwC. So PwC will do everything what is required. Any example? Here, okay, he will ensure engagement acceptance is thoroughly done. Okay, financial statement you will prepare. Internal control you will prepare. Access you will give. Additional information you will give. And unrestricted access you will give. Remember? Where we discuss condition for audit. Condition for audit, precondition for audit. Remember na? Okay, but here is this reviewer auditor or reviewer? He is the auditor or reviewer? This one. Reviewer, na, he will ensure these things are taken care because he is not an auditor. But tell me, does he require to focus on more engagement acceptance? No, because he has already accepted the engagement of auditor. Can you tell me, he will be first reviewer or auditor first? Okay, so here engagement condition will not be there. There is no condition in this standard. It says only enter the engagement letter to identify the scope, but there is no conditions. Here you will find the conditions. Why reviewer is separate reviewer? Okay, now tell me, is he doing the audit? On the screen, on the screen, on the screen. Is he doing the audit? He is doing only review, no Malik? Everybody is doing only review. So he will be doing very wider scope. But when in this, if he is able finding material misstatement and management not rectified, he will say, I will consider in audit report, don't worry. Are you getting the point? In review, he will be very, in which the work will be reduced? First or second? Why second? Because I am auditor. Everything I will be doing in mainly audit, not in review. So in second, if anything comes to across me, any problem comes to me, okay, there will be there. Here you will find everything. I will show you, okay, 2 page, 3 page, almost you can cut short here. Why? Because here opinion he will be giving is again qualified adverse disclaimer. Whatever we discussed today morning is exactly written here. Because he is giving opinion on review, which is a one opinion. Here his opinion is not worry because it is a only limited review for that quarter, and then ultimately he will give opinion in. So exactly, okay, how he will be going opinion, nothing. If he wants to give a qualified opinion, what are the things? The same thing what we discussed today morning. We discussed this matrix. If you remember, when we are discussing about qualified opinion, you will get here again same. Here it is not discussed. Why? Because he is taking care of SA 705. Acha, does he last point, does he require to comply with SA? Does he require to comply with SA? Does he require to comply with SA? This blue wala, does he require to comply with SA? Not at all. Why? Because he is a reviewer, he is not a auditor. My question, does he require to comply with SA? So why he will consider the modified opinion? Okay, as per review, he will consider SA 705. Na? So this is exactly, after the break you will understand this basically technically. Handle this one, okay? And I'm telling you again, the standards are LDR, total LDR, and this will be majorly used by you in real life also. This is that for sure. Okay, so take a break. After break we'll start. हाँ हाँ अभी खाया, ये लेके लेट आया, मेरे बाद सोने का था। कल तो नींद नहीं आया, थोड़ा तबियत डाउन था, गला दुख रहा था। गला तो 3 बजे सोता, 3 बजे तक, 3 साढ़े 3 तक नींद ही नहीं आया। 3 साढ़े 3 तो नींद, आज सोने का था तो फिर खाना ही लेट लाया, कुछ तो दाल खिचड़ी मंगाया था, ये दुख रहा है ना। हम्म? नहीं वो भैया बाहर गए हुए हैं, संडे को शादी में गए हुए हैं, इसलिए बाहर से आया, आज बाहर से लेके आया शादी में। हम्म। मंजरी बोल रहे हैं डे हो गए। Okay, so let's start with the content. Okay, Malik. So, welcome back. Okay, so we have discussed already a background of 2400 and 2410. Let's start with the 2400. Okay, so here you need to understand the reviewer is a separate reviewer from the auditor. The auditor and reviewer are not same; they are different person. So 2400, I do think this background is clear of review, na? This particular thing which we have discussed already is very clear to everyone. Okay, what we have discussed. And in review also, I have discussed that. Okay, whenever we discuss about review, it is a limited assurance engagement. So let's start what is the review and limited assurance engagement. Then, okay, first of all, just I am giving a structure. Okay, I am on page number 10.1. Okay, first is ठीक this is definition. After that, the para number 2, which is saying about 2.1 and 2.2. This is very important for us. Okay, 2.3 very important for us. 2.2 is basically acceptance of engagement factors. 2.3 is basically precondition for acceptance of engagement. 2.4 is agreeing the terms of engagement. So this time, therefore, agreeing the engagement acceptance, we have total 3 questions. First, factors, condition, agreeing. Factors, condition, agreeing. Factors, condition, agreeing. Okay, and agreeing after agreeing the terms of engagement. Fact, actually, I messed. Okay, so agreeing the terms of engagement. Objectives and compliance with respect EQCR, agreeing the terms of engagement. Okay, delete this one, agreeing the terms of engagement. This is above only, factors only. That first point, put this planning and performing. 2.4 is planning and performing. 2.4 make planning and performing engagement. After agreeing the terms of engagement, the next comes in planning and performing. All points are very important to be taken care of. Okay, and then okay, we will be forming an opinion. This everything will be taken care from opinion point of view. Emphasize of matter and another element. The everything works okay till the 10.7 page. Now till 10.7 page, okay, it's from forming an opinion. Okay, things will be very easy. Yani your review need to be taken care. 2.4 in 2.4, okay, so till 2.4, okay, is on page. I'll be closing it out. Ten point six. Till this, it's very important. Okay. Now please understand, okay, whatever you do here, okay, understand individually. I told you even before the break when we discuss about other standard, we were discussing the individual concepts were very important. Individual concepts. Here also individual concepts are very important. So let's start with the individual point. First of all, what is a limited review engagement concept? So any engagement, please check it out. Limited assurance engagement. What is a limited assurance engagement? Limited assurance engagement is the level of assurance obtained where engagement risk is reduced to a level that is acceptable in circumstance of engagement. Yani what we did, we have reduced the engagement risk. We have reduced the engagement risk to an acceptable level. We have reduced the engagement risk to an acceptable level. But that acceptable level of engagement, okay, but where the risk is greater than the risk of reasonable assurance engagement. Okay, while expressing the conclusion. Yani in limited assurance engagement, what is limited assurance engagement? Limited assurance engagement is basically an engagement where the risk is reduced, to an acceptable level, but this risk is much higher than reasonable assurance. Yani where in reasonable assurance engagement also we are reducing the risk. Okay, which risk we are reducing? If you remember, audit risk. Okay, we have done the calculation also. If you remember, when we are doing the chapter 4th, I told you how the audit risk can be reduced. If you remember, detection risk, you keep it low, automatically audit risk will be low. Detection risk you keep high, audit risk will be high. So what is the main agenda? To keep the audit risk low or high? To keep the audit risk low or high? Okay, low. Same logic in limited assurance also. You need to keep the engagement risk low. In limited assurance, you need to keep engagement risk low. Okay, once again, limited assurance engagement risk should be low. Limited assurance engagement risk should be low, but it is higher than reasonable assurance. So what happened in reasonable assurance engagement also, we reduce the risk. In limited assurance also, we reduce the risk. Okay, both risks are reduced to an acceptable level. Both risks are to be reduced to an acceptable level. Here it is also acceptable, here is acceptable. But here what risk is reduced to an acceptable level is more than this risk. The risk is more than this risk, and therefore what we do in audit, probably you may be saying the audit risk you are keeping at 3%. If you remember, audit risk 3%. What is the 97%? If audit risk is 3%, what is the 97%? Reasonable assurance. So you have reduced the audit risk to a 3%. Same way in limited assurance, you will reduce the risk to a lower point, but it will be more than this reasonable assurance. So example, it may happen that in limited assurance engagement, the risk may be 20% approximate. The risk, it's again whose decision making, what should be the risk? Okay, reviewer or auditor, depending on scenario. So whenever I ask you, what is a limited assurance engagement? The answer should be, the limited assurance engagement is an engagement where we reduce the risk to an acceptable level. We reduce the risk to an acceptable level, but it is, the risk is higher than reasonable assurance. The risk is higher than reasonable assurance engagement. Yani in which engagement the risk is reduced very low? Which engagement the risk is reduced very low? Reasonable assurance. In limited, the risk is more than reasonable assurance, but at an acceptable level. Acceptable. By this risk is accepted because this engagement is of that only. So that is exactly what we are focusing on. First of all, okay, what is an objective of review of financial statement? Okay, see, read the standard number 2400, SRE 2400. Everybody? Okay, 2400. What is the name of 2400? Engagement to review historical financial statements. Who will do this engagement? Okay, auditor or other person? Okay, no beta, it is not done by auditor, it is done by others. Okay, 2410 will be auditor. Okay, so come to the page number 8. Read this 2410 name. Review of interim financial information performed by independent auditor of the entity. Yani who is performing 2410? Who is performing 2410? It is performed by independent auditor only. It cannot be performed by any other person. Everybody clear? I do think this agenda is clear, everyone. Yes or no? Okay, perfect. Now we are going on the person who is not a auditor of our company. So the person who is not an auditor of company, therefore he need to understand what is an objective of review. The objective of review is to obtain limited assurance and report on the financial statement as a whole. Okay, so I'll be obtaining a limited assurance and I'll be reporting on financial statement. Okay, part and parcel, not to be remembered. Okay, done and dusted. Main question starts here. What are the factors highlighting factors affecting continuance and acceptance of client relationship or engagement? Okay, unless required by law or regulation, the practitioner shall not accept the review engagement if. Okay, what? Practitioner shall not accept the review engagement if. Okay, if the practitioner is not satisfied. If what? There is no rational purpose for review. If there is a rational purpose of review, accept the engagement. Okay, the review engagement would be appropriate. It may happen that review engagement may not be appropriate. We would have required to go with a agreed upon procedure, or we would require to go with an audit rather than review. So just check it out whether the review is appropriate in the circumstances or not. Okay, whatever management is asking, whether it is focus on that or not. Next point, whether we are complying with ethical requirement. Acha, okay, in review, are we required to focus only on ethical requirement or independence also? Only ethical requirement. No, SRS related services was ethical requirement without independence. Now review ethical requirement where assurance is there. Where assurance is there, it should be ethical requirement plus independence at any cost. So you need to check ethical requirement plus independence every time. In review also, only one engagement where independence is not required. Related services. All other than related services, we require independence. Why we require independence? Because in all things we are giving assurance. So third point, check it out whether ethical requirement are there or not. Next point, okay, the practitioner, okay, understanding of engagement circumstances, okay, and practitioner has got to doubt about management integrity. Do you remember management integrity? Okay, if you remember the same concept we have discussed in audit also, factors. Okay, three factors we have discussed in SQC1. Okay, if you remember the three factors, one was integrity of management, second is CCRT, and third, if you remember, the concept was with respect to your what we require, ethical requirement and independence. The same logic applied here, but these factors of acceptance and continuance for review engagement. If any time I ask you what are the factors to consider before acceptance or continuance of review engagement, so the factors will be total 5 factors. First, what is the purpose of review? Okay, so purpose of review should be appropriate. Okay, that is what your criteria is there. Okay, second point, most important, there should be compliance with ethical requirement. Okay, there should also be an preliminary understanding of engagement, and most important, there is a doubt with respect to management integrity. And okay, management or TCFG may impose limitation of scope. What is LOS? Limitation of scope. If management or TCFG may be required to put LOS, okay, the things are not clear, do not accept the engagement. Now my question, what are the factors to be considered? Factors to be considered before accepting. Please listen carefully. Please listen carefully. What are the factors to be considered before acceptance or continuance of review engagement? What are the factors to be considered? What are the factors to be considered before acceptance or continuance of review engagement? How many factors will be there? 5. First, practitioner is not satisfied. What? Purpose of review and appropriate. The review is not appropriate. Second, okay, he is understanding that ethical requirement may not be complied. Third is understanding about engagement. Fourth, integrity of management. And last point, there can be LOS, limitation of scope. So how many points are there for acceptance and continuance? Acceptance and continuance, how many points are there? 5. Practitioner not satisfied. Second point is not complying with ER plus independence. Next point, understanding of entity. Next point, integrity of client. And most important, okay, LOS, limitation of scope. These are the 5 points which need to be taken care for acceptance and continuance. I do think everybody clear? Yes or no? Okay, I am asking very clearly now. Very clearly. Make sure you are listening carefully the question. Okay, Ganesh is approaching Amit Tathed. Amit Tathed is nothing to do with audit. Ganesh is approaching Amit Tathed for doing the review engagement. Amit Tathed is considering whether the Ganesh review engagement should be accepted or not. So what are the factors Amit Tathed should consider? How many factors? 5 factors. Did you understood this? Okay, now please understand. Listen carefully. Once again I am telling you, listen carefully. Okay, Ganesh is approaching Amit Tathed, A.T.N. company for acceptance of review engagement. A.T.N. company, please accept the review engagement. A.T.N. company should consider certain factors before accepting the review engagement. Okay, what are those factors? Okay, whenever the firm level question comes into picture, or whenever the firm level, or whenever they ask for SQC level, please make sure you are writing SQC. Therefore, I told you, listen carefully. SQC factors not applicable only to audit. SQC is applicable to CA firm, which can be used for audit also, which can be used for review also, which can be used for related service also, which can be used for assurance also. So if at any point of time in examination the question comes, Ganesh is approaching CA firm, and CA firm need to focus on factors for acceptance or continuance. Go to your page number 2, 1.2. Okay, 3 factors: integrity of management, CCRT, ethical requirement, and independence. Compulsory at firm level, they were the 3 factors. This is at which level? Practitioner level. Firm will consider that 3 factors. Practitioner will consider these factors. Okay, sir, in audit there was no confusion. No audit, because in audit, in SA 220, they discuss the same factor only. SA 220, in audit also, SA 220, what SA 220 suggested? SA 220 suggested, whatever you discuss in SQC1, it is the same. Therefore, you don't have a 2 answers there. Okay, else you would have a 2 answers. One is factor at firm level, one is factor at in auditor level. Firm level and auditor level, the factors are same in audit, but in review, it is not same. I hope the things are clear for you. Whenever I ask you about review factors to be considered before acceptance or continuance or review, factors to be considered before acceptance or continuance or review by a practitioner, by a CA firm. Okay, CA firm, how many factors? 3 factors. Which factors? SQC. Don't debate that SQC is not applicable here. Who told? SQC applicable to firm which can take any engagement. If my firm is not taking audit engagement, my firm is taking only review engagement, then also SQC is applicable. So make sure you are clear in this. I hope I am very clear. Okay, I hope you understood. If not understood, it's okay. You can write any of the factor. Your life factor can also be inserted here. There are major problems in life also. You can mention here. Okay, and life will not worry with respect to this factor. But make sure, Punter log, I hope you understood what I explained. Okay. Now the second question comes: what are the precondition to be fulfilled before acceptance of engagement? So what is the difference between factors and precondition? Factors and precondition. Factors, okay, is your judgment. Precondition, you are required to focus on. If it is not complied, you will not accept the engagement. And to be very, very basic, this all precondition is very simplified. Why? Because this is the same precondition you have to focus in audit. Sir, check out the precondition. First, acceptability of AFRF. Agreement with management. Okay, understand its responsibility. Okay, and he should provide all the access to information. So help me out. So before accepting the review engagement, the practitioner shall determine, okay, which financial reporting framework is applicable. Agreement of management. What agreement of management? Preparation of financial statement. Who will prepare? Management. Who will put internal control? Management. Okay, this is something which we need to understand. And most important, who will give the access to all information? Management. Who will give additional information? Management. And who will give unrestricted access? So if at all you are getting confused, I will tell you, ekdam simple point hai. The same points are there for audit engagement. How auditor will consider before accepting the audit engagement? The same answer is there. Okay, there are two conditions. First condition is, okay, AFRF is acceptable. Second, management understanding is responsibility. How many responsibility are there of management? 5. Financial statement, internal control, access, additional information, unrestricted access. Okay, so why? Acha, to be very precise, this point will be there in 2400. This point will not be there in 2410. Why? These both questions were there in 2400. These both questions are there in 2400. In 2410, this both question will not be there. Why? Because that engagement is already accepted, already factors were considered, already conditions were focused on. Remembered? In 2400, there will be no preconditions. Reason simple hai. Why? Because you are an auditor. So there is no concept of precondition. And I told you, what is an interim financial statement? Interim can be any period less than a year. So it's let them decide. There is no compulsion. It should be for 3 months only or 6 months only. It can be anything. It can be 11 months also. Everybody clear? I hope these 2 questions are clear. Along with these 2 questions, which question was confusing? No question is no confusion in life. Everything is clear. Abey punter log. Okay, this question should be taken care along with SQC1. Remember this answer. And if anybody is coming me and saying that I was not aware, I will show this video and I will kill him. If after examination, okay, if anybody is doing this blunt, because this other person will not be aware. And if my punters are doing this mistake, even I'm not taking a marathon where I'm only telling a pointer. I'm explaining everything. So after that also, if you are doing blunder, it will and I'm very hyper when it's come to the point. Okay, when the things goes with the hand, the things were in your hand and you leave it. Okay, now coming on the review, performance, planning and performing the engagement. My question, SRE 2400, who is the 2400? He is a reviewer or auditor only? Reviewer or auditor? Reviewer or auditor? Reviewer. He is not an auditor. So think of separately. So here reviewer will perform 5 things. Remember these 5 things very clearly. First, he will determine materiality at financial statement level. He will obtain understanding of entity and AFRF. Okay, then he will perform 2 procedure. What are the 2 procedure? Inquiry and analytical procedure. Then he will perform specific circumstances procedure. Sir, what are the specific circumstances? There can be a related party. He need to perform specific procedure. Going concern, he will perform specific procedures. Okay, if there is a 600 wala issue, he will perform specific procedure. 600, do you remember? What is 600? Other auditor. But here there will be other reviewer also, na? Here don't use SA 600, because here he can't use SA. This is the reviewer. This is a separate person. So, and last point, he will perform other procedure if necessary in circumstances. What is the last line? He will perform other procedure necessary. Sir, what is the meaning of other procedure? Acha, how many procedure he will perform mainly? 2 procedure. Inquiry and analytical procedure. But by doing inquiry and analytical procedure, he is not getting a confidence. He is not getting sufficient appropriate evidence. He can extend his scope. He can do confirmation also. He can do substantive procedure then. Sir, now you will be telling me, sir, he is covering audit only. Array, but he is not getting sufficient appropriate evidence. So he will increase the scope. Make sure while wording I am using very clearly. I am not using sufficient appropriate audit evidence. I am using sufficient appropriate evidence. So when I am in 2400, I will be using word sufficient appropriate evidence. And I will perform 2 procedure, inquiry and analytical procedure. But if I am not getting confidence, if I am not getting SAE, sufficient appropriate evidence, I will increase my scope. That's how last points will come into picture. Make sure now you are understanding this 5 point in detail in next set. Okay, now our task is to understand these 5 points in detail. So help me out. How many procedure we need to perform? 5. First is materiality. Second is understanding. Third is inquiry and analytical procedure. Fourth, specific circumstances procedure. And fifth is, okay, if necessary. If necessary means situation requires. If situation requires. Now question, okay, sir, can in examination I will get explain all review procedure? Impossible. Impossible. You can 100% ignore first 2 points at any cost. No worry. Only from conceptual understanding or MCQ point of view you may learn with me. Your main process starts from the 3rd, 4th, 5th. And remember, you may get only one concept based on review. And based on that question, you need to crack the question, boss. So while I am doing the 3rd, 4th, 5th, listen carefully. Listen carefully. Perform that answer. Understand and apply the logic of review. I am telling you, it does not require any additional hard work. It requires only a patience of mind and making sure that you are understanding the applicability. The things are very easy. Again, it's yes and no. So let's start with your first point. Acha, tell me what is the procedure? Acha, first 2 questions. What are the first 2 questions we discussed before this? Factors and condition. Factors and condition. Condition is safe to audit. Factors is also easy. Factors should not be confused with SQC factors. I made you clear. After that, now I am asking you a procedure. How many procedures are there? 5. First is materiality. Second is understanding. Third is inquiry and analytical procedure. Fourth is specific circumstances. And last point, if required. I am worried about that if required, specific, some question may come. Or an inquiry and analytical procedure. How it need to be done. Take care. First of all, materiality. Okay, do you think here the word is not auditor, the word is practitioner. As you and when go into 2410, after half an hour, 45 minutes, 2410, the word will be auditor. Why auditor? They will be called as auditor because he is an auditor only. Are you getting the point? Here the word will be practitioner. The first point, materiality. Do you think practitioner should determine materiality? Answer is yes. He will determine materiality and he will apply this materiality in designing procedures and evaluating results obtained those procedures. Okay, most important one line, the practitioner shall revise materiality for financial statement as a whole in event becoming aware of any information during the review. Yani in future, okay, in aage, when we are going ahead, if you come to any information that you are having a doubt that their financial statement may be misstated, you may revise materiality. Make sure you remember this point, true and false. Can practitioner revise the materiality? Answer is yes. When, as and when review is performed, practitioner can revise materiality. What is the meaning of revise materiality? He may get some new information. Accordingly, he can modify the materiality. Okay, how new information done? I'll discuss with you. Second point. Okay, obtaining understanding of entity. Do you think, okay, practitioner should understand the entity? Yes. The next come, designing and performing procedure. How many procedures should be performed? There are two procedures. What are the two procedures? Inquiry and analytical procedure. Let's discuss first inquiry. Ratify this point, inquiry. Okay, these are the areas where you perform inquiry. You ratify all these words. Rato. Okay, inquiry you perform relating to accounting estimates, related to related parties, significant, complex, unusual, okay, fraud, events occurring between date of financial statement and practitioner report, subsequent events basically. So basically what is this answer? You will perform inquiry where? You perform inquiry where? You perform inquiry in estimates, related party, significant transaction, complex transaction, okay, unusual transaction, fraud, okay, or subsequent event. These are the 7-8 points you can remember for performing an inquiry. Bharat Mata ki jai. Everybody clear? So this, a kind of significant risk. But here you will not apply that standards on auditing. Therefore, I am very clear. Therefore, I have not used the word significant risk. You may focus on significant risk, but this inquiry is not limited to this. Inquiry can be done for anything because I want to understand all 300 items. And my my review procedure will be only inquiry. So while writing an answer, I am focusing on this answer. So if I ask you, inquiry is done in which areas? This areas. Ratify this one. Bas khatam. Ratify. Rato. Inquiry. Okay. See, understand. Next line. You extend the inquiry to non-financial data also. What is the meaning of non-financial data? Okay. Example. Okay. Tell me, salary is which data? Salary is which data? Financial or non-financial? Salary is financial or non-financial? Financial, na? Okay, how many number of employees you are having? Non-financial. I can inquire that also. So to estimate whether salary is appropriate or not. So inquiry can also be done to which data? Non-financial data. Okay. Next, 3 more inquiry point. Yani imagine inquiry is continuation. Okay. Next point, depending on engagement circumstances, inquiry may also include inquiry about actions taken in the meetings of owners and TCWG. If there was a meeting between TCWG and owners, what action taken by you? Any action taken by you? Next point, communication of the entity they have received or expect to receive. Sir, from whom this communication can be received? From regulatory authority, from statutory authority. Any communication you have received, anything related about non-compliance or something. Okay, you inquire this. Next point, you inquire, okay, for applying other procedures also. So now here I will be ending the inquiry answer. If I ask you as a reviewer, okay, how many procedures you will perform? One is inquiry, one is analytical procedure. Now the question is, inquiry will perform how many? Okay, or what areas? Ratify these 3 points. First inquiry, 6-7 points. Then inquiry, non-financial data. Then inquiry toward this depending on circumstances. 3 points. Action taken, communication received, other procedure. Action, communication, other procedure. Action, communication, other procedure. Action taken because of minutes of meeting, communication done, okay, by regulatory authority or something, and what are related to other procedure. Are you clear, Malik? Aram say, okay, I am telling you, okay, the only thing I should do here should be inquiry. But the problem is, inquiry will not give me a confidence only. Why? Because by inquiry, management may tell something which I cannot relate whether management is correct or not. Example, okay, I am inquiring with management. Management, these related parties are this much. Okay, management say we don't do related party transaction as such, majorly. We don't have related party transaction. I told management only 1 crore transaction with related party. Management says, oh, I inquired. I am telling you, while inquiry, nothing came into my mind that it is wrong. Okay, this is what I need to do. I inquired, management related party. These are so much only. Management is explaining me, Amit, we don't do related party transaction. We are ethical. Hello? Related party, I don't get afraid with wife. How you afraid? You may be afraiding. I don't. Okay, hello? Then I perform analytical procedure. I compared past 4-5 years data, and then I come to know there is a related party transaction many times. Okay, this is what you need to understand. My question, why we perform analytical procedure? We perform analytical procedure to corroborate inquiry. My main task is inquiry, but to corroborate inquiry. Okay, what he is saying, how can I link? He can communicate anything. Okay, but what he is saying, whether I can relate with the past experience. If the past experience things are taken care of, inquiry, I can get a confidence on inquiry. Therefore, analytical procedure comes into picture. Otherwise, there is no requirement of analytical procedure. The main task is only of inquiry. Then why we perform analytical procedure? To corroborate mainly, to understand entity, to corroborate, to identify any unusual relationship. Okay, example, okay, management is telling, okay, management has acquired some financial statement in one of the company, okay, 60% stake. So I told management, it's your subsidiary, okay, prepare financial statements, CFS also you need to prepare. Management says we are following accounting standard, not Ind AS. In accounting standard, if you are aware, there is a temporary holding, which is excluding. Okay, accounting standard, there is a concept of temporary holding where then they are not required. If it is less than 1 year, you are not required to prepare CFS. That is of AFRF. Huh? That is very clear of AS. So I told management, you are not preparing CFS. Why? Anyway, scope is not of my scope is not of CFS. But I am asking management, why are you not preparing CFS? Management say, Amit, this is temporary holding. It is 60% temporary holding. Okay, management, where you will be selling? Next 2 months I will be selling. Now I will compare the past data of investment, whether management has been selling like this only, whether management is doing temporary holding always. This can be done by doing analytical procedure. I do think you are understanding, Malik. My friend, did you understood? This is the overall concept of review pass. Now the next question comes is, why we perform analytical procedure? Close this answer. Okay. Why practitioner perform analytical procedure? Why practitioner perform analytical procedure? Acha. First, close the answer. Inquiry. What you will write in inquiry? How many points? 3 points. 3 points. Now, one is multiple points. Then inquiry for non-financial data and inquiry for 3. Whenever I tell you practitioner will do inquiry in review, these are the things. Make sure this answer will be different from 2410. Why? Auditor doing this inquiry, okay, this answer is same. He is not worried about required to next one. Why? Because he will be taking care of this all element in audit. When you are reading 2400, only first part of inquiry will be there. Baki everything, okay, subsequent events, minutes of meeting, action taken by management. Okay, acha, mere ko batao, this review is taking place on which it is taking place on which day? Acha, this 2400 review is for whole year. So technically this is taking place in the year end mainly year end. So year end mein, therefore we are discussing the action taken. Therefore we are discussing communication, what happened with regulatory authority. Now help me out, auditor doing the review will be year end or interim? Aram say, interim or year end, auditor doing the review? Interim. Because auditor doing the review in 2410 na. 2410 auditor doing review in 2410. He will be doing interim. So why he will check what is the communication with outside one? Okay, why he will check by what is the problem, action taken by many? I will take care in year end na. And year end I will be giving which report? Review report or audit report? So these things are taken care in audit report. So 2410 when you discuss, it will be only this portion of inquiry, first part, that's it. Okay, analytical procedure. Why we perform analytical procedure in review? Okay, the logic is simple, 4 points, read 4 points. First, analytical procedure will help practitioner understanding about entity. Second, it will identify inconsistency or variances. Third, it gives which evidence? Corroborative. And most important, okay, it serves as additional procedure. And technically speaking, what was the only procedure for review? Inquiry. But only to corroborate, additional, to make your understanding clear, we are doing analytical procedure. Else, analytical procedure is also not required. Okay, are you getting the point? So it was only, okay, tell me this amount related party, how you calculate this related party, you tell me. Okay, how you calculate salary, you tell me. How you calculate this one, understanding. Okay, that's it. But only inquiry will not be giving you confidence. Therefore, standard says you should do analytical procedures, so that what he told I can link to with the earlier past experience. I hope the things are clear. This is a very interesting concept. Huh? The only thing is you don't you are doing all interesting concepts on one interesting day. Okay, but that's a part and parcel of this batch. This is nothing to be surprised. But this is what altogether concept. But it's very interesting. If you focus on this, what you are learning is something which need to be technically done. Now my question is, okay, after analytical procedure is done, I am satisfied? Yes. So if I ask you, okay, design review procedures for 2400, what is your answer? Design review procedure for 2400. Inquiry, analytical procedure. So how much answer you will be writing? Inquiry get 3 points. Okay, 3 plus, understood na? Analytical procedure, this one. That's it. Yeah, analytical procedure is serving additional procedure. It's giving a corroborative evidence, but it's serving as additional procedure. It's serving as additional procedure. It is giving which evidence? What is corroborative? To match with the earlier evidence. I hope you are clear. Okay, now standard 2400 says, reviewer, because you are in year end, reviewer, you are in which end? Year end, and you will be giving only review opinion on complete financial statement. So boss, you take care of 5 elements additionally, 4 elements additionally. First element, related party. Second, fraud and non-compliance. Third, going concern. And fourth, using work performed by others. These 4 elements should be taken care. These are, okay, if you are with me, okay, if I ask you, okay, review procedures, overall review procedures, how many overall review procedures are there? No, overall review procedures, pura review. Sorry, review engagement. Procedures to be performed in review engagement. Procedures to be performed in review engagement. How many procedures are there? 5. First, I will determine materiality. Second, I will determine understand entity. Third, I will perform procedure. Fourth, I will be focusing on specific circumstances. And last, perform other procedure if necessary. Is my clear? My friends, everybody with me? So I ask you, okay, how many procedures are there in review engagement? 5. How many review procedures are there? 2. Inquiry plus analytical procedure. If I ask you review procedures, 2. Review procedures, 2. Engagement, review engagement procedures, 5. Review engagement procedure, how many? 5. Okay, so tell me, okay, here screen, again you focus on the screen. I am using the separate color. Okay, pink. Help me out. Had we closed the first one? Okay, had we closed the second one? Had we closed the third one? Yes, now we are on fourth one. In fourth, how many specific circumstances are there? Tell me. Related party, fraud and non-compliance, going concern, and others. But don't write other auditor 600. Other using the work. Don't use 600. Don't tell this reviewer will use SA 600. That's what I am telling you. You will be writing a concept of 600 only. But don't write as per SA 600, this reviewer will use SA 600. Okay, but this will happen in 2410. Because in 2410, this is a presence of mind. If you apply this presence of mind, the things will be. If at all you read it later stage, but that presence of mind is required whenever you are reading it out. Okay, so first of all, read related party. What practitioner should do? Okay, make it sure you understand why these 4 points on specific circumstances are given. Because this reviewer is a complete year reviewer. So this he will be taking care in month of March. And year end, na? So year end, what are the specific things he need to do? Related party. The practitioner shall remain alert for arrangement or information that may indicate existence of the party relationship or transaction, and that may management has not identified this disclosure. If you understood, this is nothing but 550. If you studied 550 yesterday, if you recall, check 550 in chapter 5. You'll come to know this is the same one. Okay, but the difference is this is a reviewer. Therefore, he need to perform this. Okay, again, in fraud, the practitioner shall communicate the matter to an appropriate level of senior management or TCWG. Make sure. 2400, 2410. If you detect the fraud in company, okay, if you detect the fraud in company, if you are a auditor, section 143 is applicable. Therefore, you report to central government. Reviewer, no central government comes into picture because 143 is not applicable to reviewer. It is applicable to auditor. So, if you detect the fraud, you are not required to respond according to section 143 subsection 12. Are you getting the point? Okay, just make sure. But if this fraud I get in 2410, because that review will be an auditor. So you need to be clear. So if you detect a fraud in 2400 as a reviewer, you only inform management. But which management? Appropriate level. Appropriate level means senior level. You inform appropriate level of management as well as TCFG. That's the only concern. You are not required. If it is 2 crore fraud, you are not required to go to central government. Who will inform to central government? Auditor of that company. Or there are 3 auditors. Company auditor, statutory auditor, secretarial auditor, and cost auditor. All 3 are responsible in section 143, subsection 12. Okay, if you are not aware, it's okay. Doesn't matter. Companies Act. If you want that Companies Act lecture, I will give you access. Don't worry. Okay, complete Companies Act. Okay, so you can spend that time. Okay, 6 hours, 8 hours, 8 hours approximately is there. I will share with you. You will understand all section in detail. If you understood, even I can link directly with sections also. Don't worry. So whatever if you are required. But bhai sahab, the things are very clear. So here don't ever write. Okay, here if fraud is there, section 143.12 is applicable. Okay, fraud is there. SA 240. The next attempt is sure. Okay, so Malik, please make it 240 will not, but in 2410, whenever you go in 2410, apply the logic of standard also. No worry. First 2400, safeguard yourself. You make sure you are using the word practitioner. Okay. Going concern. Now here going concern, don't write 570, but the things is as per 570 only. Okay. And everything is like audit only. The only thing is you are doing inquiry, nothing more than that. Are you getting the point? You are doing only inquiry. So first, events and conditions that may significant doubt about entity's ability going concern, the practitioner shall. Which were the events and condition if you remember? 3 events and condition if you remember: financial, operating and other. If this event and condition, practitioner also come across, what he will do? He will inquire of management about plans about future actions. EIS removing. Okay, evaluate the results of those inquiry. Continue to present financial statement on going concern basis, whether it is barobar, whether it is appropriate. Conclude whether financial statements are materially misstated. Okay, and consider management responses. Sir, what should be done here? Consider this responses. That's it. You are required to do only inquiry. No other thing. Read very carefully. Inquiry only will help you. Okay, and after inquiry, they are saying evaluate the results. Evaluate means compare. If you think management responses are okay and they have been disclosed, you can give unmodified opinion. Which opinion, beta? Which opinion? Unmodified. In which? Review. Okay, if you think no, by they have not given a perfect answer, you can go with modified opinion in review. Sir, how many types of opinion will be there in review? 2. Unmodified, modified. In modified, how many will be there? 3. Qualified, adverse, disclaimer. Same. Review also same answer. Acha, when you give qualified? When you give qualified? Okay, if when you give qualified? Material not pervasive nahi na beta. Financial statements are materially misstated and the item is material but not pervasive, or unable to obtain sufficient appropriate evidence, but it is the item is material but not. Same logic comes in qualified here. Reviewer में same answer है. Why I will do time reading रे? Okay, focus on the same content ना भाई साहब. Okay, do once, complete it, done and dusted. Okay, to be very precise, I'll just focus on this. Okay. Page number 10.5, come to 10.5. 10.5, everybody. 10.5, everybody. Okay, read from this line. If financial statements are prepared with using fair presentation framework, the practitioner consideration shall include the overall presentation structure content. Remembered? What is this overall presentation structure? SPC Ray. If you are checking fair presentation, so you need to check additionally SPC. And you are not required to conclude only on AFRA basis. If you are checking compliance framework, you are not required to check SPC. But if you are doing fair presentation framework, you are required to check SPC. My friend, hopefully you are aware. Okay, and whether financial statement include related notes. Notes means SPC notes. Structure, presentation, content and notes. Okay, unmodified. Tell me what is unmodified. Read this. Fatafat, quickly I want. The practitioner shall, unless otherwise required by law and regulation, use one of the following phrase. Now, what is one of the following phrase? Based on a review, nothing came to our attention that causes us to believe that financial statement do not give true and fair. Based on review, nothing came to our attention that causes us to believe that financial statements are not prepared. What is this 2.5? It is to A and B. Acha, technically, first of all, are you clear with wording? Unmodified mein? Based on review, nothing came to our attention that causes us to believe that financial statement do not give true and fair. Okay, this is nothing but fair presentation framework. And second, based on our review, nothing came to our attention that causes us to believe that financial statements are not prepared. Okay, in accordance with AFRF. In accordance with AFRF, then it is compliance framework. So help me out in unmodified opinion. Unmodified conclusion. Huh? Unmodified opinion, unmodified conclusion. Help me out. True and fair. Huh? Acha, what we do give in audit opinion? What we give in audit opinion? Audit opinion, what we say? Financial statements are true and fair. Here, nothing come to our attention because we did inquiry. So nothing came to our attention that made us believe that financial statements are not true and fair. अरे आत्मा समझा क्या? Don't get confused with the wording. Don't tell अरे they are giving financial statement not true and अबे do not give true and fair मतलब is in context with the starting wording. Understood क्या? So this is which conclusion? Unmodified or modified? Wording is not opinion, conclusion. Okay, what if I need to modify? Look at first point, modified conclusion. Next page, when modified conclusion happens, two things, either financial statements are or unable to obtain. Everybody clear? Now I will not prepare a matrix once again here. Huh? Okay, you are already aware about the things work. Next line. Okay, when practitioner modify the conclusion expressed on financial statement, the practitioner shall use which heading? Qualified adverse disclaimer and provide description of the matter. Remembered kya? Remembered Malik? Description of the matter. And if you are aware, okay, read this and tell me what is this one. If at all you can help. What is this? I discussed today only. Management limitation of scope. If rather than giving disclaimer, withdraw. Okay. So what they say, first due to limitation on scope, check practitioner whether you are unable to obtain sufficient appropriate documents. If it is there, consider the effects. And consider the effects. If it is pervasive, withdraw. The same concept what you applied in 705. Nothing extraordinarily to be focused here. Then what is addition concept should be done in review? That is what last 2 page which we are pending. And here very important concepts comes into picture, my friend. My friend, before that, I do think you are clear with procedure and you are clear with opinions. Opinion nahi, sorry. Conclusions. So how many types of conclusions are there? Okay, what are the 2 types of conclusion? What are the 2 types of conclusion? unmodified and modified. If it is modified, how many types of conclusion? 3. Qualified, adverse, disclaimer. The things are same. If I ask you, explain qualified conclusion. Explain qualified conclusion. Financial statements are materially misstated and the item is material but not pervasive. Or unable to obtain sufficient appropriate evidence and the item is material and not pervasive. You need to keep in mind, boss, that is not audit evidence. That is an evidence. Sufficient appropriate evidence. Okay. See, understand, at least celebrate that you are aware about this concept now. Okay. To remember this concept, you require an efforts. Okay. That is what additional. What you will do after going home? Playing Gotia? No, something need to be done by you also, no? But now going home, okay, just make sure you skeptically take care of this one. Okay. Papa, I am telling you, my favorite are this. No judgment required. Direct question, direct answer. But the only problem is, first thing is to crack how the question is coming. And second, I need to be skeptical while writing the answer because I should not integrate audit into this. So now coming back to the answer, come back to the point. Please, this on the screen. On the screen. Last concepts, man, everyone. First point, my question, what is an engagement? Help me out. What while doing 2400 engagement, what is the procedure to be performed? While doing 2400 engagement, what is the procedure to be performed? 5. Okay, everybody clear? While doing the review, how many procedures I will perform? 2. Inquiry and analytic. First we have done, second we have done, third we have done, fourth also. Now clear fourth? Fourth we have done. Okay, fourth is done. Now fifth is where our main individual question can come in examination. Now you should be skeptical and listen. Again, it's only about listening. Writing the answer will be very easy. Damn easy. First thing, okay, now we are coming on additional procedures. Now listen, okay, now suppose first discussion comes is you obtain sufficient appropriate evidence. You obtain sufficient appropriate evidence. Okay, after obtaining, you are concluding 2 things. What are the conclusion of 2 things? Read this. Aram se. Okay, additional procedure. When practitioner becomes aware that financial statement may be materially misstated. What practitioner conclude? Conclude that matter is not likely to cause financial statement as a whole to be materially misstated. My question, if he concludes A, read A, what he will tell, what he will do. He concludes that the matter which is misstated is not likely to cause the financial statement as a whole to be materially misstated. If he conclude this, okay, it's not a material misstatement, then what he will conclude? Unmodified conclusion. But the problem starts, or determine that matters cause the financial statement as a whole to be materially misstated. Can you help me out? Where the reviewer will take steps in A or B? Read carefully, read carefully, read carefully. You read carefully. I am having a knowledge of this, don't worry. What is a concept? Concept is that, okay, practitioner is aware about material misstatement. Practitioner is aware about material misstatement and he is concluding either A or B. He is concluding either A or B. Which is worrisome for practitioner? A or B? Which is worry for practitioner? A or B? Read. It is B. In A, practitioner is concluding whatever misstatement is material, it is not affecting financial statement as a whole. If it is not affecting financial statement as a whole, ignore. But if item is affecting financial statement as a whole, your inquiry and legal procedure is not giving you confidence. You perform inquiry and legal procedure more towards that area which is giving material misstatement, and if required, perform substantive procedure also. Perform, increase the scope. You can go with confirmation also. Perform the procedure. Next line. The practitioner believes may cause the financial statement to be materially misstated. The procedure may be. Understood? So my question is, when this procedure are performed, next 2 points are performed. I am telling you next 2 points. When they will perform this? In which? Okay, sir. Acha, I am ekdam aaram se skeptically, everybody. Acha, read this 2 points. What he will do? What he will do? Additional inquiry or analytical procedure, other types of procedure. What is other types of procedure? Okay, other types of procedure can be SP. SP means substantive procedure. It can be ICI, ORR, whatever you want to do. Okay, what I am asking you question in examination, listen and check only yellow color which is on the screen. Okay, only focus on the yellow color, don't focus on any other color. I am asking you, when practitioner becomes aware that financial statements are materially misstated, what practitioner will do? I am asking very clear. Amit Tatar is a practitioner. While doing the review, he came to know that financial statements are materially misstated. Financial statement may be materially misstated. Answer. Batao now what he will do? Perfect. Don't write directly inquiry and that one. First, practitioner will conclude 2 points. In this answer, you will be writing this also, and then last one. Practitioner will determine, conclude whether that financial statement which is materially misstated is affecting whole financial statement or it is not affecting whole financial statement. If it is affecting whole financial statement, he will perform inquiry and analytical procedure for that item, and he may also perform other procedures. Understood? Okay, now I am asking the question. Okay, auditor, practitioner identified financial statements are materially misstated and also conclude that financial statements are having impact. Okay, that material misstatement is having an impact on overall financial statement. What practitioner should do? Only two things. What are the two things? Inquiry and other types of procedure. Are you getting the point? Okay, make sure you are very clear when question comes. How many lines will be there? Okay, you go in main books also. This is almost this much line only. Hardly 1-2 line. But that has been explained. What I have explained you. Imagine 4 marks. 4 marks. Not 2 lines, but to be very precise, it will be 4-5 lines. But imagine what memory you require for answer. But the only thing is cracking the right answer. If I ask you, okay, practitioner become aware about financial statements are materially misstated. Okay, then you need to write 3 points. First, A, this one, and this one also. But if I say financial statements are materially misstated, concluded, and he also concluded that is affecting overall financial statement, you are required to write this much only. Bharat Mata ki Jai. Understood? Hopefully, I do think everybody is clear with this point. Perfect. Okay. Now here you will leave this line. We'll discuss this tomorrow when I'm discussing with 560. Sorry. When I'm discussing with 560, just write SA 560, refer 560. So I will tell you what I have deleted here. What I have deleted here, I will discuss with you tomorrow. Green wala portion. Clear, Malik? I have deleted some content here. So which content I have deleted, I will discuss tomorrow when I go with SA 560. Only the thing will be SA 560 will be from auditor point of view. The same answer will be here from reviewer point of view. Reviewer practitioner point of view. Perfect. I hope everybody is done. Acha. Okay, now my question comes. Do we need to take WR also? No. Inquiry we have done. We don't have any other option. We have done what? Inquiry. We need to take WR because inquiry ka outcome is WR. Inquiry, what is the evidence for you? Tell me. You did the inquiry. What is the evidence? You did the inquiry of related party. What is the evidence with you? Tell madam. WR only. So there is no other evidence only. So WR. So this standard suggests WR should be taken for what you have been given a list. And if WR is not given, what will happen? Which is we discussed yesterday. Remember, reevaluate integrity and other things. If management, he is not giving WR. He is saying, I was not there. The same reviewer will face the problem, na? So in that case, what you will do? Okay, the same answer what you did, 580. The only thing is you will not write as per 580. It is as per SRE 2400. Everything is as per SRE 2400. That's it. I hope things are clear. So first of all, WR is required. WR, next. Okay, sir. I am focusing on red color. The practitioner shall request management to provide WR that management fulfilled its responsibility and described in agreed terms. WR include. Yani management has fulfilled its responsibility. So what is the responsibility? Financial statement preparation, management responsibility. All transactions have been recorded and reflected in financial statement is management responsibility. So first of all, you will obtain WR for management responsibility. Then you are required to obtain specific WR. Then you are required to obtain specific WR. What are the specific WR? Okay, so I am highlighting only keywords. Remember, rectify that. What is subsequent events? Remember subsequent events. Material commitments, material non-material. Answer is over. So my question, WR should be taken for what things? Two things. One is management responsibility and one is others. Management responsibility, 2 financial statements you have prepared and transaction have been recorded. And others is a list. Okay, so related party has been done. Okay, subsequent event, fraud is there, non-compliance is there, going concern is there, subsequent event is there, material commitments and non-material transactions also. Non-material, non-monetary commitments. Understood, Malik? Okay, if management not giving WR or WR is not reliable, I hope this is clear. Clear, Malik? Okay, that's it. The WR is over. There WR. So all this thing is additional procedure. All this thing is additional procedure, Malik. All this thing is additional procedure. Okay. Next point. Can there be a chance of disclaimer of opinion? Can there be a chance of withdrawal point? Reviewer, check it out. Okay. When you should do this, and this is also discussed from SQC1 point of view, read it. The practitioner shall disclaim a conclusion or withdraw if withdrawal is possible if there is a doubt about integrity and management is not providing WR. So if management is not providing WR, nobody tell, okay sir, you qualified. Why? Because our procedure is only very important. This was not there in audit. In audit, if the management does not give WR, we don't go disclaimer of opinion. We check implication on 705. In review, 2400 says, if he does not provide WR, disclaim. Disclaim. Okay, if WR is not received in audit, then implication on audit. It can be qualified also. It can be qualified also. It can be qualified also. In a review, why it is saying disclaimer? Because my complete review is based on inquiry. Analytical, why we are doing analytical procedure here? Ganesh, it is in collaborative. Main point is, and how, what is the evidence of inquiry? WR. You don't take any other, in review we have a set of document is of WRs. You will not ask, give me pay slip. You will not ask, give me pay slip, because it is not your scope. You will ask whether salary has been calculated like this. You will say yes. Is it calculated on the basis of this? Yes. Okay, that's once I come out, oh no, you are saying something because analytical procedure, I compare analytical procedure and I found out. Then I can increase my scope. If there is a financial statement or material misstated and it may have an impact on overall funding. Else I will be asking you. That's it, review. Understood the review? Now I do think review is very clear. It's very focused. Don't divert yourself. It's a very small engagement. Imagine, yaar. Okay, 38, 39 auditing standards, only one standard. So you can imagine how much time and efforts is required in audit and how much time and effort is required for review. Right? Okay, so we require 3 days to complete that audit standard. Okay, this is next 1 hour we completed. Okay, next one, last 1 hour also we completed because you are sleeping. It would have taken 45 minutes also. Okay, I do think you are getting the point. I hope you are clear. The review. Now main question comes and confusing question comes. Read this point. Evaluating evidence obtained from procedure performed. Help me out. The evidence should be sufficient and appropriate, na? Okay, sufficient appropriate. No, kya? Oh, beode. Sufficient appropriate, but sufficient appropriate audit evidence nahi hona chahiye. Sufficient appropriate, na? Arey, the evidence should be sufficient and appropriate. The practitioner shall evaluate whether sufficient appropriate evidence has been obtained from procedure performed, and if not, the practitioner shall perform other procedures. Star mark, star mark. The procedure performed is not sufficient and appropriate, is able to form a conclusion. मतलब अगर आपको नहीं हो रहा है, you should not form a conclusion on opinion. मतलब on your report, review report. Sir, question. This should not be confused with about this question of yellow point. Here you got a sufficient appropriate evidence that financial statements are misstated, and you are concluding that it is having impact on overall financial statement. Here you are not getting the evidence only. So if I am not getting evidence, what I should do? What I should do? I should inquiry. I should extend the procedure. I should extend the procedure. Everybody clear? Same logic. I will extend the scope and procedure. That's it. Okay. So what practitioner can perform? What practitioner can do? Read this. The practitioner may. Acha, when he will be doing this tarmac? When he will be performing this? If sufficient appropriate evidence is understood, na? Then you will be writing this answer. He will extend the work performed or perform other procedure judged by practitioner to be necessary in circumstances. If you are unable to obtain, inability to perform the specific procedure do not constitute a limitation on scope of review. If practitioner is able to obtain sufficient appropriate evidence by performing other procedures. If you perform, example, you are required to do confirmation and you are not doing confirmation because you are saying no, it's a review, I will not do C, I will do only I and A. What is I and A? Oh, I see oral message. I will not do C because it is not my scope. Okay. So institute says if you are not doing C and you are not able to obtain sufficient appropriate evidence, you can't use this as a base for modifying the opinion. You can't say, okay, I was unable to obtain sufficient appropriate evidence because, okay, sir, I didn't got evidence. You perform the procedure, other procedure. If by performing other procedure you are not able to obtain, then tell that. Else do not tell that. I hope this is clear to you. Okay. And forming practitioner conclusion. Okay, this is very clear. This is the same. Practitioner conclusion. In forming, check out uncorrected misstatement identified during the review. If uncorrected misstatements are there, what is uncorrected misstatements? Identified misstatements. You inform management. Management has not corrected. Everybody clear? And secondly, qualitative aspects. Do you remember qualitative aspects? Yesterday we discussed qualitative aspects also. Okay, sir. If you remember something which the industry is following, you are not following. Okay, sir. LIFO and FIFO both are correct. Okay, sir. You can follow LIFO also, you can follow FIFO also. Industry is following FIFO, not LIFO. Then also this is something that is qualitative aspect. So in review, you should consider qualitative aspects also. That's it. This is your end with review. Okay, so you go with report. Page 10.6. This is report. You can read the report. I am not reading the report. Report is the same logic. 10.6. Almost same, similar point. Just I am coming on 10.7. Come on 10.7. See, here also it is EOM, OM. What is EOM, OM? Emphasize and other. What is emphasis of matter? Fundamental. What is other? Relevant. Fundamental matter of financial statement. Relevant to auditor responsibility, audit report. Same concept except here auditor responsibility, audit report. It is practitioner responsibility and practitioner report. That's it. Same logic. No change. Okay, other reporting responsibility. Do you remember? 10th paragraph. Law regulation required. This can be done. And document what need to be documented. They have told you should document this one. Who performed the review? When the review, you perform the review. Who reviewed the work as per quality control? Acha, if you remember EQCR, yesterday we discussed. Yesterday or day after yesterday. EQCR, engagement quality control review. That was applicable only for audit of listed entity. But what if our SQC say it should be done for review of listed entity also? So whatever it may be, okay, you prepare a documentation about review. This document is for your documentation, huh? Your documents. Somebody coming, checking you. Okay. So what procedures you performed, what results you obtained, what significant matters you have done, and who you should have document about who performed the work, the date of such work performed, who reviewed the work, okay, for quality control and so on. Okay, this all is documentation. Okay, so who should prepare this documentation? The reviewer matlab is CA in practice. Sir, in audit we didn't study this. you have studied, but this is in standard 230, which is not in syllabus. Okay, whenever you study 230, remember this is what exactly 230 is saying. Who did the audit? Who reviewed that task of the company, the article, or who have done the work? That is something taking care of this. So, sir, what is the difference between audit and review? List is there. Fatafat close karo. First, audit give, review give. Audit have which procedure? Elaborated. Review have fewer procedures. Okay, which conclusion in audit? Reasonable, limited conclusion. And assurance opinion, assurance conclusion. Only shift the word conclusion and opinion. That's the difference between audit and review. Okay, that's a question has been given in your book, so I kept it as it is. Okay, and this brings to the last standard of review to end 2410. Sir, in 2410, okay, you will be facing some relaxation with engagement acceptance. Why? Okay, second, now here, okay, the problem is only when the auditor is doing the first time review. If suppose I am a first time auditor, if I am a first time auditor, some procedures need to be performed. Example, understanding entity and its environment. Acha, my question, if I am an auditor, will I do understanding entity and its environment in SA 315? Then actually technically not required also. But review this 2410 say, if you are auditor, you are coming first time. You are coming first time and you are doing the review. Okay, before the audit. Before the audit you have started with review. Matlab you are auditor, but you have not started any audit work yet. And you started with review. First you should obtain understanding. See, understand, when you do the audit, your understanding of entity is different. When you do review, your understanding of entity should be different. Therefore 2410 says, whenever you are doing the review first time, you always obtain an understanding of entity and its environment. But which understanding? This is not what understanding you do in 315. It is not about 260 and 40. Okay, sir, 260 and 40 you already have, na? Acha, who is the reviewer here? Independent guy, what? Auditor, na? Who is the reviewer here? Auditor, na? Does, my question, who is the auditor? Will he do 260 and 40 or not? Yes or no? So already does, that task is done. Now why he required to perform again and again in review also? Focus only from niche areas. Sir, what is the niche area for review? Because this is a limited review. Secondly, it is an interim. It is not year end. So here in this standard, don't tell me about going concern. You just do only inquiry about going concern. Subsequent event, only inquiry. Leave. Litigation claim. Okay, so here you will do only inquiry of litigation claim. Baki leave. Sir, why? Are litigation claim I will check in audit in year end na 31st March. Okay, so you tell me in June whatever litigation claim is there, will it matter most, or in 31st March will matter most? So that's it. Now they say leave many things in the year. You just only do inquiry, perform analytical procedure, get the comfort zone. If you are not getting the comfort zone, okay, whatever comfort zone you are not getting, shift in audit. Use this data for audit rather than doing the review. Okay, here it is an LR, limited review, which is also an interim. So not to worry. Just only overview. Nothing came to in my mind that you are doubtful. Because anything came to in mind, I will deal in audit, fellow. Okay, because anything came in my mind, I will not take in review, na. I will consider that in audit, na. Like, understood? Okay, not understood. That's it. That's the scenario. First question, ignore. What is the first question, sir? Okay, first question, agreeing the terms of engagement. Why ignore? We are already engaged. Okay, so here the 2410 says, oh yeah, acha. Okay, make it sure what is interim. Read this interim financial statement. Read 2 minutes. It will require 2 minutes. Read it out. Interim means what? Help me out. Interim means shorter than financial year. Next, okay, SAE, SRE 2410 applies when review is performed by independent auditor. That is also clear. Sir, agreeing the terms of engagement, it says there is no precondition to be required to be focused. Only you should have an engagement letter so that things are clear. So engagement letter should have objective and scope of review, management responsibility, extent of auditor responsibility, assurance obtained, and nature and form of report. 5 things. What is the 5 things? Objective scope, management responsibility, reviewer responsibility, auditor. Now auditor word will be there. Auditor responsibility, okay, assurance obtained, that limited assurance will be there, and form and nature and form of report. Next, understanding entity and its environment, including internal control. Now somebody may debate that, sir, in SA 315 we already do this, but in review also, for the auditor doing the review of interim financial statement, understanding entity for interim scenario. Interim scenario, understand that. So sir, what is their scenario? Plan and conduct engagement so as to enable, identify the types of potential material misstatement and consider the likelihood of their occurrence, and select inquiry and analytical and other review procedures. Sir, in this case, in 2410, if I use other procedure also, will it be worry for me? Why? Because I also doing an audit. So therefore, increasing a scope is not a big deal for here in this 2410 examination. Okay. So this is first answer to be focused on. Make sure you remember this answer, star. Sir, what is this answer? Okay, understanding entity and its environment. Understanding entity and its environment for which procedure? Review procedures. So what are the things? Okay, reading documentation which is necessary for preceding year's audit. Significant risk. Now here significant risk is basically what you are discussing, 6 points. Okay, most recent annual statement or prior period. Take care of materiality. Okay, nature of any corrected material misstatement. Anything which you have corrected, I'll consider in review. Significant financial, accounting and reporting matters. Audit procedures to be performed. Anything. Results of audit procedure can be used in review. Results of internal audit performed. Inquiry of management. Okay, inquiry of management. 3 things. About changes in business, about changes in internal control, about interim financial statement. So business, internal control, interim. So last 3 answer. So to be remember easy से याद रखने के लिए, if I focus on to remember easily, understanding entity plus its environment. Okay, for review, easy answer is what? First, second, third. Remember inquiry with whom? Management. First is business के लिए, second is internal control, and third is interim financial statement has been prepared or not. 3 points of inquiry you should remember. Next, okay, 2 points more. One is results of audit, because I am an auditor. Results of audit procedure, and most important, okay, is the uncorrected misstatement. Corrected misstatement. Because I am an auditor, so I will be more concerned with this point. These are the first 5 points. Inquiry, result of audit, and corrected misstatement. And last 2 points you can remember basically with respect to very easy points. Materiality can be there. Previous year report can be there, which can be used, or SR can be there. What is SR? Significant risk. These are the 8 points can be remembered very easily. Understanding entity. Just I am breaking down the sequence. I am going other way around. So inquiry with management. What is this question? What is this question, Malik? Understanding entity and environment. Who is doing this understanding? Auditor. In which engagement? Review engagement. Don't ever understand this is an audit understanding. Audit understanding is as per 315. It includes, I don't know if you are aware, okay, 6 elements. External environment, internal environment, past, okay, future, accounting system, internal control system. If you remember COIC, components of internal control, all understanding is required as an auditor, which is not required by a reviewer. So make sure you are clear with this point. Okay. Next, our favorite answer. What is the procedures? Acha, help me out. What are the review procedures for the reviewer, practitioner? 2400. Inquiry plus analytical procedure. That's it. But here, whenever you are writing in audit 2410, hamesha answer rahega. Every time the answer will be inquiry, analytical procedure, and other procedures. Always. Why other word comes into picture? Because I am auditor. I have a flexibility. Reviewer does not have a flexibility, because if reviewer increase the scope, now cost will increase. Okay, and that is not an agenda of then review. But auditor, even if you increase the scope, is it a part of audit also? So therefore, okay, please make it sure. Inquiry, analytical procedure, and other review procedures. The auditor shall perform how many things? Following. Read the following. Everything is same scenario. How do you not audit? First, reading minutes of meeting of shareholders and TCFG. Considering the effect, if any matter giving rise to modification of audit or review report. Any report has given modification. Communicating where appropriate with other auditor. What is other auditor? 600 if required. So first, second, third is generic answer. Fourth, our favorite answer, inquiry. Forget everything about inquiry. Okay, so all this inquiry you can write what you discussed there. If you remember 7 points, related party, going concern, subsequent events, okay, so significant risk, complex transaction, unusual transaction, okay, everything, write that only, don't read this one. So this inquiry, this inquiry is inquiry point. You can focus on any other element also. Inquiry about a fraud. And after that, the fourth point comes applying analytical procedures. And last is reading interim financial information and considering whether anything came to auditor attention. So my question, how many review procedures are there in interim financial statement review? First, inquiry nahi. Now first formal answer. First you will go with MOM, minutes of meeting. Second, okay, you will check modification ground, anything. Third, you will check SA 600. Fourth, you will do inquiry. Fifth, you will do analytical procedure. And sixth, you will read interim financial statement. These are the 6 points. In inquiry, there were multiple points. Check it out. एक बार check कर लो. 3.4, check it out. All review procedures. So what are the other procedures in this auditor? What he will do? He will check minutes of meeting. He will check modification impact. He will use 600. He will do inquiry. He will do analytical procedure. He will read interim financial statements. Now the question comes, if anything comes to the auditor, okay, he will do what he will do. That is a different element. But most important, interim financial statement, okay, which is prepared, whether it is adequate or not, that is need to be checked in here. The next two concept is again very basic. The auditor may obtain evidence that interim financial information agree or reconcile with underlying account records by tracing interim financial statement into. Means what? Auditor can also compare, okay, interim financial statement with books of accounts, which was not there in earlier standard. That was not in my scope. I can compare interim financial statement with books of accounts. Why I will compare interim financial statement with books of accounts? I am reducing my audit work. Next step says you can compare that one. The accounting records, you can check it out. You can check it out with consolidation and other supporting data if required. The auditor should inquire whether management has changed its assessment of entity's ability to continue as a going concern. What you will do? You will do inquiry and you will consider adequacy of disclosure. If you remember, adequacy of disclosure means what? If EIS is being removed, whether it has been disclosed or not. If you remember, para number 5. But don't write here para number 5 because this is review report. That will be discussed year end. Right now I am in which month? This is which month I will be doing? July first week. This is everything I am doing in July first week. For which period? April, May, June. Okay, or it can be done in October first week. For August, September, July, August, September. Anything. Okay. Evaluation of misstatement. What it suggests, listen carefully. Evaluation, read evaluation of misstatement. The auditors exercise professional judgment in evaluating materiality of any misstatement the entity has not corrected. Then what he will do if entity is not corrected? He will not consider in review, make sure. He will shift in. Acha, not correcting? ठीक है. I'll meet you later on. Meet me later on. Because review report, nobody is interested. Nobody is interested. It is because of compliance of SEBI. Where profits figures are highlighted or something like that. Okay, meet me later on. Next point, I do think you are already aware, WR. WR. Okay, do you think in here also review we need to have WR? Okay, now don't ever write a financial statement. Okay, remembered na? Internal control, you take a WR. Now this all WR is taken once. If you are taking in review, you will not take in audit then. Responsibility WR. But if you are not taking in review, then you take in audit. This is always a conceptual point. But if you remember one thing I told you, WR biggest problem is when we discuss about review, we take a WR, but year end during the audit also we take a WR for complete year. So it becomes a duplicate set of WR. So you just decide in which you should take WR. There is no worry that this WR should be taken here only. Some WR may be taken here, some WR may be taken in audit during the period. But few WR they have given. First, okay, design and implementation of control. Interim financial statement is prepared by you. Okay, uncorrected misstatements. Okay, so you have taken, you are telling that uncorrected misstatement, the misstatement which are not corrected, you are okay with it. Okay, so significant facts you are disclosed to me. You are disclosed or risk to me. All non-compliance to me. All significant events to me. So what are the 6-7 points here? First, internal control. Interim financial statement. Uncorrected misstatement. Significant facts. Risk. Non-compliance and significant events. This case give me in writing that you have disclosed everything to me. You mean writing that you have disclosed everything to me. Just make sure this is not about disclosure. Okay, this is all about that effect of uncorrected misstatement aggregated by the auditor during the review. You have not corrected. You have not corrected. Give me in writing. You have not corrected. And I will use this in audit, not here. I am not worried at all also with this point. Not rectifying, don't worry. I will check it out. Okay, sir. Next point 3.7. I do think you are clear about 3.7. 3.7 I am not required to explain anything also. What is auditor responsibility for accompanying information? It should not be inconsistent. Okay, what is meaning of accompanying information, Malik? Other information, supplementary information. Acha, which standard? Acha, I don't know how many of you will remember. My God. Which standard check for consistency of other information and financial information? 720. 720. Other information should be consistent with financial statements. Okay. Communication. Now this is again a basic structure of the report. Okay. Communication. Toad man. A matter came to an auditor attention. Listen carefully. Cause that auditor to believe that it is necessary to make a material adjustment. Very important in 2410. 2410, very important. If any matter comes to an auditor attention, which cause auditor to believe that necessary to make material adjustment. What is the word? Material adjustment. Acha. Okay. Acha. Let me give before that. Help me out. In 2400 review was of interim or full financial statement. Okay, it was financial statement, so it should be in accordance with AFR na? AFRF na? Okay, when we take about interim financial statement, okay, there is no concept of only AFRF because management may say, I will not disclose this in interim because I will disclose this in full financial statement. It may happen. Interim, 3 months, I don't think so. It required to be disclosed. That's exactly where I am discussing now. Okay, so communication. Please listen carefully. Very important. If a matter came to auditor attention that causes auditor to believe that necessary to make material adjustment, means adjust this amount, adjust the disclosure. I want this disclosure in your interim financial statement. The interim financial information is to be prepared. The auditor should communicate the matter as soon as practicable to appropriate level of management. Immediately inform. When in auditor judgment TCFG do not respond appropriately within reasonable period, the auditor should consider, listen, very important, auditor should consider whether modify the report or withdraw engagement. And if he withdraw engagement now, he need to resign from audit also. Here he cannot withdraw engagement only of review because this review to be done by. So if he thinks I am withdrawing from reviewer, I need to resign. Possibility of resign. This is what they are saying. Means imagine what is the discussion here. The discussion is almost a last point. Malik, take, bring your power back. Bring your power back. Yes, man. Yes, man. Yes, man. Then we'll have a tea. Yes, man. Yes, man. Coffee. Okay, coffee. Yes, man. Rice. Yes, man. Sambar. Chana masala. Pavada. Yes, man. Yes, man. Yes, man. Yes, yes, yes. Yes, sir. Yes, sir. So if I am an auditor and reviewer, and I think in interim financial statement there should be material adjustment, which you are not doing. This is a problematic way. I informed material adjustment karo. He is saying no. Hari bhai, Gopi bhai, material adjustment. Now Hari bhai, Gopi bhai, there is a material adjustment in my life. Hari bhai, Gopi bhai saying no material adjustment. Now they are not responding in reasonable time. Now, first of all, I should understand whether I should modify my report. Which report? Review report. I will modify. And what modify report? When I say modify report, what opinion I will be giving? That, okay, I will not be saying financial statements are not true and fair. Nothing came to my view. Okay, so in review report, whenever we modify, we always say, okay, the review report is actually not reliable. Financial statements are not reliable. Interim financial statement not reliable. So here, if Hari bhai and Gopi bhai is not responding, okay, first I can modify the report. Or second, if I think material adjustment is very big amount or big structure, what I should do? Withdraw. And if I withdraw, then resign. There is a possibility of resign then. You can't continue as audit and not doing this one. And why means, sorry, material adjustment, you are withdrawing from audit also. In interim, it can be a misleading also. It is need to be taken care. Important from examination point of view. Amit Tate doing the audit. Okay, while doing the review, he asked with the Ganesh, and there was a material adjustment required in contingent liabilities. Material adjustment required in going concern. Material adjustment required in some disclosure. Okay, Ganesh bhai don't respond. Then Amit Tate approached Gopi bhai and Raju bhai. Gopi bhai, Raju bhai on 25th March, 25th July, okay, and till 15th August they didn't respond only. What Amit Tate should do? First, Amit Tate should consider whether the report should be modified, or he can withdraw from engagement, and also considering resignation from audit engagement. Remember, if you write withdraw from review, withdraw from audit also. Everybody clear? Everybody? Okay, then it is 3.9 is reporting your reporting point. Okay, now we are discussing few of the things which is the individual. Last point. My question, it is interim or complete financial statement? Interim. Now in interim, if there is a departure from accounting standard, then can there be a departure from AFRF? Can management do departure from AFRF? Answer is yes, but they need to disclose in notes. But if there is a departure from AFRF and notes mein disclosure nahi hai, how should you deal it? Make clear, listen carefully. If there is a limitation of scope, how should you deal it? Other limitation of scope, how should you deal it? If going concern issue is there, how should you deal it? And other consideration, you just ignore it. So first of all, read if there is a departure. If there is a departure, we should give which opinion then? So they say, if auditor shall express which opinion or adverse opinion, conclusion, when the matter has came to auditor attention that causes auditor to believe that material adjustment should made. Understood kya? What is this material adjustment? When material adjustment is required, auditor should do what? Communicate management, then communicate to TCFG. After that, modify. So how many types of modification can be there? 2. He will not give disclaimer. He will do either qualified or adverse. Okay, that's what answer concluded here. When the effect of departure is so material and pervasive to interim financial information that auditor concludes qualified is not adequate to disclose misleading. Okay, which conclusion should be given? Adverse. But better option before giving adverse, that better is what? Withdraw. But you need to resign from audit. It's a big loss. Okay, big loss, huh? Big loss of money. Because you're losing a review loss also. Audit, better option, give adverse opinion. By adverse conclusion. Let him deal. Next year he will not call us. It's okay. At least this year money we can take. We'll enjoy this year money. Limitation on scope. If limitation on scope is imposed by management, and second point will be other. Other means what? Other means other. If it is imposed by management, and one is other means what? Ukraine, where it is impractical for me. One is limitation of scope by management. When I say management, I mean TCFG also. And this other means Ukraine. Remember, whenever I say other, Ukraine, impracticable. Okay, if limitation of scope is by management, the auditor should consider legal and regulatory responsibilities. Was legal requirement whether we should issue the report or not. If they want the report and they are not letting me to do, and if it is because of Ukraine, you should issue qualified. Okay, because of limitation of scope. Going concern, you require to have a paragraph, okay, which will be highlighting that going concern issue is there. Going concern, if you remember which issue, EIS is being removed and management has took the steps and notes have been disclosed. Going concern, read the going concern. If material uncertainty still exists and adequate disclosure is made, the auditor modify the review report on current interim financial year by adding a paragraph to highlight a continued material uncertainty. And he will add one paragraph. How in audit we add the fifth paragraph, na? One more paragraph will be going concern paragraph here, but not as per 570. These are the 4 additional concerns which has been discussed with you. Question or paragraph may come on these elements. Acha, coming back once again. Okay, help me out. If there is a departure, what you should do? Qualified or adverse. If there is a limitation of scope because of management, no adverse, then you didn't read only. If that is imposed by limitation by management, take legal help. Take legal help. If limitation of scope is because of Ukraine, qualified. And if there is a going concern issue and material uncertainty is still there, disclosure. Disclosure by giving additional paragraph. Is the point clear, Malik? That's it. This is something which we have done with review. Okay, yes madam. Which reference? Standard ka reference is, you can write a standard reference. No, because audit report is, it is not an audit report, na? What I am telling is, you need to mention, this in your which report? Review report. So you will not be writing as per 570. Are you getting the point? Because this is basically as per 2400, na? 2410, na? See what 570 says. 570 says if there is a material uncertainty and notes में दिया हुआ है, you are not required to do anything, only paragraph should be highlighted. The same thing they are saying in other way around. They are saying if material uncertainty is there, it is still existing, it has been disclosed in notes, make sure what you will do, you will modify the review report. Modification में, okay, nothing came to our highlight की जगह, we'll say the financial statements are not reliable, or we cannot rely on financial statements to the extent of inventory. So adverse में you can't rely only, and in particular point we'll say nothing came to our view that financial statements are not true and fair except inventory. Qualification. You give me one word, so that one word, 2 word will be except, but that except will be written in which basis for qualified. So tell me, in 570 they didn't told to modify the report, na? Acha, 570, do you remember 570? 570 recall karo, 4 points अपन ने discuss किए. We discussed 4 points. Yeah, remembered everyone? What was second point? Going concern is doubtful. Okay, material uncertainty exists and disclosure was there. Which opinion was here? Unmodified. But we were disclosing in para 5, refer note number 17. But this is not so, na? They are saying modify. If this is so, material interim modify. So they say modify. So modify in accordance with 570 लिख ही नहीं सकते ना? You cannot tell because 570 never told to modify. 570 say if there is a material uncertainty, okay, and material uncertainty has been disclosed in financial statement, mention in audit report, refer note number 70 and give unmodified opinion. Here what they are saying, give which opinion? Read this point, okay, read again this paragraph. They say modify the review report on current information by adding a paragraph. So modify the review report. Now how much opinion conclusion you should modify, we don't know. Whether you will modify in conclusion or you will modify the report, that's the scenario. Acha, help me out. Review report will be given under which standard? SRE 2410. This is the review report. Now you will modify this review report to insert one paragraph here. Who told to modify this report? 2410. Therefore we can't give reference of SS 570. Who is telling to modify? 2410. It's not 570. Therefore, technically auditor can use standard reference, but while reporting he will not use any standard audit reference, because this is review report from 2410 point of view. Anyway, content is almost similar. You'll find it out. Okay, the same content you will find out, no other additional element. But that's exactly how review comes into picture. Be prepared for such kind of question. Be prepared for this something kind of question. What do we say here? Adequacy of disclosure, or this is an wholesale answer. This I doubt. But technically the main question context comes into picture is, okay, WR is okay. This is, if material adjustment is required, what you will do? This is main question. And then this page. Mainly last two page for 24100 very important, except review report. If the page number is para number is 3.8, this is told LDR 3.8, and then 3.11, 3.10 and 3.11 completely. And this brings to the last standard of audit, standard of reports as such, and that is called SAE. Standard on assurance engagement. How many assurance engagement standards are there? 3. Okay, first is 3400, 3402, 3420. Listen carefully. This is about PFI. This is about PFI. What is PFI? PFI here. This is prospective. And this is pro forma. And this is service organization controls. Okay, these are the 3 things which we need to do it out. Where our first discussion will start with PFI of 3400. Okay, so just for your understanding, PFI, prospective financial information, include 2 things. One is projections and one is forecast. What are the prospective financial information includes? One is projections and one forecast. What is the difference between projection and forecast? Any idea? Difference between projections and forecast? Lakshmi ji, clear na? Huh? Projections are also based on assumption. Both are okay. So to be very precise, which is actually, if I say one is of 1 year, one is of 5 year. What is 1 year, 5 year? One is year forecast is of what is of 5 year? What is of 1 year? Both is of 1 year, 5 year. Nahi. See, understand, both use assumption. Both use assumption. No, aisa nahi hai ki one is using assumption and one is not using assumption. Okay, both uses assumption. Okay, projections are of 5 years. Okay, forecast is of next 1 year. Short term is forecast and long term is projections. Why? Because forecast is based on, okay, best estimate assumptions. What I'm using? Best estimate assumptions. This is based on forecast, and here we use hypothetical assumptions. Both are using the assumptions. One is what? Hypothetical, and one is Best estimate. Best estimate means what? Prediction is very good, and which is hypothetical. It is okay, it may happen or not. Now my question: what exactly auditor will do? Auditor. Once again, here if I am using the word auditor, please make sure you are understanding clearly. It is not statutory auditor of company. Are you getting the point? It is the auditor who is giving assurance. We are discussing which services? Assurance services. Assurance services is basically, technically, okay, it is an assurance. It is an assurance. Okay, assurance. The auditor can give the assurance, but don't get confused, sir. Auditor is standards auditing. That is a statutory auditor. Okay, here also there are 3 standards. There are actually 2 more standards which are not discussed here. 3000, 3410. Okay, God bless. At least they are not there. Sir, they are on net carbon 0. Okay, the auditor is giving assurance on net carbon 0. So they are not there in syllabus technically. So what exactly is basically, what auditor will check here? What auditor will check here? Assumption. Okay, how you will check assumptions? Question is how you will check assumptions? What you will check in assumptions? See, one of the easiest standard is this. After we'll go this. This I'm doing last. Why? Because I need to link with 402. So I'll be doing 2 standards together for 3402. Therefore, my first sequence is 3400, 3420, and then coming. But this is one of the easiest here, very favorite. Because tomorrow, even when we go on clauses, okay, when you go on second schedule, okay, somebody, hopefully you may remember, second schedule, if you remember second schedule, 2 schedules are there, first schedule, second schedule. In second schedule, if you go on part 1, if you go on third clause, if any chartered accountant in practice give the vouching of projections, he will be guilty of professional misconduct. But if he performs that engagement in accordance with SAE 3400, he will not be guilty. Okay, second schedule. And if he does not perform engagement of projections in accordance with this standard, guilty. And I am telling you a fact. I'll share with you that data also. One engagement of PFI has been done on this. Okay, it is about IDBI. It is about this one. What do we say? ICICI Bank. ICICI Bank. There was a projects given. Okay, of one of the client, and one of the client ka auditor. Auditor means practitioner has did this engagement in according to this engagement 3400. In his report, he has written that we have checked the assumption and nothing came into our view that assumptions are not correct. This is the same opinion we give here. Negative. Nothing came to in our opinion that assumptions are not correct. Exactly 3400. The case is of Kolkata. Kolkata, that particular case, ICICI Bank to the Kolkata High Court. ICICI Bank went to the Kolkata High Court to make CA responsible. Okay, there was a case, and the concluding point was, okay, the Kolkata High Court suggested either you say it is correct or don't say, or say not correct. What CA says here, okay, he says I don't vouch the figure, but I think assumption is correct. Kolkata High Court say this cannot be a tolerated, boss. Institute, it gave the comment on institute. Institute, rectify this standard. Probably by next 1.5 years, you will find this standard is not working and new standard will be there, where we need to be very clear whether we are giving opinion or not. This standards last phase is going on, this 3400, because Kolkata High Court has clearly told, okay, because what we say here, we don't vouch. My point is assumption is correct, but I don't know about figures. Right? Okay, I love you, but like a friend. Right? This, yes or no. This is something which I discussed when we are this scenario, and it happens. Okay, my life memory. Okay, I still remember my college days. When I was college, okay, I am from a Marwadi family, a typical Marwadi family where Papu is very rigid, very strict. Very strict. He does not tolerate love. You imagine right now, he is almost 73, 74. Huh? He is having an issue with sodium. Whenever sodium is low, so he forgot many. Not Alzheimer's, but his control over body goes. When sodium goes down, 120, So he's control. Otherwise, he's very tod fit person. But sometimes because of sodium low, so we manage hospitalization and other things. He's again very fan of that Ayurveda, Baba Ramdev. So he is very clear. I'm telling you today also, he tells me clearly, Amit, ensure Ritika and Adi don't enter into love marriage. This is his, you understand this one. Where I know, these kids are the future kids. They are what I will, if I tell no, okay, Adi will say bye bye, bye bye. That's the scenario. What I will do, what it is not in my control only. That's how the dad works, my dad's philosophy works. So there was no era where I will be entering into love marriage. There was no concept only, I could enter. But college days, person will so in college I went into a college, MBLU college, Mathura Das Vasanji Lahir Uttam Chandaveri college in Mumbai, Andheri only. So I was in division A, okay, one girl was in division B. Okay, so it was division B, but there was a common division for subjects. So I took Hindi subject, Hindi. So Hindi subject, division A, division B, Hindi subject, Hindi, French, and Marathi. This was how it is done. So in Hindi subject, that division B girl came. Oh my God. My God, lie. Oh my God, the dream. Then initially the things I thought, I asked, I didn't directly ask, but I say waited where she stay or something. Then I came to know she stayed nearby building only. This is very near. Then I always, whichever bus she went, I used to went in that bus only. I didn't talk with her, but I was trying to talk with her. This is 98. 98. I'm discussing 98, 99. So almost this was scenario. So things happened. So later on, one fine day she told, you are in MBLU college. Yes, I was looking for that only. And then talk started. Then the concert started. Whenever we go in bus, so up now bus she is there. So ticket will be definitely I will be taking now. That's automatic responsibility. That is not responsibility. That is basically investment. Investment. So at 1 month, 1.5 months, this thing happened. One have we going together, we coming together. Okay, division B, division A. Okay, in canteen we used to meet. Okay, Hindi lecture we used to meet. Sometimes some lecture I used to go in division A only, division B only. Okay, and one fine day I asked her, okay, I love you. Well, Amit, I didn't saw you like this. Okay, I like you, but as a friend. Either it will be yes or no. Okay, don't beach mein mat kaato. Okay, then okay. Next day I thought lost investment. But Kolkata High Court suggested the same scenario. Kolkata High Court suggested the same concept. Though you can't say that, okay, I love you, but as a friend. Okay, you are vouching, but I am vouching, but only assumptions, not figures. Right? What is this? Okay, Kolkata High Court given a warning to our ICI. Okay, so actually, technically, whatever we are studying in this standard is actually not tolerated by Kolkata High Court. Because in this standard, what we say, we say nothing came to my mind when I was going assumption, not figures. That assumption are not correct. Now question is how to check the assumptions. How to check the assumptions. So here the assumption to be checked is based on past experience. I do think madam who told, okay, this all figures are based on past experience. So I need to compare this PFI projected financial information, not pro forma. Projected financial information with historical. I need to compare. I need to check it out. What management's intentions are there. And technically, that's how the things happen. So Bharat Mata ki Jai, this is something which we will be discussing. So 3400 will be our starting point, where we will be focusing on 3 questions. What are the 3 questions? These are the 3 questions PFI ke liye. Everybody clear? This PFI I will be using again, you will be using the reference in tomorrow code of ethics also when you are doing in second schedule and clause 3 of first part. So let's see tomorrow when we discuss about this one also. So take a break. Okay, break के बाद मिलते हैं with respect to the last particular structure of SAE. 10 मिनट्स में मिलते हैं, 10-15 मिनट्स. चाय वाय लेके आओ. I may require थोड़ा extra time. मतलब today I told you ना, मतलब I'll complete this one. So 3 standard basically more 2 hours, 2.5 hours approximate required. Oh my God. And tomorrow I'll be starting at same. I mean tomorrow will be starting at same time, and day after tomorrow I'll be starting at 8 o'clock morning. Morning 8 o'clock, and I'll be taking till 5 o'clock because tomorrow 9 o'clock. Tomorrow how much is pending? We'll discuss on day after tomorrow. We'll dump on that. 8 or 7:30 or 7, whatever, max to max. It will not be there. Tomorrow we'll be able to complete only. Okay. But day after tomorrow, 8 to 5 because I'll be moving at 5:30. Flight is at 9. Hello. Okay, Malik. So before the break, we discussed about 3400. Now let's start with 3400. I told you 3400 and 3420 are much easier. 3420. These two are very easier or very quickly to be done. 3402 we'll discuss along with 402. Okay, that is where our discussion comes to an end. So, sir, in PFI, what are the things to be done? Okay, I am on page number 11.1. Okay, first of all, the discussion says standards on assurance engagement. Following other standards on assurance engagement have been issued. SA 3400, 3420, 3402 and 3420. Okay, all three names are given together. Now we are discussing about SAE 3400. First question we have discussed. What is prospective financial information? Okay, prospective financial information is based on assumptions about events that may occur in future and possible actions by entity. What does this mean? Assumptions, okay, which will occur in future and possible actions by entity means what? What management will do. If example I am telling you that assumption is that, okay, please do understand, I am telling, okay, I am taking an assumption that sales will increase by 30% next year. Okay, now please understand when I am telling 30%, okay, it is also including possible actions by entity means what? Amit, how will it increase the sales? Question is that. To be very precise, I will increase the sales by example, I am coming to Hyderabad. So I will tell you I am coming to Hyderabad. So now this is the number of students which will increase, because of which sales will increase for Hyderabad. This is the number of students which will increase in Indore. Okay, possible actions by management. Are you getting this point? Everybody? So when I prepare any future projected financial information, okay, it is based on assumptions, and it is not only based on assumption, but it is also based on possible actions. Very important word is possible actions. It is not only actions, it is possible actions. And which is possible, you need to check these two things. Okay, so whenever you are accepting this engagement, whenever you are accepting this engagement, please focus on these two things. That's it. Next, what is a forecast? We have discussed this. Forecast means PFI, prepared on the basis of assumptions as to future events and the actions management expect to take as on date of information is prepared. Okay, because forecast is small term, short term or long term? Short term or long term? Short term. Therefore, actions management expect to take as on date of information, not at future date. Okay, so then what is a projection? Projection is, it is based on hypothetical assumption or a mixture of best estimate or hypothetical assumption. What is the meaning of hypothetical assumption? Okay, or what is the difference between best estimate assumption or hypothetical assumption? What is the difference between best estimate and hypothetical? Best estimate, matlab I took the decision, I took the action. Now based on that action, this will be possibility. And hypothetical, I will do this in future. And based on that, okay, the things will happen. Hypothetical, it's a scenario which is hypothetical scenario, which I am considering. I am not telling I am not considering. I am considering, but hypothetical scenario. This is what your first point to be focused on. So that's exactly what they have explained in your first part of engagement. What is PFI? What is the projections? What is a forecast? Okay, but don't worry. There is no difference between forecast audit, forecast assurance engagement and projection engagement. Both are called as PFI here. Both will be called as PFI. So your first point, what is the scope of 3400? Okay, please do understand this term which I have discussed before the break. Read this term. The term auditor is used throughout this SAE when describing the service involved examination of PFI. Such reference is not intended to imply that member performing such services need necessarily be the statutory auditor. Are you getting the point? Yani the word auditor is used. Is he statutory auditor in this engagement? No. Okay, understood or not understood? Everybody, what they say, okay, the term which is used frequently here, auditor. Auditor is used throughout this. But please make it sure, such reference is not intended. Such reference is not intended to imply that member performing such services need not necessarily be statutory auditor of the entity's financial statement. I hope things are clear. Everybody, this was the initial concept to be focused on. I told you now that auditor will be used. But this auditor is a terminology because he is examining the PFI here. Okay. Sir, nature of assurance given here. So please understand the nature of assurance which is given, taken here. So PFI relates to events and actions that have not yet occurred and might not occur also. So help me out. Can you give reasonable assurance here? Can you give reasonable assurance here? No. Here we can give which assurance? Limited assurance. Because events and transition may occur or may not occur. The assumption may occur or may not occur. Possibility. The first question we are discussing, what is the responsibility of preparation of prospective financial information? My question, who is responsible for preparing PFI? Who is responsible for preparing PFI? Who is responsible for deciding the basis of forecast? Management. Who is responsible for deciding assumptions? Management. The first 3 points, keep in mind, responsibility for preparation of PFI. Okay, management is responsible to identify and disclose PFI. Okay, basis of forecast and assumptions. Okay, so management is responsible. That's it. So then when I am discussing about the practitioner point or the auditor point, what is his objective in this standard? The objective is in this standard is the auditor should obtain sufficient appropriate evidence. Once again we are using the word sufficient appropriate evidence, not audit evidence, because auditor word is used, therefore the word is sufficient appropriate evidence. But what about, it is not about amount. You can't get about amount in evidence only, na? Then the sufficient appropriate evidence you should obtain for what? You should obtain for whether the assumptions are correct or not. Second, you should obtain evidence whether PFI is properly prepared. You should obtain evidence properly PFI is properly presented. You need to understand, and you need to ensure the PFI is prepared on consistent basis. So tell me, what are the 4 things you should check? What are the 4 things you should check? You should check assumption, you should check preparation, you should check presentation, and you check consistency. Acha, what is meaning of consistency? What is meaning of this consistent? Assumption, it is according to assumption is properly prepared. If I am saying your PFI is based on assumption, so it is properly prepared or not? What is meaning of this PFI is prepared on consistent basis? Huh? No. Consistent basis matlab it should be in align with previous one means HFI. Are you getting the point? Are mere ko batao, tell me accounting policy should be which one? The new one or consistent with old? It should be consistent basis on past, na? Okay, so you can't prepare PFI based on new, everything new. The 4 things you should check. What are the 4 things? Based on this only, you will understand what is the procedure to be followed. So what are the 4 things you should check? Assumptions, preparation, presentation, and consistency. Okay, so this is objective we have discussed. Now, first of all, this is first question. Engagement acceptance ke what are the conditions? Okay, if you want to understand, to accept the engagement, what are the preconditions to be focused on? So there are preconditions, 5 preconditions. First, very easy, 800 jasa. Okay, what is the intended use of this information? Okay, which this information will be used for general or limited distribution. Most important, the assumptions are either best estimate or hypothetical. Which engagement will be better to take? Best estimate. Okay, hypothetical will be somewhat risky. Next, the elements to be included. Who will be telling which elements to be included in PFI? Management. What to be included, what to be not included, and the period to be covered. Check for 5 things. If 5 things are okay, you can accept the engagement. If 5 things, any of the thing is not okay, do not accept the engagement. What are the 5 things? Once again, what are the 5 things, Malik? Use, distribution, okay, so assumption. Use, distribution, assumption. After that, information to be included, and last period. These are which question it is? This question is what? This question is preconditions for acceptance of this engagement. What are the preconditions to accept this engagement? What are the preconditions to accept this engagement? So how many preconditions are there, beta? 5. Then Malik? Okay. Further, auditors should not accept or should withdraw from engagement when assumptions are clearly unrealistic or when auditor believes that PFI will be inappropriate. What is meaning of unrealistic? In next year, I will be taking batches, okay, for 482 days. Are you getting the point? Unrealistic. Okay, whenever management, when it is an assumption, I can assume. Okay, I don't know, I mean, if you are aware, you know, what is the logic of leap year? The leap year, I will assume on that basis. Okay, leap year. If you are aware, you just go on, exact 1572 year. 1572. If anybody is having Apple, he can go directly with going back to the month. You can directly go with the year. Go with 1572. You search for 1572 year. In year 1572, okay, earlier there was no concept of leap years. 1572 was where the adjustment of leap year has been done. And if they don't do the leap year, the problem is the seasons. After 100 years, the season of summer will come in something around in December. Because one day, that is, if you are aware, it is not 365 days, it is 365 plus 0.23 days, something like that. So, every 4 years we adjust that 1 day. But in that 1 day also, there is an 2 hour which is extra spending. So, why we have a leap year? So, in 1572, you check for October date, October month, October 1572. After 4th date, the date was 15th. 4th date 15th. I will show in this break tomorrow. Tomorrow, just remind me in break, I will show you on this point. Even I may have captured the photo. I don't know whether I will show you. You go in that calendar, there was no date only. 1582, sorry. 1582. This is 1582. 4th, and after that directly date is coming 15th. This is actually true. This is actually true. You may not be knowing this 1582 which has happened when that calendar was this and this was adjusted. This always days. Yani nobody born during this days. in year 1582, no, there was no date from 5 to 14th. 10 days were adjusted, and then the readjustment came about the summer, winter, the seasons to be adjusted so that it can come in the same season. So, okay, I may assume like this only. I may assume the next year I will be having 15 extra days. Next year I will adjust the calendar. Okay, it is an unrealistic assumption. Whenever you find out these assumptions, please understand it is unrealistic. I don't think you understood what I was discussing. So, please make sure if it is realistic, go ahead with it. If it is not realistic, okay, do not accept the engagement. Okay, please make it clear. Everybody clear, Malik? So, how many preconditions are there? 5. Ratify that one. After that, 2 procedures are there. Sir, what are the 2 procedures? First is examination procedure, and second is presentation and disclosure procedure. 2 things I need to check here, sir. One is I need to examine whether PFI is correct or not, and one I need to check whether disclosures are correct or not. Okay, ratify, that's it. Ratify, your answer is done. There is no additional thing to be done here. First, what is examination procedure? What I will do? First, I will use the knowledge which has been obtained in previous engagement. Okay, management competence to do the for preparation of presentation of PFI, likelihood of material misstatement, the extent to which PFI has been prepared, extent, sources of PFI, stability of entity's business, and engagement team experience. Okay, with the business and industry. Please understand, you will never understand this actually. Why? Please listen carefully. Yeah? Listen carefully. What standard 3400 says? 3400 says, okay, in PFI, I can't tell you what should be the procedures. I can't tell you what should be the procedures. Okay, I can't tell you what should be the procedures for examination procedures. I can't tell you, you should do inquiry, you should do confirmation, you should do inspection. What? Because there is no evidence only. Na? So, what examination procedure? I can't tell you. But I can tell you NTE of examination procedure. What is the meaning of NTE of examination procedure? Nature, timing, extent of examination procedure depends on these 7 points. Yani examination should be done. Acha, NTE full form? Nature, timing, extent. Okay, let understand one extent. Extent means should we examine more or less? No, it depends. That's only I am telling you. These are dependent factors. Example, think logically. If likelihood of material misstatement is more, then examination is more. Acha, help me out. Stability of entity's business. If entity's business is stable, examination procedure less. I do think you are getting the concept. So this 7 point is what about? To determine nature, timing, extent of examination procedure. Listen carefully. So if I ask you PFI ka examination procedure, there is no examination procedure. But how much examination should be done? Depends on how many points? 7. First, okay, what is the first point? Knowledge. Second, competence. Competence, the who is preparing. If the management is competent enough to prepare PFI, okay, you will do examination more or less? Less. But if the person who is preparing PFI is not competent enough, examination more. Again, I am telling you what examination should be done is not mentioned in 3400. But how much examination should be done is based on this factor. I hope the things are clear. So in examination, what will the question come? Explain the examination procedure will come, or explain what are the factors for determining examination procedure will come. The question, what question will come in examination? What are the factors to determine nature, timing, extent of examination? I hope this thing clear, Malik. Okay, presentation and disclosure. Okay, now you need to check presentation and disclosure is proper or not. To check presentation and disclosure is proper or not, the presentation of PFI is informative and not misleading. Second, accounting policies are clearly disclosed. Assumptions are adequately disclosed. The date has been clearly disclosed. Basis of establishing point in range is clearly indicated. And if there is change in accounting policy, that has been disclosed in most recent compared to HFI. So what in presentation, what you will check? First, it should not be misleading. What is disclosed? Accounting policy. What is disclosed? Assumption. What is disclosed? Date. What is disclosed? Range. What is the meaning of range, beta? Whenever we prepare PFI, will we say 50 crore or will say 50 to 60 crore? 50 to 60 crore range. And if there is a change in accounting policy, that is disclosed. So I do think this 6 points is damn easy to remember. Okay, if I ask you while checking presentation disclosure, help me out. What are the things you will check? First, it should not be misleading. Second, what you should disclose? Accounting policy. What is disclosed? Assumption. What is disclosed? Date. What is disclosed? Range. And what is disclosed? Change in accounting policy. Remember, okay, sir. So, sir, in 3400, there are only 3 answers to be remembered. First is engagement acceptance. Second is nature, timing, extent of examination procedure. And third is presentation disclosure check करने के लिए procedure. And last is report. Report you can check it out. Report title, addressee and other things. Okay, I'm not worried about this. This is exactly what you should focus on structure. The report, okay, title is there, address is there, identification of PFI, reference to standard. Okay, state that management is responsible for preparing PFI. Okay, distribution should be restricted. Examination procedure, what you did. Okay, you will be giving a negative assurance. Make it clear. What is negative assurance? Nothing came to our mind that assumptions are incorrect. Nothing came to our mind. Assumptions are incorrect. Opinion, okay, whether PFI is properly prepared or not. Appropriate caveats. Caveats, okay, if you remember something, whatever related words are there. Date of report, place of report, signature of report. Okay, such report can state, okay, whether based on examination and evidence supporting assumption, express opinion to whether PFI is properly prepared. State 2 things, okay, additionally. State 2 things, very important in report mention this. Actual results are likely to be different from PFI. Mention this. This was Kolkata High Court told what you are doing this. If you are saying assumptions are correct and you are mentioning actual results may likely to be different. So don't do this engagement only, na. Kolkata High Court is saying why do not include this engagement in your scope. Okay, let bank take the risk then. Okay, if you are doing like this, that assumptions are correct, and then you are saying, boss, I don't know, the things will not be correct. The things may be different. And in case of projection, it has been prepared using a set of assumptions that include hypothetical assumption about future events and management action that are not necessarily expected to occur. That are not necessarily expected to occur, and you are telling that they are correct. Yani in our report, what we mention, are you getting the point? In our report, we are saying assumptions are correct, and at the same time, we are required to state this also. These 2 things we need to state in our report. I hope you understood these two things, huh? Okay. When it is believed that presentation disclosure of PFI is not adequate, which opinion should be given? Qualified or adverse? If presentation disclosure is not correct. Sir, what if assumption is not reasonable then? Presentation is okay, but assumption is not okay. Next line. When it is believed that one or more significant assumption do not provide reasonable basis, okay, adverse opinion seedha, no qualified. Sir, if presentation disclosure is not correct then? Qualified or adverse? But assumption is not correct then? Adverse opinion, seedha adverse. What if management restrict you from performing any procedure? If you are asking some information, management is not giving, then again that point, okay, you can give qualified or disclaimer. That's your last point. Keep in mind, last 3 points should be taken care. I hope you have listened carefully. All 3 are important. If you are not listened, you are in sleep, you need to check. Okay, go home, okay, sleep, then awake. When you awake, because you are not able to sleep, okay, then think of sleep again. If you are not able to sleep, then again try to sleep. If you are not able to sleep, then you are doing chomupana, okay, then check this answer. This 3 answer, check this 3 answer. My first question, when presentation disclosure is not correct, qualified or adverse? Assumption is not correct, adverse. Assumption is very risky. And last point, okay, if management is precluding you or not allowing you to check to get the information, qualified or disclaimer? Qualified nahi, sorry, qualified nahi. Withdrawal or disclaimer? My mistake. It is withdrawal and disclaimer, not qualified. Withdrawal or disclaimer. Make sure. Okay. And probability can be like this also. This may all come in MCQ point. What should be done by the auditor here? So you need to mention it accordingly. Bharat Mata ki jai. I hope this thing is clear. So 3400. First answer was engagement acceptance. Second was NTE of examination procedure. Third was presentation and disclosure. Fourth, report. If you want to remember. Okay, main point is this content. Which opinion should be given? Either you should give qualified, adverse, disclaimer, whichever. But make sure assumptions adverse. Present disclosure qualified or adverse. And not able, disclaimer or withdraw. Bharat Mata ki jai. Everybody clear? Okay. The next standard is basically 3402. Okay, but we'll do 3402 later on. Okay, because I'll be discussing along. I need to draw some diagram, then only I can explain you everything. Okay, so directly first of all I will be completing 3420. Basically page 11.8. What is 3402 name? Read the name. Assurance engagement to report on compilation of pro forma financial information included in. So this pro forma financial information is included in where? Prospectus, not in your anywhere else. Okay, so pro forma is not given to anybody. It is included in prospectus. Now why it is included in prospectus? Because SEBI says. Now first of all, before going on anything, listen carefully what happens in this engagement. This engagement, okay, first of all, you need to understand, this is my X Limited, Ganesh company. X Limited is acquiring Y Limited. Who is called acquirer? Who is called acquirer? X. Who is called acquiree? Y. Okay, this is called acquirer and this is called acquiree. Okay, now who will prepare pro forma? It is by X Limited, because X Limited is calling for IPO. Okay, initial public offering, or FPO, further public offering, and asking for money, okay, to do this merger. Now this money is used for doing the merger. Okay, so our SEBI says if you are calling a money, you are doing IPO or FPO for mergers and acquisitions, you need to give pro forma. Now the question is, what is a pro forma? So first of all, understand, okay, there is one financial statement which is used, okay, in pro forma, and that is called unadjusted financial statement. What it is called? Unadjusted financial statement. Whose financial statement it is? It is financial statement of X Limited. Okay, I am not using the word unaudited, I am using the word unadjusted. Then, okay, in this I add the events or transactions. I add events or transactions. Now tell me, this event and transaction will be of X limited or Y limited? Y limited. And after this is equal to is PFI. What is this PFI? Pro forma financial information. This PFI is pro forma financial information. Means what, sir? Means technically the answer goes like this. Technically the answer goes like this. Okay, in pro forma financial information, we always have the unadjusted financial information first of X limited. We add transaction events of Y limited, okay, which are again unadjusted, and then we develop pro forma financial information. Means what, sir? Means take financial statement of X limited. Okay, whatever transaction will happen in Y limited in future, now they will be of. Now tell me, the sales of Y limited will be of. Okay, after merger, the sales of Y limited will be of. The sales of Y limited will be of X limited, na? That is called transaction events. Add this, and you will get pro forma, which is called a pro forma financial information. How do you think pro forma financial information? Technically, logic you understood. This is the logic behind that pro forma. Now the question comes is, when I am discussing about pro forma, please listen carefully. What is a practitioner required to do? Practitioner, I am a practitioner. Here it is not auditor, practitioner. Practitioner need to understand, he should check this one. He should check this one and he should check this one. He need to check three things. What are the three things he need to check? Unadjusted financial information, he need to check transaction and events, he need to check, okay, pro forma financial information. Now my question, unadjusted financial information or financial statement, if it is audited, so it means that he can rely on it. But if it is not audited, the practitioner in this engagement, he should understand about the entity, whether this unadjusted financial information he can rely or not. If transaction and events, okay, if these were audited by their statutory auditor, he can rely blindly. But if it is unaudited, the practitioner will understand that transaction events, okay, all together transaction and events, okay, by understanding entity. Which entity? Y limited. And last point, he will understand if pro forma has been fairly presented or not, whether pro forma has been prepared in all material respects, whatever required, whatever disclosure it is giving, whether it is giving correct or not. My first question, who appointed me? X limited or Y limited? Acha, my question, who will prepare pro forma? X limited. Okay, everybody agree? Yes or no? Okay, so who appointed me? X limited. I will be giving assurance to whom? X limited. Okay, and please remember this. This is a reasonable assurance engagement. This is not a limited assurance engagement. This is a reasonable assurance. Don't mix out. Okay, sir, reasonable assurance engagement to audit hai. Audit is of HFI. This is not HFI. This is PFI. But PFI pro forma mein reasonable assurance. So here you need to obtain sufficient appropriate evidence. Okay, to provide the opinion. You are not giving conclusion. Your opinion, you are giving an opinion whether pro forma is correct or not. Because you are having, see, understand, here the pro forma which is prepared, think practically. In earlier PFI, in earlier one, PFI, few minutes back, okay, the information which is used is based on assumption, na? My question, here the pro forma, it is based on already occurred. Okay, that was of HFI, but it is preparing for future, na? Therefore, it is a part of PFI. But technically speaking, you have more reliability of this information which was already occurred. If these two information are audited, which information? Two information? Unadjusted financial statement plus transaction or event. If these are audited, so bhai, this practitioner can rely blindly. But these are not audited, then the work will be increases of practitioner. Achha. Can practitioner blindly accept this engagement? No. The practitioner should understand, okay, some precondition of this engagement. What are the precondition? Basically, okay, by who will prepare pro forma? Who will prepare pro forma? Okay, who will prepare pro forma? X limited. Who will prepare pro forma? X limited. Okay, so who will give me unadjusted financial information? X limited. Okay, so who will ensure that unadjusted financial information is audited? Audit, no, it should be unadjusted financial information should be audited or not audited? Audited. If not audited, then I will require more understanding about entity, na? Who will give this access? X Limited. I am discussing X Limited. Condition, precondition I am discussing with you. Okay, now tell me, okay, so who will ensure that transaction events, okay, if they are not audited, I want an understanding of Y Limited also then. Okay, without understanding of Y Limited, how can I understand the transaction of events of Y Limited here? Okay, to understand transaction of Y Limited, to understand that particular point, I need an understanding of Y Limited also. Who will allow me to go to Y Limited? How Y Limited will be allowing me to do the understanding there? Who will give? X Limited. Preconditions. All these are precondition. All these are precondition for accepting this engagement. And then examination procedure comes. Examination procedure is basic procedure. Check first, check second, check third. You need to check. What do you need to check? If I need to tell you that pro forma is correct, okay, so if pro forma is compiled because of two things, so if I want to say the third thing is correct, so I want to check how many things? If I am saying 1 plus 2 is equal to 3, okay, and I need to tell 3 is correct, so what I need to check? 1 and 2. So technically I need to check 1, I need to check 2. If I am getting a confidence on 1 and 2, check 3 disclosures, and if this is correct, give an opinion. Pro forma financial information. That's it. I do think background is very clear. If you understood background, then we can start it out with respect to 3402. First of all, come to the page 11.8. What is pro forma financial information? Read this. Pro forma financial information refers to financial information shown together with adjustment to illustrate the impact of an event or transaction on unadjusted financial information, as if event has occurred or transaction have undertaken at earlier date selected for the purpose of illustration. And whatever transaction we are seeking it out, we are assuming this transaction have occurred earlier date. Sir, objective. There are how many objectives? 2 objectives. 1, I need to obtain which assurance? I need to achieve which assurance? Reasonable. And second, I need to report in accordance with this point. So make sure this 3420 is which assurance? Reasonable assurance. And 3400? 3400? Limited assurance. 3420? Reasonable assurance. याद रखना, in 3400, if you are not aware, so just make a note at your end. 3400 limited assurance, 3402 reasonable assurance, 3420 reasonable assurance. This is assurance list. Make it sure you remember this one. Okay, the MCQ will help in solving MCQ. Three four zero two reasonable assurance, 3420 reasonable assurance. That's it. Am I clear? Then Malik? Yes. Lakshmi ji, clear? Okay. Okay. Now, I hope you understood reasonable assurance also, logic of reasonable assurance. Now, compilation. Compilation of pro forma. How many steps are there to compile in this pro forma? 3. First, identify the source of which unadjusted financial information. Make pro forma adjustment. What is it, pro forma adjustment? Transaction and events. Perfect. And present the result of pro forma with accompanying disclosures. So how many steps are there? 3. And you need to check all 3. That is your main task, to check 3. Okay, nature of practitioner responsibility, I told you, reasonable assurance. Keep in mind. Steps involved in such engagement. Now this steps is not of preparing pro forma. This steps is what you and I will be doing. So if I ask you how many steps are there in this engagement, so there are 5 steps. First, what I want to do? Engagement, acceptance. Second, I need to do planning and performing. This is very same sequence. Acha, help me out. Reporting will also be done, na? So forming an opinion and report. Okay, only one additional thing is, okay, WR. Because we are doing inquiries here. So how many, you want a reasonable assurance. To get a reasonable assurance, WR, corroborative evidence are required. So how many steps are there in engagement? 5. First, accept, plan, perform, WR, opinion, report. How many steps are there to prepare for pro forma? What are the steps to prepare pro forma? 3. First, unadjusted financial information, pro forma adjustments, and pro forma financial information with disclosures. I think 2 questions clear, Malik? ठीक है. Now what is the next answer? Steps of this engagement. We are discussing steps. So let's start with your first step. What is the first question? Again, toad LDR starts now. Toad LDR. This is biggest answer for acceptance. This is one of the biggest answer for acceptance. Check it out. You will be having, okay, 7-8 points approximately. Okay, but last is very favorite. Check last one. Check last one. Okay, providing practitioner with access, additional access to within the entity, and okay, and when needed for purpose of engagement, access to. Acha, who is this appropriate individuals? Why limited? Are you understood? Appropriate individual, acquiry. This is acquiry. Easy. Last one सबसे easy रहता भाई. Okay, and before that, even though you go on G point, obtain agreement of responsible party. Now here responsible party means whom? Management. The person who is preparing pro forma financial information. So here we do not use the word management. We use the word responsible party. The person who is responsible. So what he will be apply? So he will be disclosing the applicable criteria and compiling pro forma financial information. So help me out. Okay, so what is a reasonable responsible party's responsibility? How many responsible party responsibility are there? 3. In third, there are 4 points. First, who will prepare pro forma? Responsible party based on applied criteria. Based on applied criteria. So applied criteria means, again you will tell what is an applied criteria? Applied criteria means framework. Who will give this framework? Management board will be responsible party. They will be giving the framework. So engagement acceptance ka last part we have discussed. Now A to F we need to discuss. A, determine that practitioner has capability and competence. So first you should have CC. If you don't have a CC only, again basically example, you are not aware only about what is pro forma. You have heard about pro forma. Okay, sir, when I gone to purchase bike, that I came to know about pro forma. But this pro forma you are not aware. How you can do the engagement? Second, preliminary knowledge of engagement circumstances and discussion with a responsible party. Determine which criteria? Applicable criteria is suitable or not. Second point, applicable criteria is suitable or not. Check it out. Third, check it out the wording of opinion required by laws and regulation. Wording of opinion required by laws and regulation. Why? Acha, my question is 3420 is engagement about what? PFI, pro forma. Pro forma to be included in prospectus. Why you are including in prospectus pro forma? SEBI's requirement. It may happen that SEBI may give you that wordings of the opinion should be like this. So check it out whether SEBI has given some wordings, opinion of wordings, what opinion should be given by your practitioner. So third point, check out whether that opinion can be given or not. Understood or not understood? The first point, what is the first point again? Capability, capability and competency. Second scenario, applicable criteria. Third scenario, law, regulation, opinion. Law, regulation, opinion. Everybody clear? Fourth scenario, check out fourth scenario. Where the sources from? Unadjusted. Now help me out. If the source of unadjusted financial information is audited, then can you rely blindly? Yes. But if check E, if entity's historical financial information has never been or review, okay, so you need to obtain a sufficient understanding of entity, so that only you can understand the what? Unadjusted financial information. And next point, if event and transactions on includes acquisition and the acquiree's historical financial information has never been audited or reviewed, sufficient understanding. Okay, my question, how many conditions are there for engagement? How many conditions are there for engagement? How many conditions are there for engagement? Okay, हाँ 7 के 7th के अंदर 3 plus 4, so 10-14 points are there. First point, I should have CC. Second, I should check applicable criteria. Third, I should check law regulation for wording. Fourth, I should check the source. Okay, which source? What is source? Unadjusted financial information. Fifth, if it is not audited, sufficient understanding. If events and transactions of acquiring company, if it is unaudited, sufficient understanding. And the responsibility of responsible party. Responsibility of responsible party will include 3 points. First, applicable criteria you will prepare. Next, PFI, pro forma adjustment you will be doing. Third, you will be giving me access to all information, additional information, unrestricted access, and okay, inquiry to the entity of acquiry. I hope this all points are clear. Okay, when you are required to write, how you will come to know this question is this on pro forma. First of all, examination you will get direct question, explain pro forma. Okay, if question comes pro forma financial information, I don't think so. You are not so, you are very clear. If the question wording is pro forma, it is a separate wording only. Na? Anybody worst can crack. If it is pro forma, the answer is here. So these questions will never ever confuse with any other question. Pro forma, projections, because these are separate wording altogether. Okay, at any cost they need to give pro forma wording only, then only they will come to know. Or the case study will be like this, ekdam worst I am telling you, worst. Okay, X limited, okay, Ganesh is there, Ganesh is acquiring Y limited. Okay, now Ganesh want to ask money from IPO FPO. Okay, now from IPO FPO, Ganesh wants to include something in prospectus. Okay, now what is the thing which is required to be included in prospectus? Now this can, are you getting the point? This can be a scenario, but this is the worst case. So don't worry, at any point of time, the pro forma word will be there. The pro forma word come, na, okay, become a horse. Don't look here, no, this point. Why? Horse, oh my God, this point. That's it. Are you getting the point? Acha, help me out. How many steps are there in engagement? How many steps are there in this engagement? 5. First, engagement acceptance. Second, planning and performing. Third, WR. Fourth, opinion. And fifth, report. Earlier page. Check earlier page. Check earlier page. Steps. 5 steps are there. Understood? So, which steps we have over? Which step we have completed? First, engagement acceptance. Second, now the second step goes is planning and performing the engagement. Now help me out, planning and performing. Panched answer. Okay, the reading itself makes answer clear. First, the practitioner shall assess whether applicable criteria is suitable. When planning and performing, the practitioner shall consider materiality and understanding how responsible party has prepared pro forma. Understanding of how responsible party has prepared PFI, pro forma financial information. The practitioner shall obtain evidence about appropriateness of the source. What is meaning of appropriateness of the source? If source is audited, then check audited financial statement or audit report or review report. If there is no audit or no review, practitioner shall perform procedure to satisfy the source is appropriate, and he will obtain sufficient information about the source. The practitioner shall determine whether responsible party has appropriately extracted unadjusted financial information and obtain evidence about appropriateness of pro forma adjustments. And very basic logic, when I am discussing about pro forma adjustment, I do think, acha, what is the pro forma adjustment, beta? Pro forma adjustment is of X limited or Y limited? Y limited. Now, 2 things focus on this. In relation to unadjusted financial information, pro forma adjustment include adjustment to unadjusted pro forma financial information, impact of significant events or transaction, and adjustment to unadjusted financial information necessary for pro forma financial information to be compiled on the basis consistent with AFRF. Check this unadjusted financial information, clear 2 things. Okay, whether it is covering significant events or transaction, but this significant event and transaction is off. Acha, what is saying? They are saying in relation to unadjusted financial information, pro forma adjustment include what? They say adjustment to unadjusted financial information, impact of significant event and transaction. This event and transaction of whom? Y. And next, okay, adjustment to unadjusted financial information necessary for pro forma financial information to be compiled on the basis consistent with AFRF. What is meaning of this? Okay, read. Acha, my first question, remember X and Y. First, okay, when I say pro forma adjustment, it relates to pro forma adjustment relates to Y. Everybody clear there? Now tell me, okay, what is A and B for Y? Significant event transaction is basically YK transaction. Then what is B wala point? They may be following LIFO. Y limited, and we are following FIFO. Okay, are you getting the point? You need to change the policy. That is the second point. Adjustment to unadjusted financial information necessary for pro forma financial information compiled on the basis consistent with AFRF. Which AFRF? Y limited, X limited, acquirer. I hope you understood this point. I tried. I hope you understood. Understood kya? So whenever transaction events you are adjusting, two things you need to check. Whether transaction events are adjusted, and second, transaction events are consistent with AFR. And next, practitioner shall evaluate presentation, and practitioner shall read other information included in prospectus. So in short, if you read all points, these all points are very simple. First, it says applicable criteria check karo. It says materiality, check materiality. Check how it is prepared. How it is prepared. Check. Okay, if no audit is done, check appropriateness. Acha, if no audit is done, sufficient understanding should be there. Okay, responsible party. Okay, from where it is extracted, check that. Check for pro forma adjustments. Check for adjustments. And last point, okay, check for presentation. Check for presentation and check for other information in prospectus. I hope this is clear. Now, what I need to obtain? The third step is WR. WR is only for two things. Okay, so who has taken care of all pro forma adjustment? Who will be telling me these are the adjustment? So give me in writing that you have given me all adjustment. And second, okay, pro forma has been complied by you, complied with all relevant statutes and requirement. You write it. That's it. You have given me all information. Bharat Mata ki. That's it. Okay, after my WR is over. That's it. WR is only for two things. The first is acceptance. Planning performance. Performance you remember. Remember acceptance, remember. Rectify. Planning performance, rectify. WR, okay. Fourth, opinion. Knowledge purpose. Now, if you remember, separate question. Separate question. Understood? Some paragraph question. What we discussed in earlier standard also. Only one point conclusion can take place. Understand that one. Sir, what is the opinion? First is, which opinion? Unmodified. When unmodified opinion can be given? When practitioner concludes pro forma financial information has been complied in with what? With what? With what? In accordance with applied criteria. AFRF you are ensuring that is, but pro forma is based on applied. Okay, which transaction will be included in this pro forma? Which transaction are included? Who will decide? Responsible party. Now, responsible party will determine applied criteria. So, it should be in accordance with applied criteria. Remember this one. Okay, modified opinion. Now, aram se read it out. You will come to know. Panchad answer. Panchad matlab yak. Okay, very easy answer technically. But make sure these are separate questions concepts. Where relevant law and regulation preclude publication of prospectus that contains a modified opinion. Very important. Today morning also we discussed this with regard to whether pro forma financial information has been complied in all material respect on the basis of applicable criteria. Means what? If you give modified opinion and law regulation says, SEBI says, if there is a modified opinion, you cannot include pro forma in prospectus. You cannot include that your opinion factor in prospectus. Yani in prospectus you are giving pro forma and one practitioner is telling this pro forma is not correct. Are you getting the point? Nahi samjha, samajhne koshish karo. Please understand. Okay. What is the discussion? The discussion is technically simple discussion. My first question, help me out. This pro forma will be included where? Prospectus. Now suppose, okay, a practitioner give which opinion? Modified. I can give modified opinion? Yes. But the problem is, now if I give modified opinion, now tell me in prospectus, read prospectus. Think this is a prospectus. There will be PFI. You sorry, you turn the page and on page it is written pro forma is not correct. Does it make a sense? Okay, to include that pro forma opinion on prospectus? नहीं समझा नहीं समझा अर्थమైందా? Understood? The problem is, okay, can a practitioner give modified opinion? Yes, but the problem is if the management responsible party saying if you give modified, I'll not include this in prospectus. What opinion? Okay, who says? SEBI says. SEBI says you should include the practitioner report only if it is having unmodified. In this case, what practitioner should do? That is what exactly what our discussion comes. If responsible party does not agree to make necessary changes, are you getting the point? The practitioner shall withdraw, considering seeking legal advice. Now this is a big challenge, man. Okay, so therefore remember this thing. Can practitioner give modified opinion? Yes. But the only discussion is if he is giving modified opinion, but law regulation preclude responsible party to include that modified opinion in prospectus. What is the use of this report then? So in this case, better option, tell management, responsible party, rectify. If responsible party is not rectifying, withdraw, or we don't know. If you are not able to withdraw, take legal advice, legal support. Okay, where check this one, check B1, read B. Where relevant laws and regulation may not preclude publication of prospectus that contains modified opinion with regard to which pro forma is prepared. Okay, the practitioner shall apply the requirements of. Baat khatam. Means what? If law regulations say even if it is modified opinion, include in prospectus. If SEBI says even if it is modified opinion, include in prospectus, then what is the problem with you? Just check what should be the wording of opinion. Okay, ठीक है, understand. Okay, if you are not understood this 2 point, again I am repeating the same thing. Please listen. In A, what they say, if you want to give a modified opinion, acha, what will be the wording of opinion? If anybody is asking me this question, what will be the wording of opinion? Let me give you clear idea. Law will decide what will be the wording of opinion. This is what we have discussed in engagement acceptance. Here standard will not decide because this is who is telling to include in prospectus? Law. So ask law what should be the wording. Are you getting the point? Engagement acceptance, the criteria was that wording. I hope you are getting this concept. So don't ask me the wording. My question is, what if I am giving modified opinion? What if I am giving which opinion? Modified opinion. Now the question is two things. Now two things comes into picture. What are the two things here? Listen carefully. What are the two things which is coming here? One, giving a modified opinion and including modified opinion in prospectus. If this is done, this is the situation B. This say, okay, it's okay, then where is the problem with practitioner? If you are using my modified opinion and you are putting this modified opinion in prospectus, then where is the problem with me? But problem is A. What is the problem with A? What is the problem with A? A says, if A says, what A says? इसको कम कर दो टेम्परेचर तुमको बंद ठीक है ना इसको कम कर दो मेरे को तो वैसे भी गर्मी हो हाँ 20 कर दो बीच में भी आए गो देयर एंड टेक केयर एंड कम हियर I go there, take oxygen and come here. Okay, technically speaking, listen carefully, listen. What I am saying, okay, is wording for pro forma available or not available? Not available. So wording will be given by whom? Law. If unmodified opinion there is no issue. Happy, you happy, I happy. But if I give modified opinion, now the happiness will come to a sour. Okay, now this sourness comes because modified opinion. So it says two things. If law says, if there is a modified opinion also, then also include in prospectus. I am happy because you will give me money. At the end of the day, I want to receive my money, boss. Okay, so don't worry, enjoy. This is B situation. But the problem is, when law says, if Amit is giving modified opinion, Ganesh, you will not include this in prospectus. Now, if I am giving a report and he will not include in prospectus, he will not pay my money only. I am saying this is report modified. Give me money. Well, for what purpose? Now, like, give the report. Well, this is of no use. I can't put in prospectus only because law regulation is saying no. In that case, what should be done is a point A. I think hopefully you understood A and B. If not, okay, check this back up again by cool mind. Okay, so whenever you have a cool mind, okay, then check what I am discussing. But this is a very basic concept. Understood, Malik? Okay. So first, which opinion? 4 point. We are on 4.4.4. Huh? First point. Which opinion? Unmodified. Enjoy. If it is modified, check out about two things. Whether law permit to give modified opinion in prospectus. Enjoy. If not, check for withdrawal or legal advice. Next, EOM, my favorite. What is EOM? In some circumstances, there may be a practitioner may consider it necessary to draw the user attention. Can he be included in pro forma? Answer is yes. They may say, okay, user check note number 17, which is focusing on certain adjustment. It's an EOM. So pro forma mein EOM or pro forma audit report can have EOM. And last is audit report to be taken care of. The next page is audit report. Complete audit report. Huh? Assurance, sorry. Assurance report. Make sure, now don't debate, okay sir, you told opinion, it will be given by law and regulation. Form of opinion is given by law and regulation. What I will be writing is given by law and regulation. Report is as per 3420. Report is as per 3420 only. Okay, opinion is as per law and regulation. Example, pro forma is correct in applicable criteria or AFRF or as per the acquirer, acquiree. What opinion I should give? Okay, SEBI will define. Focus on that idea. Okay, I hope this is very clear. So these are technical points with respect to SAE. So we discussed SAE, two standards. What are the two standards, beta? 3400, 3420. Now we are pending with last standard, that is called 3402. But 3402 I told you it should be along with 402. So now technically I am making you understand both the things together only. So understand this thing and close put on the report by reading with this one. Put means quickly on the report. But I am preparing everything on writing basis on the screen. So in this point, okay, I am not into reading. You can read later on. Okay, but I am into content development. So prepare content development, understand everything, listen carefully, and then close. So technically take slowly. Okay, we are discussing about 3402. Okay, and 402. Sir, this is something around. Where it is gone, man. This is something around. Listen carefully. Suppose this is Ganesh X Limited. This is A.T., a statutory auditor of Ganesh. Ganesh has outsourced payroll services to Capgemini. Ganesh has outsourced payroll services to Capgemini, and Capgemini is contacting with KPMG. First of all, okay, understand how the structure is working. Okay, first of all, understand structure, then we'll discuss. First, naming convention, we'll give the name structures. X Limited, okay, auditor is statutory auditor is Amit Tated. Okay, this is called user organization. This is called service organization. This is called service organization auditor. This is called user organization auditor. There are four names to be kept in mind. One is user organization, second is service organization, third is service organization auditor, and last is user organization auditor. Everybody clear? Now the question comes, okay, now please listen carefully. When I am discussing here with respect to user organization auditor, okay, or service organization auditor, how the things are happening. Ganesh X Limited has outsourced his work to Capgemini. Amit Tate is providing opinion on financial statement of Ganesh. Now, because Amit Tate want to provide a financial opinion on financial statement of Ganesh, Amit Tate want to do TOC. You are already aware TOC and SP. Now, technically speaking, Amit Tate came to Ganesh and asked Ganesh, okay, I want to check the TOC of salary. Example A, B, C, D, E. A is entering data, B is processing data, C is calculating salary, D is checking of C, and E is paying the salary. Ganesh told, okay, if this would be a scenario, Ganesh told, okay, these are A, B, C, D, E with me. I would have gone there, I would have checked, I would have done two things, inquiry plus I would have done either observation, reperformance or inspection. Three things, if you remember procedure, I plus O, R, I, something like that, depending on my scene. Whatever, I went there, I sat with them, okay, I checked it by observing them, okay, how they are processing, I did that. Now the context comes here is, okay, this was very easy and I understood, okay, confidence got and I did less substantive procedure, or confidence not got, I did more substantive procedure. But the problem here arises like this. I told Ganesh, I want to check this. Ganesh says, sir, the basic problem is I outsourced this salary processing to Capgemini. Now my question is, Ganesh bhai, now how will I come to know what is a TOC, whether TOCs are effective or not? Ganesh says, sir, it's your work is only a financial statement, do that na. No, oh, sir, okay, as per Companies Act also I need to report on internal financial control. If you remember in my audit report will be there IFC also, therefore I need to check. Ganesh says, okay, talk with Capgemini. Our monthly data goes to Capgemini, they process, they deliver and blah blah blah. Okay. Now I approach Capgemini and I told Capgemini I want to do the TOC at your end. Okay, because Ganesh is my client. Capgemini suggested, sir, this is not possible, this is a big deal for us. So in this case, Capgemini told, don't worry sir, we'll do something. Capgemini approached KPMG. Please make it sure KPMG are not the statutory auditor of Capgemini. They told Capgemini, told KPMG, do one thing, check our controls, okay, controls which are used for user organization, not our controls. Not our controls related to financial statements. You check our controls related to user organization and please give the report. Okay, and that report I will hand over to whom? A.T. auditor. Now here, please understand, there are two terminology comes into picture. Here, can KPMG accept this engagement? Answer is yes, in SAE 3402. And okay, when I am saying user organization auditor will be using, he will be following SA 402. Before going on 402, some background of 3402 should be clear at your end. Sir, what is the background here? Now, first question, okay, can KPMG accept such kind of engagement? Answer is yes. Sir, any prerequisite or precondition for engagement? No. Only KPMG should check, okay, which type of report is required. Now, I am saying which type of report is required because 3402 open 3402 suggests two types of report. Okay, what are the two types of report suggested by, okay, 3402? Listen carefully. Okay, 3402 suggest, okay, type 1 report or type 2 report. There are two types of report. What are the two types of report? Type 1, type 2. Now, what is the difference in those both type of report? If it is a type 1 report, okay, acha, who is doing this engagement? Audit me. Who is doing this engagement? Okay, for Capgemini, KPMG. So this report are given by type 1, type 2 report are given by whom? KPMG. It is given to whom? Capgemini. Capgemini give to AT. This is how the structure is working. I hope the things are clear. Now, type 1, type 2 report are given by 3402. It says, if the practitioner, okay, or service organization auditor is giving type 1 report, he will be discussing about description. He will be discussing about design of systems, design of controls. That's it. Two things will be mentioned in this report. Sir, what are the two things? Okay, in type 1 report, KPMG will mention, okay, 1, 2, 3, 4, 5, 6. These are the description of system. And 1, 2, 3, 4, 5, 6, 7, 8. These are the design of systems. Sir, what is the example of description and design? Example of, simple example I should fix with control. If you are aware like this, you remember this one? Control environment. Risk assessment. Now tell me where Huli should stand, door or window? Door. Okay, he is standing on window. It means design is not proper. That is called design. Yani example, the company is doing risk assessment. Okay, based on risk assessment, they are putting controls. That is called design exactly. So design, okay, in type 1 report, we always discuss about description of system and design of system. We always discuss about description and design. But in type 2, what we do? In type 2, we discuss about description. We discuss about design. Yani whatever there is in type 1, we are discussing the same. But along with this, we are also checking for operating effectiveness of control. We are also checking on operating effectiveness of control. Okay, sir, means what is happening? Suppose I am KPMG now. Okay, I am going, okay, towards Ganesh. Okay, if I am a KPMG now and I am going towards Ganesh. Okay, if I am KPMG, I will be giving a type 1 report. In type 1 report, I will inquire with Ganesh, what are the controls you have? Ganesh will give the list. Okay, Ganesh will say, these are the design of control. This was the risk which we have discussed. And against this risk, we put this control. Now, okay, that's it. I put in my report. I check whether they are in existence or not. I am done with type 1 report. I will sign. I will hand over to Ganesh. This happens with description of system and design of system. Description of control and design of control in type 1. Type 1 report is always as on date. Type 1 report is always as on date. As on date, this was the description. As on date, this was the design. As on date, this was description. As on date, this was design. Okay, this was the design. Example, as on date, Huli was standing there. That's it. Huli is checking receipt or not, I am not sure in type 1. Huli is standing near the door is written in type 1. On 31st March or on 30th June, Huli was standing near the door. This is type 1. That's it. On 30th June, that's it. Okay, whether Huli is checking receipt or not, I am not sure in type 1. In type 2, what we do? We focus on design, we focus on description, also we focus on operating effectiveness. Yani I stand there for June, July, August, September and I checked whether Huli is checking receipt or not. This is called operating effectiveness of control. Yani in type 2, okay, it will be as on date or for the period. For the period, because operating effectiveness is always for the period, not as on date. Okay, so technically, okay, now which type of engagement is there? This is what 3402 suggests. 3402 says, okay, audit, service organization auditor, please understand which type of engagement is required. Who? Capgemini. Does Capgemini require type 1 or does Capgemini require type 2? This is your engagement acceptance point. Now the question comes, okay, type 1 or type 2, okay, see, understand, I do think you may be at least understanding this one, okay, which engagement will require less work from KPMG? Type 1, because it is on date at hardly 7 days engagement. Type 2 engagement will be for 6 months minimum 6 months, huh? So which will be more costly? Type 2. They can think logically, if KPMG is doing type 1 engagement for, okay, Capgemini, and Capgemini giving type 1 report to AT. Okay, do you think AT will get more confidence or less confidence only? That's when AT would require more confidence. Then probably AT will do more procedure then. But if, tell me, if KPMG is doing type 2 engagement, think logically, okay, think technically, okay, can AT rely blindly on type 2 engagement? Yes. This is exactly what 3402 suggests. 3402 is this much only, and the report, you need to remember the long form of report. The only thing is, okay, what type 1, type 2, they have given us steps of process. Okay, how do you should go? You should first understand whether you require type 1, type 2. Next, what you should do? You check for materiality. Next, you check whether there is a change in scope of engagement. If it is a type 2 engagement, it is for a period, na? So it may happen in June, you may have given me one description of control. In October, the description may change. Check for that one. Okay, perform design of, check for design, check for description, and may ensure if you are going with type 2 engagement, check for operating effectiveness. And what you need to obtain? You need to obtain a reasonable assurance. What is the meaning of reasonable assurance? You need to stay there, you need to check there. It is not what you told by inquiry and I will be relying on that. That's what exactly I told you. You told by inquiry, I treat inquiry. You told there is a Huli standing there. I will go there and check Huli is standing or not. Huli is checking receipt or not. I will not discuss in type 1. I will discuss this in type 2. This is 3402. Now the question comes, okay, how SA 402 works here? So listen carefully. Now keep 3402 separately. I hope 3402 ka background is aware clearly. Now I am telling in 402 what will happen. Now what 402 says. Now my question, who will perform SA 402? Who will perform SA 402? Who need to comply SA 402? AT. So what AT does, listen carefully, and this is chapter 2 ka last standard. Okay. Now I am discussing audit procedure for entity using service organization. If your entity, if your client is using service organization, what is the procedure you will perform? That is what I am discussing here. Everybody clear? Yes or no? So first of all, first what I will do, I will obtain understanding. I will obtain understanding of services provided by service organization. I will obtain an understanding of services provided by service organization. Sir, from whom I will obtain this understanding? Listen carefully. Now I am exactly in answer. Make sure, even if you want to check, you can go with your 402 chapter 2. Compare there. Okay, this is chapter 2 last standard. So first procedure will be obtain understanding of services provided by service organization. From whom? Amit Tated. From whom? Okay, from user organization. Ganesh bhai, what are the services which is provided by service organization? Understand that. So while understanding that, what are the things I will understand from Ganesh? Ganesh bhai, I will check what are the nature of services provided there. What are the nature of services? Ganesh bhai, kya nature of services hai? Kaun se? Which services? Significant services, non-significant services. What services are provided? Nature of services. Second, Ganesh bhai, materiality of the transaction. I will check materiality of the transaction, Ganesh bhai. Ganesh bhai, whether the transaction which are processed by Capgemini are material or non-material. Example, all lower amount salary, employee salary has been given there, but senior manager salary are taken here only. Now tell me, why should I discuss anything else? If all material transactions are carried in our organization only basic is a small amount is taken care, I will ignore then service organization itself. This is first procedure. First step will do with a Ganesh bhai. First step will discuss 4 points. Okay, we'll discuss this all with Ganesh bhai. If we got a confidence in first step only, will not discuss. Standard is over. I am not required to do anything else. Na? This I am discussing from which point? Ganesh. So Ganesh bhai, if I am getting understanding everything, Ganesh bhai, okay, what are the nature of services given? Second, Ganesh bhai, what are the material transactions which are processed? Ganesh bhai, is there any relationship between, okay, X Limited or Capgemini? Sir, example of relationship, basically it can be something around subsidiary and holding. It can be associate. Because of associate, you have given the transaction outsourced. Okay, sometime, why we enter into holding subsidiary relationship? Why we enter into holding and subsidiary relationship? Because we want to use that services, na? It may happen, okay, you have taken a subsidiary, okay, you may be subsidiary there or you may be a subsidiary there. Then only outsourcing happens. Right now, okay, Jio purchase, Jio matlab Reliance purchase Disney Hotstar. Are you aware? Reliance subsidiary is Viacom. Viacom subsidiary is Disney. Okay, are you aware? Now Disney Hotstar is of Reliance. You are not aware? Disney Hotstar. Okay, so Disney Hotstar is not of now Disney. 30% stake is of Disney. 60% stake is of Reliance and Viacom. Viacom is 40% and Reliance is 20%. And Viacom is a subsidiary of Reliance. Ultimately, 60% is of Reliance. So why they took the stake in Disney? Because they want to provide a service. They want to make sure Jio app is also told dhan, which is not working correctly. Now they will use that expertise here also, na? Okay, I do think everybody would be using Jio app. No, you don't see match. Watch a match only. You don't watch match. Cricket, India, England. Oh, you don't know only, sir. This is their game, cricket game. Oh my God, you are in study. Sir, okay, athletes, okay, javelin throw, you know where, okay, that ball game, throwing the ball. Sir, football, one ball is a leg, put in leg. Football, no sir. Volleyball, sir, ball like this on hand. No sir, okay, kabaddi. Arey sir, you don't know sir. Sir, what is happening sir? Sir, this is big deal sir. Huh? Zindagi game khelti. Madam is saying Zindagi is playing game. Okay, so what we will do? Okay, so you are the player. If Zindagi is playing a game, okay, with you, you are the player. Try to win. Huh? Okay, some are the viewers, na? Yes. Huh? Kaun viewer? Baki sab. So let them enjoy. Let them enjoy, na? What is the work of, help me out, what is the work? Okay, if I am here, what is my work? Okay, let you enjoy. Okay, if you are playing the game, I am also playing the game only. Okay, let enjoy. So if Zindagi is playing the game, you enjoy that. Let Zindagi play the game. Okay, but you need to understand, your game is not hosted on Geo app. Okay, so I am discussing about some game which is, what is the logic behind why they purchase Disney Hotstar? Why they purchase Disney Hotstar? They purchase Disney Hotstar. Oh, we are now Disney. That was the reason. Then what is the reason? Their Geo app is not working correctly. They may not be having special expertise. They may not be having technical expertise. They are now very clear. Disney Hotstar is a brand. Amazon is something different. But Disney was in then captive consumption. Now they can use their expertise to update Geo. Okay, and now please understand, across India, okay, probably I don't know whether you watch or not, but to focus on some games, cricket, kabaddi, everything, Disney and Geo are leader. No other is entering into that area. Yani imagine IPL, okay, men IPL, women IPL, cricket, everything is with Reliance now. Hosting rights, everything completely monopoly. And our India country is for cricket mainly, but it is not a national game. Okay, our national gaming is something different, but we are different nationals. Okay, so basically, so imagine yaar, monopoly in cricket. Now imagine what cost, what beneficial, what they can charge whatever they want now. Monopoly. Okay, monopoly scenario. Imagine the impact. That's the reason. Understand from, okay, Ganesh bhai, whether you are into this with Capgemini. Okay, are you subsidiary? Are you holding? Because if that is a criteria, the thing is, it means it is in our jurisdiction only, na? So that is what exactly relationship you need to check. You also need to check its degree of interaction. Degree of interaction. Sir, what is the meaning of degree of interaction? It means how much you are interacting with, okay, Capgemini. Ganesh bhai, how much interacting with Capgemini? Are you frequently interacting? Are you frequently monitoring? Are you frequently taking reports? If Ganesh is taking frequently reports, every month report, every week report, tell me what is the requirement to go with Capgemini? My confidence is increased, na? See, okay, tell me what actually I am doing here. Okay, my agenda is do substantive procedure or TOC? TOC. If I am getting this confidence of TOC by doing this 4 from Ganesh only, why I will go ahead? Standard is over. Whatever service organization is doing, let him do. My standard is over, na? Okay, because every information is there. Now you may ask, sir, how will come to know the nature of services, material transaction? See, understand, there are more detailed, but that has not been covered. But to the extent the concept can be, okay, you can check the manuals, service organization manual, agreement will be there between both of them. Check for the agreements. Okay, this is your first scenario. I hope you understood the first scenario. Second, if you got the understanding, okay, perform SA 315. What is SA 315? Understanding of entity. You got the understanding. 315 के हिसाब से देख लो whether the risk RMM is there or not. If RMM is not there, standard over. Yani my question, okay, when third point starts, third point says, okay, third point before going ending the standard. Let's close third point. Auditor will determine auditor. Now this is which auditor? User organization auditor. Amit Adera. Auditor will determine, okay, whether sufficient understanding is obtained about service organization or not. Sufficient understanding obtained about service organization or not. If by doing these three steps, you got the knowledge of service organization, standard is over. Na? Okay, so my question, when fourth point will come into picture? Tell me when fourth point will come into picture. Okay, only if sufficient understanding is not brought. So my question, if I am discussing with you fourth point, and in fourth point I am discussing you A, B, C, D, 4 more points. Now my question, when you will write this 4 point? Okay, when you will, acha, are you into sequence with me? First of all, okay, what is the audit procedure for entity using service organization? Understanding services provided by service organization with whom? User organization. What he will do? 4 things. Nature of services provided, materiality of transaction, relationship between organization and the organization, a degree of interaction. Okay, after that, understanding, based on this understanding, perform SA 315, RMM. After this, if auditor obtains the sufficient understanding, okay, standard is over. So my question, when you go on fourth point, if sufficient understanding is not obtained, I hope you understood. So if sufficient understanding is not obtained, now you need to do 4 points. Sir, what are the 4 points? First, contact Capgemini service organization. Contact service organization. Okay, obtain type 1 or type 2 report from service organization. Okay, visit service organization if required. Okay, and last, perform tell other auditor to visit service organization. Okay, if sufficient understanding is not obtained, 4 things will be done by A.T.Academy. He will contact service organization for more information. He will contact Capgemini for more information. First thing. Second, he may use type 1 report, type 2 report. Third, he may visit service organization. And fourth, he may ask some other auditor to visit service organization. Will he perform 4 or it can be any of them? Any of them or 2 or depending on whose choice? Auditor. Baat khatam, that's it. The 402 is done. So my question, my question comes, if I ask you, explain the audit procedure for obtaining, evidence for the entity using service organization. Audit procedure for entity using service organization. How many points you will write? 1, 2, 3, 4. All 4. Which 4? 1, 2, 3 and 4. If I ask you, okay, A.T.Academy went to Ganesh, but he is unable to obtain the sufficient understanding about Ganesh. Okay, about Capgemini from Ganesh. What A.T.Academy will do? The last 4. I hope you are clear, na? No, understood? Understood. So, black and red. So, if I ask you audit procedure, black plus red. Everybody? If I ask you if you are not able to understand sufficient understanding, only black. And Capgemini, this is a point which you need to understand, and one audit procedure, one procedure is given, you can read that procedure. That how he should go with materiality and he should go with all this system. That's it. And report is there. This is something which you need to focus on. SA 402, 3402, 402, inter, it is having somewhat portion. So I doubt about this point coming in examination. But okay, part and parcel of chapter 2. If you remember, chapter 2 is important. This is exactly what portion happens with your chapter 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. These are 11 chapters which we have completed altogether. This is altogether about the standards which need to be taken care of. Okay, tomorrow morning I'll be starting with code of ethics first. Approximately 5 hours approximate may require code for ethics, code of ethics. New syllabus, is there any change from past? Answer is no. Only I told you the guidelines has been included and some threats portion has been included. So code of ethics, okay, sir, is a, you may think, sir, I may be knowing code of ethics and you may try to skip also. It may happen. But my suggestion would be, okay, don't skip it out. Reason simple hai, because now, technically now say dada, code of ethics is an up to marks. And I bet in next, by afternoon 2 o'clock also, you will be getting an added advantage of code of ethics. What your knowledge is with to code of ethics to remember and how it should be applied or something like that, or how to be remembered. Okay, you will be having a difference on that. I can tell you, you can remember a complete code of ethics in hardly 10 minutes to recall all clauses, not more than that. Okay, with all together naming convention. Okay, that's the advantage, I can tell you. So tomorrow when I start, I'll be starting from 9 to 2 o'clock. 4-5 hours will be taking for first half lunch. After lunch, I'll be starting 5:60, 7:10, 7:20. Okay, it's probably 1.5 hour approximately will require for these 3 standards as such. And after that, it has been done. So I'll be completing one small chapter, internal audit or forensic audit or something like that. And based on this, okay, last day, okay, the day after tomorrow, I'll be starting on 8 o'clock or 7:30, whatever, 7:30 or 8 last day. But I'll be taking till 5 o'clock day after tomorrow. Okay. Tomorrow if I start early, chalega? So tomorrow, see, understand why I'm not making a load. The reason is of code of ethics. Let's polish with a fresh mindset. Already exhausted, and I'm already getting completed. Why are you worrying? The only thing is I'm telling you, last day will be dumping. Last day dumping means last day will decide whether we start with 8 or 7:30. अरे मैडम आना 9 बजे, क्या टेंशन ले रही है? आजा 8:30 बजे. Okay, if anybody is interested to come early, you come. I am there. You sit, you study. Any doubt, I am there. Okay. One thing I forgot to mention. Okay, day before yesterday. Okay, to be very precise, you should be aware about brief of Amit Audit. Amit, okay, till CA he learned, he understood, he heard about his father. Okay, everything, whatever Papa told, I did everything. Okay, I am telling you, after CA, I have not listened to anyone till date. If right now, okay, I can give you 10 basic reasons on Sunday when I was admitted, Sunday and Monday, 10 people who told me not to go to Hyderabad. Okay, because I was admitted, every family member was there. Manali, my wife knows, okay, that if I tell Amit anything, we will do whatever he wants. Okay, Papa, Mummy, Vinod Reddy, Prashant Sarda, everybody were in hospital. Everybody told, Amit, this is not a correct way, you should not go. The number of hours you are doing this lecture is not correct. Okay, so, but, okay, so I didn't told anybody which time I am coming. Okay, if you are not aware, ask Uli. Flight, what I did, doctor discharged me. I was not sure whether I am starting on day after tomorrow or something. I told, sir, I will be starting on this day, but I am not sure only. Okay, doctor discharged. I came home. Okay, next day my batch was already over a day before. Next day I went to office. Just as a casual. I am telling, no, I am not going. I am going to office. I went to office. Okay, I just discussed with Huli. I just packed it out. Okay, Fatafat will do this and let's crack this. Okay, 5:30, approximately 4-ish something. I told, okay, book the flight. 4 o'clock I booked the flight of 8 o'clock. Okay, 5 o'clock I went home. I am going. I didn't tell anybody because everybody was in working environment. I went to flight, airport पे कॉल आता है, बोले किधर है भाई? मैं बोला निकल के हैदराबाद. सबने गाली दिया होगा, एवरीबडी गिव, और सबको मालूम है साला सुनेगा ही नहीं आदमी. तो सर इतना बड़ा स्टोरी बताने का क्या ऑब्जेक्टिव? मैं है ना अपने बाप की भी नहीं सुनता. तो टेक्निकली I don't listen to anybody. I do what I want. If you are telling to come early in the morning, if you are telling me you know, when I left my job in 2009, my package of HDC Bank was 28 lakhs. 28 lakhs per annum. Okay, 28 lakhs per annum. To leave 28 lakhs, I joined JK Shah in Mumbai. It was 12 lakhs per annum. Okay, so you imagine how much risk I took, not by amount, with my family. And that time I was not married. My father was a bit concerned that now, while telling for a marriage, मतलब my son was a AVP, now he's becoming a teacher, and he was earning this much, now he's earning 12 lakhs. This was a decision making. मतलब I told him, मतलब there's no way. Okay, every time it's only whatever I do, don't worry about the things. So to be very precise, don't teach your teacher. The teacher no. Okay, बाकी other thing I can't tell here on the mic. Sorry. Okay, nevertheless, jokes apart. Okay, ठीक है भाई, ज़्यादा जोक नहीं है, बस पॉइंट ये है, what I'm telling you, study, please study. See you tomorrow. Let's complete it out. Code of ethics and tomorrow point and day after tomorrow. Okay, take care. Anyway, bye TCF जी. अरे हाँ अरे यस बाय. अरे माँ कसम, अरे चलो रे भाई, चलो गोपी भाई, हरी भाई अटक गए, राजू भाई.